PCE, that's price consumer personal consumption expenditure data, which will come in today, later today India time for October. That's important because the Fed also looks at that data point quite carefully. But Brent is the story we've been talking about, and let's just pull up for you what Biden tweeted out, because Brent action saw oil prices dip after ceasefire was announced between Israel and Lebanon. Brent now at the $72 mark, and this is, of course, following what Joe Biden says. He says, today I have good news to report from the Middle East. We have spoken to the prime ministers of Lebanon and Israel, and of course that deal has been brokered by them. They have accepted the US proposal to end the devastating conflict between Israel and Hezbollah. No clarity yet on when that will happen between Israel and Hamas. But fund flows meanwhile. So remember, you had a tough time for markets to hold on to gains yesterday. And if you look at the numbers, domestic investors are continuing to sell 1,911 crores, while foreign investors are buying 1,158 crores. If there is going to be a convincing return by foreign investors, probably in January when their fresh allocations come in for the year. But meanwhile, not bad in terms of news flow. But that's, of course, the global setup. Sabina, a lot of factors to watch out for today, and I think auto seems to be in focus.
Yes, just a quick mention on Asia. I think another disappointing news flow was what happens in China. So the industrial profits are down 10%. Once again indicating that the stimulus measures that are coming in from the Chinese government aren't helping the Chinese economy or spurt up Chinese sort of earnings in that sense. So China continues to be a weak spot. It wouldn't surprise me that over the couple of next few weeks, you may actually get some more doled out stimulus in that sense. Back home, of course, it was largely on expected lines. After a 3% rally between Friday and Monday, the markets took a break. There were early signs. After a flat to slightly higher start, the markets went into a very tight range of trading and spent most of the day consolidating in that range. It did close sub 24,200. That's been an important level that bulls and bears have both closely watched out for. What happens today now? That's the big question to ask. A quick mention that small cap index did really well in trade yesterday. So while the benchmark was as flat as it could be, it was a small cap index that managed to eke out gains of nearly 1%. IT came back into style. Remember, IT is acting like a defensive sector for the last couple of months, and so is FMCG. FMCG has been the biggest loser in trade all through October and November, but now, of course, seeing some low-level buying emerging on anticipation of a pickup in spending in the second half of the year. IT, of course, usually takes a cue from what happens on Wall Street, so while the rest of the market was quiet and somber, IT stocks did see some buying in trade yesterday. Apart from that, you did see Bank Nifty, and this is what is a standout in that sense, had a pretty okay day for most part of the session, but finally witnessed profit taking towards close and managed to end the day flat as you could. Well, as we go into trade today, the market still remains by the dip on this mini risk-on rally that we've seen over the last few days. Today's and yesterday's levels become very important. So 24,200 is important on the Nifty. Bulls will try to take that out first up in early hours of trade and defend those levels. On the upside, a decisive close about 24,350 could open further upside to levels of 24,500. But the first level to clear for bulls will be 24,200, followed by 24,350. In terms of today's day of trade, expected to be another day of consolidation. Remember, it's the monthly expiry tomorrow, so there will be an increase in volatility as we go into tomorrow's trading day. Bank Nifty will also be very important to support the Nifty. So IT and Bank Nifty may do so, and that would help us to get to levels that we've just talked about. But if you want the Nifty to hit 24,500, you will need the other sectors to equally participate in trade. Bank Nifty has been on good footing. 52,000 is very important in terms of Bank Nifty. The next level of resistance that traders are now tracking and initiating longs with, of course, take profit levels would be 52,500. So that's largely the range you're tracking. Crude is lower, which means in today's day of trade, oil and gas ancillary companies may do well. So on one hand, you've got your OMCs. On the other hand, you've got paint companies, tire companies, wherever crude becomes a significant ancillary, you will see those counters trading positive in the session. You've also got GDP data on Friday, so that's the other important trigger you want to be closely tracking, and that pretty much sums up today's trade setup. So a morning of consolidation, very likely that you may see a marginally positive start, but a good chance that it's going to be very range bound in terms of trade. On the upside, Tamanna, I think 24,350 becomes important. If there's a successful takeout of that level, you could be heading to 24,500. But for now, if that needs to get done, you will need more than IT and bank to participate. It's got to be more broad-based in that sense. But Bank Nifty is looking okay, I think.
Bank Nifty is looking okay. You're absolutely right. IT and banks can't be the only one. Broader markets have, been in I think, medium sort of terrain. But I think autos will fire today.
Yeah, and I think that should be the one sector that will contribute to the market. I mean, I absolutely agree with what you're saying. It's going to be a day when brokerages are constructive on auto. You've got a new listing this morning, which created a lot of excitement. But as we go into it, the grey market premium isn't indicating to a very solid start.
I think that's okay. Frankly, just I'm going to spend a second on NTPC Green before we get to my set of stocks. This sense that you have to have a huge listing and then 50%, and this was data that came out, that 50% of those who get allotment exit on listing day. That's not necessarily the best idea. But anyway, let's talk about the stocks on my list. I'm starting with Mahindra and Mahindra. Why is that? They've launched 2 new electric vehicles in the SUV category, so it's a decisive entry into what is a fairly competitive space. The names of these vehicles I found are very interesting, almost like some of Elon Musk's children. XEV 9E is priced at 21.9 lakh rupees. BE6E is priced at 18.9 lakh rupees. The stock has run up a fair bit, but why am I saying it's a thumbs up? There are 2 or 3 notes, some contrarian view. Nuvama, in any case, has maintained a buy, has set a target of 3,700 because they're saying the new dedicated EV platform scores over peers on features. Major features include large battery, fast charging capabilities, etc. Bookings likely to open from Jan 25th and deliveries from end of Feb 2025. So Jan 2025 is when bookings are likely to open. The initial annual battery EV capacity is at 90,000 units and built-in battery EV volumes at 48,000 units for FY26 estimated. It remains one of their top picks. MK on the other side has retained a reduce with a target price of 2,700. They're saying the EV launch is impressive, though the category adoption is gradual. Strong features and competitive pricing. Prices below current top-selling models in targeted SUV segments. The EV category continues to see slow offtake with low single-digit penetration. But the reason why I think M&M will be a thumbs up today, or maybe because of this news, even if not today or in the first half of the morning, is because you, in the passenger vehicle segment, you had one player and one EV which was dominating. If you have another player well priced with the right features, will it also grow the market is the question. Like I said, auto in focus today, Ola Electric. Thumbs up is what we're giving it. They've launched India's cheapest electric scooter aimed at the gig economy. Now, this is a stock which has had a tough time. They've had a tough time overall. Yesterday, the stock ran up about 3 rupees 84 paise, so about 6% up. But you might see a further upside today because of the kind of scooters that they have launched. They've also already hinted at their battery launch very quickly, and they have a gigafactory there, which is in the making. So you might just see an upside for Ola Electric after a bit of a downturn. And let's talk a bit about on Hyundai as well. So I'm adding this, that's why I'm saying auto in focus. JPMorgan has initiated coverage on Hyundai Motor India with an overweight rating for 2,200 rupees. That's a 17% upside. Again, an IPO which was not living up to its expectations at all. Their premium portfolio market share gains and operational efficiencies are key drivers, according to JPMorgan. 68% of their portfolio comprises of the highly profitable SUV segment. Market share is expected to increase from 14% in FY25 to 15% in FY27. and the FY24 EBIT per vehicle is at 89,000 rupees. That's a 43% premium compared to peers. That means income per vehicle is 89,000 rupees, which is much higher than their peers, which is why JPMorgan likes Hyundai or Hyundai, however you want to say it. But just one more stock I'll talk about, and we are all main board today, is Infosys. And this is a story actually that we will have more details of, broken by our very own Haripriya, our Bengaluru reporter. It's a thumbs up for Infosys because they've issued 90% variable pay for Q2 FY25. The bonus rollout for junior and mid-level employees, variable pay for Q2 is higher than 80% provided in Q1. The bonus was issued on November 26. Now, why is this important? Because if the market leader in that sense, one of the big three, is paying out their variable component, that augurs well for the deal pipeline that they see. And anyway, I think IT is going to be in focus once again. Infosys, LTI, Mindtree, because they had an investor day. So these are some of the stocks that you should watch out for.
I'll add a few more, Tamana, to your list of counters that we are tracking. So, of course, IT and auto become important. Bank Nifty is always important in terms of contribution to the index. 24,350, if you've got to do that, you've got to see some sort of positive traction on the sectors that we just mentioned. In terms of other stocks, this is one of the last few companies that are reporting earnings. Siemens reported numbers, and those numbers were actually good, so this counter could see an up move in today's day of trade. And of course, with capital goods, infrastructure seeing a little bit of an uptake and risk on trade for the last few days, it could be a decent morning in that sense. Revenues were up 11.5% for Siemens. EBITDA was up 34%. Margins have also improved substantially now. They've come in at 14.5% versus 12%, and net profit has seen a significant jump of 45% to come in at 831 crores versus 572 crores. Now, I know Siemens is an expensive stock when compared to its, but actually the whole of the sector really remains expensive, with the likes of ABB as well trading at a massive premium. So no different for Siemens, where the numbers are pretty good and in line with what the street was expecting. The board has also approved an additional investment of 100 odd crores in power transformers factory. So that's the other news flow. And of course, as we get closer to market opening, the brokerage notes will roll in on what they make of Siemens earnings. Well, NTPC, we've already talked about it, of how it's all eyes on the NTPC green IPO that will list shortly. The grey market premium is indicating to a flat start, but what is important to note is last evening, which is a day ahead of NTPC Green making its debut on the exchanges, they've incorporated Mahagenco NTPC Green Energy, which is a 50-50 joint venture between NTPC Green and the Maharashtra government for development of renewable energy projects. Now, what is this going to do? This JV will be engaged in business of developing, operating and maintaining renewable energy parks in Maharashtra, and they will load parks for development of these of renewable energy. Remember, India has the 4th largest installed capacity in renewable energy in the world, and of course, from what we understand, Maharashtra is gearing up to play a pivot role in India's energy transition, and this comes in hours before the company actually lists on the exchanges. So watch out for NTPC Green, and NTPC being the parent company of its subsidiary listing. Well, the other one that I want to highlight, because we talked about this for the last few days, is GE Vernova. The promoter did exit 5% stake in the company yesterday. They had indicated that they would or may look at exercising the green shoe option. From what we understand, they will be exercising it this morning and selling an additional stake of 2.91%. The stock had its lower circuit on back of that yesterday, but remember, this additional 2.91% continues to sell at a discount of 15.50, which means the stock on the get-go this morning could see a gap down. So those are the three that I have. Siemens are a good set of earnings. NTPC, of course, is good news for the new listing company and the parent company as well. And it's, of course, a promoter selling stake in GE Vernova that will keep the tab in terms of gains and, of course, see a gap down on that stock, Tamanna.
Yeah, so those are some of the stocks that we have to talk about. But let's talk about Vedanta for a minute. It's set to invest $2 billion to build a copper processing facility in Saudi Arabia, where it will build a new smelter and refinery. Mahika is joining us with more details.
So its unit, Vedanta Corp International, has actually signed a pact with the Saudi Arabia's Ministry of Investment and Mineral Resources, and the company plans to set up a greenfield copper smelter and refinery plant of 400 kilotons per annum, and as well as a 300 kiloton per annum capacity copper rod project. Now, these projects will be established in Ras Al Khair industrial city of Saudi Arabia and expected to contribute $19 billion to Saudi's national GDP. Now, initial operations in Saudi Arabia will start with a 125 kiloton per annum copper rod mill project, and Vedanta will invest around $30 million for this project itself, and it has all the necessary regulatory approvals in place. The company has the land, the tech, and the project site in place, and commercial production of this project is expected to start by Q4 of FY26. Key questions that we need to also, a key point we need to talk about is Vedanta's India copper operations, which has been, seeing halts and headwinds since 2018. They have a copper smelter and refinery plant in Tuticorin in Tamil Nadu, which is currently non-operational and was not operational for the entire of FY24. And as of FY24's annual report, the company stated that they are evaluating legal remedies to restart the plant. But just a week ago, the Supreme Court actually denied the company's plea to open the plant. What's interesting is the capacity of the Tuticorin smelter capacity, which is at 400 kilotons per annum, which is the same as the new proposed plant. So the key questions that we're asking is what happens to the India operational, non-operational plant right now, and if the company does impair of the entire asset, what kind of financial implications could we see for the company?
Thank you for that. So that's Vedanta. This is a big one with their very ambitious plans in Saudi Arabia. It's a market that a lot are betting on, but with that sort of allocation and investments, this will be one stock that you want to be tracking in trade today. Well, you have a few more, and I'll just quickly mention two smaller companies that, in my opinion, will be in focus. One is Zaggle Prepaid. The company has entered into an agreement now with MasterCard, where MasterCard will recommend Zaggle's SaaS platform payment and card products to its corporate customers. Remember, the last year, or the most part of this year, really belonged to Zaggle striking deals with a number of partners. So they're very big on business development and co-selling of their prepaid cards. And of course, we don't understand their kind of revenue contribution on this one, but we will connect with the management at some stage to get a better understanding of Zaggle. The stock usually reacts well to news flow such as this. Another smaller one is Agarwal Industrial Corporation. It's a small cap company, but I just thought it's worth a mention because it's again an order win. The stock was up 2.5% on a day like yesterday when the markets were lower, but that's because they bagged a significant order for the size of it, the company, to the tune of 77 crores from BPCL and IOC. So watch out for all of these. Samana, any more that you'd like to add to your list of counters that we are tracking?
No, I think we'll go to more as we get along, but focus now on, I think Mahindra & Mahindra, they launched the XEV9e and BE6e. It's the latest electric SUV in the company's portfolio, and it starts at a price of nearly 22 lakh rupees, while the BE6e is priced at 18.9 lakh rupees. Of course, this is ex-showroom. My colleague Tushar, who was in Chennai for the event, brings us this report.
Mahindra has thrown down a gauntlet of sorts at India's EV space even before Maruti Suzuki and Hyundai could unveil their rival offerings in the e-Vitara as well as the Creta EV. What you see behind me is the XEV9e, and to the left is the BE6e, the two pure electric SUVs that Mahindra has launched today in Chennai. Now, these are essentially built on the in-house InGlow platform, which was developed in-house. The benefit of this platform is that this gives the car a flat bed to place the batteries onto. The lack of central spine as far as the transmission channel is concerned allows for more space. So the car has the best-in-class trunk as well as front space. Now let's break this conversation into different parts. First, let's talk about the most important thing, that's the battery and the range. The battery rests on a flat bed, which essentially means that that more battery can be packed. The two battery pack options, 79 kilowatt hours and 59 kilowatt hours. The 79 kilowatt hour battery is enough to give both the cars a real world range of more than 500 kilometers, which essentially means you're charging the car only once a week. And when you do charge the cars, they charge from about 20% to 80% in just 20 minutes. The cars are rated at 210 bhp and 380 newton meters of torque. Let's come to the design. Striking does not cut it, but the slashes on the car may just do that. The two cars essentially take the SUV, the coupe SUV concept forward. We have seen this in the Curve EV that was launched recently by Tata Motors. The BE6 is smaller, the XEV9E is larger, but both are based on the Inglo platform, which shows how modular this particular platform is. Coming to the safety angle, ADAS, electronic doodads, as well as 7 airbags are standard on the car, and Mahindra believes and is confident that the cars will score a 5-star in the global NCAP ratings. Coming to the pricing, that's actually the cherry on top of the cake. The cars have been launched at the BE6E has been launched at 18.91 lakh rupees, and the larger XEV9E has been launched at 21.9 lakh rupees. The full price list will be unveiled at the Bharat Mobility Expo in January next year. So essentially, these cars are a challenge to the competition, incoming competition as well as existing. So it's clearly a space to watch out for.
All right, so Mahindra in focus, NTPC Green in focus. Now, it's LIC who, in a sense, is the biggest player in NTPC Green and the biggest participant in that IPO. It's set to list on the bourses today. Samina, tell us what should we watch out for?
A quiet listing, Tamanna. So while the listing on NTPC Green is not going to be very exciting, don't forget that most brokerages that we've spoken to that have, of course, covered this counter have a strategic long-term view on the stock. Now, let's take you through the details of this listing, and if you don't already know, we'll tell you what NTPC Green does and why it should be part of your portfolio in more ways than one. Well, just a quick check. It was well subscribed, so it's actually an IPO that will be listing today. It's a big one. So this is the third largest IPO in this calendar year at about 10,000 odd crores. The price band was in the range of 102 to 108 rupees, and it was very well subscribed on the last day. But like Tamanna said, LIC did, of course, do quite a bit of allocation to this listing. 2.5 times is what the listing subscription details are. What does this IPO do, right? So it's a fresh issue of 10,000 odd crores that will be invested right into the business, as, of course, NTPC Green plays a significant role in India's renewable energy transition. Expected listing gains is anywhere in the range of 1 to 3%. Now, the question to ask is whether if you get a flat start, should you subscribe to NTPC Green? And hence, we'll tell you what the company does. The funds, remember, like I said, will be utilized and the wholly owned subsidiary, which is NTPC Renewable Energy Limited. Now, this one is the largest PSU company in the renewable space. They account for 17% of India's total installed capacity. India is the 4th largest installed capacity in renewable energy in the world, which really means that NTPC Green becomes a very important player if India needs to achieve its dreams and aspirations of doubling its installed capacity in renewable energy. Their current capacity starts at 3,220 megawatts of solar and 100 megawatts of wind projects spread across 6 different states in the country. Revenues have been stable. If you look at their financials, they've actually done quite well. But let me take you through why brokerages like this. One, it's one of the few niche players in the story of renewable energy transition. They're also a preferred partner for PSUs in the renewable energy space, which is obvious, right? This is the only company from the government's stable that is playing the renewable energy theme. So what we are saying is that they have struck 25 long-term power purchase agreements with government PSUs. The growth prospects also look extremely strong. They have very large installed capacity, like I said, 13,000 out of which is contracted projects, and there's about 9,175 megawatts in terms of pipeline. So the future as well looks good. They're also looking to expand aggressively in the near to medium term through MOUs and joint ventures with PSU and private players. In fact, on that note, quick mention, I already mentioned this in Stocks and News, but they have struck a 50-50 joint venture with the Maharashtra Power Generation authorities in the state, which means that they will develop, build and operate renewable projects in the state of Maharashtra. Maharashtra as well plays a very important role in India's transition plans. It all sort of comes together in terms of the puzzle of the renewable transition plan. Good set of numbers. Revenues have grown over 40% CAGR over FY22 and FY24. Margins also look healthy. Profitability also largely volatile, but not too disappointing in that sense. couple of factors that may turn out to mean that the counter may not see significant gains in the near term is that they have significant revenues that are receivable or outstanding from the government. So that's what you want to keep in mind. The debt on their books is also fairly large. They've reported a debt of 18,000 crores. Now, they've not mentioned in this fundraise plan whether they would use this money to retire debt, but you want to keep that on top of it as well. And this is expensive. There are not too many players in the space, Adani Green being one of them, but this is not a cheap company by a mile. So if you want to look at valuations, you want to look at trajectory. Trajectory looks good. Valuations are expensive. And of course, more importantly, what brokerages do think that this is a good bet if you want to invest in India or bet on this theme that we've been talking about for the last few years. One way of doing it is by subscribing to NTPC Green. But for now, a muted listing in terms of what we should be expecting in an hour. There is positive news flow, like I said, with their joint venture with the Maharashtra state. But apart from that, I think buy it. You could look at buying it if you get a flat start this morning and hold on to it from a more medium to long-term outlook.
All right, thank you for that, Samina. Meanwhile, big story that we're breaking this morning is a statement from the Adani Group very clearly saying that there are no bribery charges against Gautam Adani, Sagar Adani and Vineet Jain in the DOJ indictment. Now, this is a very important clarification which is coming in on this. Adani directors have not been charged under US Foreign Corrupt Practices Act, that's the FCPA. Only Azure and CDPW officials have been charged with bribery in the US DOJ indictment. Now, this is important, and Agam is joining us for more on this because, Agam, the question really is about whether everything that was reported was a bit misrepresented. And, we'll come to Agam in just a second. But look at, some of the lines which are coming in. And that's important this morning because it's about a complete refutal which is coming in from Adani Green Energy actually on this. They're saying the Adani directors have not been charged under the US FCPA, but it is employees of Azure and CDPW officials that have actually come in. So that's the big story that is coming in right now. All right, stand by for more details on this as we keep covering it and going along. We're staying on this story as we come with more details. But here is what we know as of now. And this is actually a circular which has come in this morning. Let me pull that up for you. On what really is the clarification coming in. And this is important because in this entire row, the reportage has focused on personal bribery charges against Gautam Adani and Sagar Adani. Sajid is now joining us for more details. And Sajid, that doesn't seem to be the case.
That's right. If you look at the deep, if you go into the indictment completely, it basically clearly, the Adani Group is saying that there's no bribery charges which has been imposed on either Gautam Adani, Sagar Adani and Vineet Jain, who were the directors of Adani Green Energy. It goes on to say that there are 5 counts which has been of indictment. The first count was with respect to bribery, which is under the FCPA, and that only applies to officials of Azure Energy and CDPQ, which is a Canadian investor and was one of the largest investor in Azure. And that FCPA is the basic basis which was generalized for all the people who were mentioned in the indictment. And so Adani Green is coming out and saying that there are only 3 counts of indictment which are there, which basically relates to, if I can read it out, is alleged security fraud conspiracy, alleged wire fraud conspiracy and alleged securities fraud. And these are all can be and there could be penalties for this kind of for these allegations which have been put in. And as part of the Adani Green disclosure, they're saying that while there is no penalty mentioned as of now, but it's something which has to be discussed with the DOJ and SEC, because both of them are investigating on this.
So Sajid, fair assumption for us to make that it's Adani Group companies, Adani Green, are now in the green?
It is it is the entire allegation was based on
False.
bribery.
Yeah.
The bribery charges are not been imposed on any of the Adani
So
Group
clearly
directors.
there were no basis.
No
to
basis.
This,
So all the hue and cry about various projects and everything, where there were reports about many people reviewing all this, doesn't come into impact now. Doesn't come into effect now, because it's not on bribery charges. It's on securities fraud, alleged securities fraud conspiracy.
And this is a bigger problem, because what happened with that is you saw shareholder wealth getting destroyed when the stocks corrected.
The group lost nearly $55 billion in market cap.
$55 billion, and that is on basis of false allegations.
Yes. It's also important to understand that if you read the 54-page indictment, the entire investigation was based on the charges filed against Azure. It started off from Azure and then went on to CDPQ, and then as part of that, it went to the third party, which was as per the records they received, some of the directors. But the charges of bribery as such has not been filed against any of the Adani
companies. It just stays at Azure and CDPQ, which is the Canadian investor.
And was the largest investor in Azure.
And the largest investor. But we have Vineet Bulinchkar, HOR of Ventura Securities, now joining in on the phone. Vineet, have you heard the latest news? Adani Group companies have been freed of any of those bribery allegations that were made against them a few days ago. More importantly, the bribery charges as per FCPA only apply to officials of Azure and investors in Azure, which is CDPA, which is the largest Canadian investor. What are your early thoughts?
So I believe that, they stand exonerated. So what is the charges against them? I think there are no charges against them. And I think that the stocks will now start moving up again. But more important is the issue that, the news has been carrying imperfect information which is impacting shareholders in India. And there are severe losses faced by shareholders in India. So I think one should just go out and buy these stocks. And I think there will be a tearing bull market considering these stocks today.
Saying go out and buy these stocks, there will be a roaring bull market on them. Standard disclaimers for anyone watching this, but we are reporting the news as we see it. Vineet, now what is important is to understand then what exactly are the charges. Viewers are going to be looking at this and they're going to be thinking that the statement right now is that Gautam Adani, Sagar Adani, Vineet Jain have not been charged with any violations under FCPA. That's very important, because FCPA is the clear charge. If not, then what is this whole thing about that we have been reading, seeing and hearing for the last 3 or 4 days?
Exactly. So one needs to really read the fine print to understand what is happening. But, when you think about it, then there are no charges against the Adani Group at all. So bribery was a very serious allegation, and that is taken very seriously by the US markets and by the SEC and DOJ. Now, with those charges not being implicated against them or they're not charged with that, I think virtually there is no case against them. If you think about it, of course we need to read the fine print to understand then what are the charges that are leveled against them. But when you drop these charges, then the entire story just fizzles out. And then I think all these stocks will make a comeback again.
We don't know about what the stocks will do. We'll of course wait and watch. That is Vineet Bulinchkar's own view. Vineet, just stay on with us. I want to get more details from Vishwanath Nair, my colleague as well, and just run viewers quickly through then what the allegations are. So between 2020 and 2024, senior executives of Adani Green, Azure Power and CDPQ, I don't know if I'm pronouncing that correctly, but it's a Canadian institutional investor, Caisse des Dépôts du Quebec, I'm not going to try the French, they have allegedly participated in a scheme of bribery. Now, during the same period, senior executives conspired to misrepresent the anti-bribery practices and conceal this from investors. In addition, senior executives of Azure and CDPQ conspired to obstruct the US government's investigation into the scheme. So then the question is, that what really is the charge? Is it a direct bribery charge or not? It doesn't seem to be the case. Vishwanath Nair, who's been tracking the story closely, is adding more. Yes, Vishy?
Yes, Tamanna, so you're right. The bribery charges don't seem to be, against Gautam Adani, Sagar Adani, or Vineet Jain. In this case specifically, there are three charges which are part of the DOJ document, which is securities fraud conspiracy, wire fraud conspiracy, and security fraud. But having said that, there have been no specific bribery charges which have been framed against these three people. There are also no violations under FCPA specifically against these three people. So even in that light, these three charges don't seem to stand. Is the sort of approach that is being taken at this point in time. We don't know what exactly is the role of these three names in this entire indictment document. All we know is that their names appear in this document, but apart from that, there has been no clear indication of the U.S. Department of Justice framing any charges or going directly against Gautam Adani, Sagar Adani, or Vineet Jain, as far as the reading of the document goes, Tamanna.
Sanjay Asher, let's get a legal voice on this. Sanjay Asher, Senior Partner at Crawford Bailey, is joining us now. Sanjay, great speaking with you this morning. Thank you so much for joining us. Just getting us a quick perspective really on what's happening here. And as I'm looking through the documents, what becomes clear is then the question I asked, what really are the charges then? The charges are alleged security fraud conspiracy, alleged wire fraud conspiracy, and alleged securities fraud, but not under FCPA. What is the implication of this?
So therefore, to my mind, if it is only these three charges, which is securities fraud conspiracy, wire fraud conspiracy, and securities fraud, all three are allegations. So it is the impact of that is much, much lesser than the impact of FCPA. So from a legal perspective, the charges, these three charges have lesser impact than the charges of FCPA.
So you said these are much lower than the charges of FCPA. So now let me ask you this in another way and then quantify or give us some idea, Mr. Sanjay Asher, that an FCPA charge is at the end of the day a corruption and bribery charge. That is not there as per the DOJ documents. Then the question is, why has it been presented in this way?
I don't know why it has been presented in the way that there were FCPA charges. But now, as it comes out that there is this charge in relation to the securities fraud and the wire fraud conspiracy and the securities fraud, in which event DOJ may initiate action, at the same time SEC may initiate action. So therefore, the point being that FCPA charges have gone. It is only the securities fraud charges are there, which would have much less penalty. And it may be faster to have this under the settlement scheme or under the compounding of the offences, a resolution for the Adani Group.
So, with us, H.P. Ranina, lawyer, Supreme Court, now joining in. Good morning, sir. Thank you for talking to us this morning. Big news development in that sense. We've just understood and believed that there are no bribery charges from the FCPA on the Adani Group members, and it seems like the charges are and apply only to officials of Azure Energy and the investor in Azure Energy, which is CDPQ. What does this mean?
Well, this means that obviously the earlier reports were incorrect, and it also means that the Adani Group members like Gautam Adani and his nephew are not involved in any foreign corrupt practices. And therefore, this is good news for the Adani Group. And obviously, even the other charges have to be still proved. They are simply allegations. And Adani Group has certainly said that they are not involved and they feel that these are wrongly applied to them. So I think the matter should now be more clear, because obviously you have to prove something. In American courts, everything has to be proved beyond a reasonable doubt. And unless there are actual facts available, you can't prove these charges. So these are only charges which have been made, and I don't think there's much to worry about at this point of time, especially when Gautam Adani and his nephew are not involved in these charges at all.
Tamanna here as well. The point
Tamanna,
is,
good morning.
yeah, good morning. Great to speak with you, sir, as always. Just trying to understand that these are minutiae of a legal document. What the Department of Justice and the SEC have said, these are legal documents. They are at various processes or stages in the legal journey, and there will be a legal counter, etc. Meanwhile, the damage that has been done, the picking up of these facts, and now the rebuttal clearly coming and saying that there were no corruption and bribery charges personally on the top 3 members of Adani Green in this case. So what about the impact of that?
Well, the impact is that all this political storm which has been brewing in India has no meaning, because everybody's after Mr. Gautam Adani and the top members of the family. And it only shows that the top members of the family are totally clean, that there's nothing against them. So it certainly has a tremendous impact, especially in India, where, you know, these political innuendos are being leveled against the top people for whatever reason, as you understand. So that is a good sign that the top people are not involved, and even as far as the lower officials are concerned, we still have to see what exactly the charges are. As I said, you have to prove beyond reasonable doubt that these charges are valid. So let us see what the charges are, and once the trial begins, if at all it begins, then obviously everything will come out, the truth will come out in the public domain.
On this one, while like we discussed with Mr. Ranina, this is part of the legal journey. But like we said, the damage has been done. Reputation has been tarnished to some extent, and shareholders have lost significant wealth. There should be repercussions to this, right? Or what next?
Well, repercussions are always there if somebody wants to take action, but then the question is who's going to take action against the DOJ in America. So obviously, you know, these things happen. One has to accept it when you are a publicly listed company. And of course, wealth has disappeared, but wealth can also once be recreated once the charges are proved to be, you know, without any foundation. So I don't think many people, of course, those who have suffered, if they want, they can take some action against. But I don't think anybody will have the ability to do that, because to fight in an American court is extremely expensive, and it may not be worth it. So wealth has disappeared, but wealth will once again be recreated once the charges are found to be unfounded.
Mr. Ranina, Sajit here. Just to get a clarification, Adani Green has disclosed to the stock exchanges that that the complainant has prayed for an order directing the defendant to pay civil monetary penalties. So then it actually only is limited to the civil monetary penalties for alleged security fraud violation as alleged in the indictment, right?
Yeah. So civil penalties, of course, if you can compound them or you can come to some settlement. But even then, the question is to impose those civil penalties, you have to prove the charges. And unless the charges are proved, the penalties cannot be levied in a court of law. Of course, they can also go in appeal to a higher court. So appellate procedures are also open to all these people who have been asked to pay a penalty. But I don't think any penalties have been crystallized so far. And once they're crystallized, then they are appealable. And if you want, you can settle them. So both options are available.
And the settlement process is something similar to what we have in India, right? For a SEBI consent process where you settle without, consenting to any.
Yes, you can settle without admitting that you have committed any offence. So that can be also done. That is possible, definitely.
Okay, thank you so much, Sanjay Asher, HP Ranina, and Vineet Bolinjkar for joining us this morning as we're capturing that story. Agam now standing by with just an idea of the impact that we have seen on the stocks, and how very clearly now there has been misleading representation of what the facts of this DOJ case are.
So, the incorrect reporting of this particular issue has already led to a lot in terms of challenges with respect to the group. So, firstly, the whole group as a whole has lost out as much as $54 billion in terms of market capitalization. We know the kind of correction that we've seen in Adani Enterprises and Adani Ports, which are in fact a part of the Nifty 50. And even besides that, Adani Green, Adani Total, a lot of them have taken a big knock. More importantly, do remember in the latest, we've also had Moody's as well as several other rating agencies downgrade the company with the outlook turning to negative. This, of course, is also a significant reputational loss, but let's not forget the most important one. Adani Green, which was set to issue $600 million worth of bonds, they were withdrawn on account of this particular allegation. And this is despite the fact that the Adani Green has an order book of $2 billion. And the group had withdrawn these bonds so as to make sure that the investors do not make a loss on a mark-to-market basis. But that opportunity has also been missed, and we must remember this is the second time it's happened that Adani group companies have sought to raise funds, and then we've had these incorrect allegations come through. In terms of your partnerships too, while GQG partners have maintained that they're unworried about their positions in the Adani Group companies, they have also said, well, the group partners have seen a depreciation in their own holding in Adani Group companies, and it is also suggested that Jefferies, which in fact has been supporting the Adani Group company, but these allegations and these incorrect reportings have caused a little bit of concern with respect to their view on the group as well. So there has not just been monetary damage, but also reputational damage, which where the group will seek some sort of correction here.
Agam, in fact, penalized, right? Because this is so unfair in so many ways. On one hand, the reputation has been tarnished. On the other hand, it's not just the group, but minority shareholders as well have lost significant wealth. But the good news is the stocks become extremely compelling. They come at a huge discount after the recent fall. And like Vineet Bulinchkar said, go out and buy the counters. So it is a blanket buy coming in on Adani Group stocks post the development of the latest news that we are getting in on the stock. Well, a quick detour now. Of course, we will talk about this in a little more detail when the markets open up for trade and we see the reaction of this on early minutes of trade. But it's going to be a market which would be rather boring. It could be a day of consolidation. A small positive bias is what's likely. It continues to be a buy the dip on this mini risk-on rally that we're currently witnessing. Avni Bhatt joins in from JM Financial with her top trades this morning. Avni, very quickly, you do have a bull call spread on BEL. You want to tell us what this is, because this is one space that has been euphoric post the outcome of the Maharashtra state elections. Modi trade seems to be back in style.
Good morning, Vimna. So yes, Bharat Electronics has seen a very nice rounding bottom formation on daily charts, and short covering is seen in futures. Good rollovers, around 59% already done, and we still have 2 days to go. December series 320 call is picking up traction, and for the November series, highest OI is at 300. So it may probably for next 2 days, it may not cross this level immediately. But the overall outlook is positive, and after say probably 3 or 4 days, it may start, it may cross 300 level and resume an uptrend up to around 320. So that's why we are going for a bull call spread and not a vanilla spread. I recommend buying December 300 call, closed at around 11 yesterday, and selling off 315 call at 5.5. So the net premium outflow is around 5.5. We can keep a stop loss of 3 and a target of around 10.5 to 11. So in monetary terms, it would turn out to be, if at all, the stop loss is hit, then the risk is about 7,000 rupees. While the profit potential is around 14,000 plus levels.
What about Oberoi Realty, Avni? You've got a strategy on that one too.
Yes, so the entire realty space has seen very good rollovers. In fact, it is one of the top sectors where the rollovers have been pretty good. Futures have witnessed a massive short covering of around 14%. And in this entire corrective phase since October, the stock has shown a lot of resilience and strength. It has maintained a close above 50-day exponential moving average all throughout. And on Monday, we've seen a good strong recovery based on volumes also and a positive RSI crossover. So it has moved above the congestion zone of 1965 to 1970, and follow-up buying was also seen yesterday. So rollovers are around 61%. So I feel the stock is ripe to test a new all-time high in December series. And since the view is extremely positive and a quick move, we're going for a plain vanilla call. That is December 2040 call. It closed at around 45, between 45 to 47 yesterday. Now, the strike selection is purely based on the liquidity that is there currently for the December options. So we are going for 2040 call. The target on the stock is around 2150 for the December month. The target on the option price would be 90 rupees, and stop loss can be kept at 26.
Okay, thank you so much, Avni, for joining us. Those are the top F&O bets this morning, and Oberoi Realty in focus as well. But let's get to the big business of the day. Kush Bora joining us in studio, Mayuresh Joshi also with us. And it's going to be an exciting morning, perhaps. Kush, a little concerned or a little careful before expiry on Thursday. But then what would be the big call on the Nifty? Are you seeing another rebound, at least in the first half of trade?
First up, a very good morning. And as far as the call goes, it's fairly easy. Stay long. Or if you don't have a long position, go long. That's the kind of setup that we're seeing. Now, as you rightly mentioned, because of the expiry, there could be volatility, that could come to play. But as long as Nifty holds that 24,000, 23,950 kind of zone from the near-term perspective, I think we're in good stead. 2 good days of, an upswing, then a day of consolidation. I think we'll take all of that. Plus, the PCR right now is also close to 1, which means there is plenty of room on the upside as well. Now, what are the levels to look at? 24,350 on the upside. Once that is taken on to 24,500 as well. Maybe expiry could perhaps play some havoc and some volatility, but on the whole, the setup looks very encouraging right now. So on the Nifty, I think if you don't have a long position, you could consider going long. If you do have, then you could perhaps move your stop losses to 2390, 24,000 kind of levels.
Chandan Taparia also joining us today, as is Mayuresh Joshi. Chandan, let's start with your opening call on the indices.
Good morning. Thanks for having me. So we have seen a nice rebound in last 3-4 trading session. Earlier, Nifty had corrected by around 3,000 points, and 38.2% retracement come at 24,444. That is the key level for market as of now. Above that, again, the bulls will be back on the track. But before that, till it doesn't surpass, we need to play the broader range in between 23,950 to 24,444. For intraday point of view, the gap which created 2 days back is an important level. So I'll go with buy on decline stance after the recent decline in the market, with the view that after the selling streak of last couple of weeks, FIs are back to some buying interest, and Bank Nifty started to hold the key support zone. So I'll keeping the support at 23,950 to play the upside move towards 24,444 in the Nifty index. Talking about Bank Nifty index, the good part is that from last almost 24 weeks, it has been respecting well a key support of 49,650, and this time also it turned from the same zone. It has been moving in between 50,000 to 52,500 zone from last almost 36 trading session, and now it's trading at the upper band of the trading range. So a small follow-up is required, and a decisive hold above 51,750 could see an attempt towards 52,500 to 53,000. So more gung-ho on the Bank Nifty, with the view that this breakout could cheer on higher side, which can take the index to 24,444 as well. So keep these levels in mind and expecting some sort of buy on decline stance in the market as of now.
Chandana, buy the dip in this mini risk on rally. 24,450 is the upper band, which is what the bulls will try to take out. And of course, the takeout of that level could take the Nifty all the way up to 24,800. But Mayuresh as well joins in with the fundamental view on the markets. Mayuresh, it seems like everything has changed pretty quickly. We kept talking about how this was a sell the rally, valuations are a worry, earnings are disappointing, FIs are selling, Trump is back. I mean, the list of reasons of why India was on the sell side were extensive. What we are seeing right now is a return of some strength. I am forced to believe this is more of a technical recovery as opposed to a change in fundamentals. Do you agree with me, or do you feel like the correction for now is behind us? And if you were lucky to buy last week, good for you. If not, you should be looking at accumulating right now.
Morning, Samina. Morning, Kush. Morning, Chandan. So I think all the headwinds that you probably put out, I think they are still valid in the current context. And I think the base factor for the market becomes earnings. And earnings have been soft, except a few sectors and a few stocks within those sectors. Having said that, do we see earnings recover in Q3 or Q4? Seems to be unlikely, because the kind of consumption trends, specifically urban consumption in certain pockets, seems to be still under the pump. And that means that the overall earnings cycle might show some elements of recovery as we head into Q4. Obviously, I think with better monsoons this time around, rural recovery, rural consumption, rural discretionary spending has started coming back, as seen from the primary data points. Having said that, from a market positioning perspective, our own sense is that the markets might just consolidate around the current levels. So obviously looking out for cues, specifically on the geopolitical front, and what probably happens in terms of our own context, in terms of how Q3 earnings will play out. Having said that, Samina, again, I think certain pockets within the market in Q2, as Chandan just mentioned, the BFSI, certain NBFC stocks have delivered strong set of numbers, and going by management commentaries, it seems that the sustainability in their earnings might continue over the next few quarters. Similarly, I think a few of the agrochemical companies have posted very good set of numbers. And again, with better monsoons around, the expectations in terms of both volume and value growth might actually sustain for these companies. A few of the infra stocks, decent numbers again, in my opinion. And there again, I think there are certain pockets of opportunities that do exist. And pharma as a pocket, surprisingly, is probably showing signs of strength as we speak. Therefore, my own sense is that there are pockets of strength within these markets itself, but the markets will largely consolidate.
Right. Gentlemen, stay with us. We're gearing up for trade. It looks like it's going to be a slightly positive start, but like Murish said, while we might not be completely out of the woods, there are early signs of recovery that's currently underway. Technically as well, not looking too bad. We'll take a break. We'll come back, track reopen, and continue our conversation and get stock ideas for you as well this morning.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Laurus Labs on any small declines up to 510, keep a stop loss of 500, and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360,
Welcome back. You're watching India Market Open. A quick check on how pre-open trade is looking. It should be a positive start, at least mildly positive is what we're expecting in early minutes of trade. There will be lots of stocks that will be in focus. There you go, as mild can get. 24,200 is being seen in the early minutes of pre-open trade. The Adani stocks will be your big gainers to watch out for. NTPC could be one more that you want to track in the session this morning. And of course, tech and banks become important again, or once again in today's trading session. Chandan, we're going into market open. You've already given us your view on the Nifty and Bank Nifty. Very quickly, your top trading ideas this morning. It is expiry tomorrow, so I'm assuming the markets will get into quite a bit of volatility. So any of your trades for December series would be great.
Yeah, so first I'll focus on the Nifty IT, which is doing well, has been outperforming the broader market. And I believe that most of the IT name will be in focus with fresh leg of rally. So Wipro will be my first preferred idea here. The stock has been making high top, high bottom on the daily and the weekly scale, and all set for a fresh multiple months breakout with its rounding formations. So Wipro can be first trade to buy with support of 577 for an upside target towards 620. Second idea that will be buy on granules. nice pattern, has been consolidating from almost 50 trading session, and now it is all set for a decisive breakout above 600 marks. Already has been making high rise ad lows from last 5 days and taken support at the lower band of the trading range near 525 marks. So one can buy with support of 580, and Granules has potential to spike the momentum towards 625 to 640 zone.
Kush, what about you? What are your top trades this morning?
On the long side, first I've got Jyoti CNC. Now the stock's actually done rather well for itself in terms of the recovery that we've seen from the low levels, of about 1,000. Now, beyond the level of 1280, the stock could see, a bigger breakout. But up until then, also there is positive momentum, and as I said, the delivery volumes are also pretty decent. So 1275, 1315 are your targets from the near-term perspective. 1195 is where you place that stop loss. On the FNO side, I've got Syngene. Here too, we've seen very interesting moves on the long side. The rollover and the long build-up also is quite interesting on this one. So if someone wants to play, as you said, for the December series, then Syngene could be the stock that you want to look into. 930, 950 are your targets. 890 is where you place that stop loss.
Okay, one more story, big story we're focusing on, and IT will be in focus again. Just look at what is happening in pre-open before we get to that story with my colleague Haripriya. Cochin Shipyard in focus this morning, so the defense play continues and very much continues, 4% up. Vodafone Tata Tele moving again today, despite Vodafone putting out a notice yesterday saying that we have not got any details on bank guarantee. But the stock about 3% up in pre-open. We told you that M&M should be in focus. It's 2% up in pre-open. Macrotech once again firing. Angel One has got a mutual fund license, and they are going to start with passive funds. That announcement coming in today. HPCL, BPCL also doing well, and that's of course the crude impact. So crude impact is something that you could see as a momentary play pre-open. But let's look at Wipro and what Wipro is doing. Wipro has bagged a deal worth $100 million from Morelli. Haripriya is joining us with exclusive details. Yes, Haripriya.
That's right. Wipro has won a big deal. It's $100 million, according to the sources that we spoke to. Morelli is an automotive parts manufacturer based in Italy. Now, this is a 4-year extension deal. Wipro signed its first deal with Morelli in 2020. Now, this is important because of its quantum, and it's one more big deal in Wipro's kitty. The company, since the last couple of quarters, has called out that the focus will be more on getting big deals and focusing on deals that get them higher operating margins. The last big deal that was announced was for $500 million. That was from a US-based communications company. Now this is the second one. The company right now is also in between its turnaround story, and has also gotten a fairly new CEO under whom this progress is being seen. Deal wins largely for the sector as well have been picking up, and Wipro is ordering well in this momentum as well. The macroeconomic environment is getting better, the demand is coming back, and in the last month, the sector as a whole signed 60 deals. This particular deal for Wipro, in this partnership, it will be focusing on the cloud transformation and operational efficiency for Morelli. And Wipro's full stride cloud will migrate Morelli's Milan data center to the cloud.
Right, Haripriya, thank you for that. Wipro is going to be one to track. Siemens also, fantastic sort of earnings posted by the company. The stock is up 3.5% in pre-open trade. But let's quickly cut across the big story that we are tracking this morning on the Adani Group. Let's see and go across and hear over the former AG and senior counsel Mukul Rohtagi and senior SC advocate Mahesh Sheth Malani are saying as they address the media.
I want to tell you that these are my personal legal views. I am not a spokesman for the Adani Group. I am a lawyer. I have been appearing for Adani Group in several cases. So I have gone through this indictment by the US court running into some 54 pages. My assessment is, and it is clear, that there are 5 charges or 5 counts. It is very important to note that count 1 and count 5 are more important than the others, but in neither in count 1 nor in count 5 is Mr. Adani or his nephew charged? This is like a charge sheet. It charges individuals for doing specific acts. It is like a charge sheet under the Indian penal laws, that you charge somebody with a particular act, whether it is bribery, whether it is corruption, whether it is robbery, whether it's murder. So count number 1, contained in paras 124 onwards of the indictment, is against certain other persons minus the 2 Adanis. It includes some of their officers and 1 foreign person. That is the conspiracy to violate the Foreign Corrupt Practices Act. It is called FCPA. It is somewhat similar to the Prevention of Corruption Act in India. So the first allegation is that there is a conspiracy to violate the Foreign Corrupt Practices Act framed by the US Parliament. In that, the Adanis are not named, their officers may be named. That's one. Then there are 2 or 3 other counts relating to securities and bonds. In those 3 counts, the Adanis and others are named. In the last count, which is a very important count, is a count relating to obstruction of justice. In that count, namely count number 5, the Adanis are not named, but their officers are named. So it is, maybe I made a mistake in count number 5. I made a mistake. In count number 5, obstruction of justice, the Adanis are not named, their officers are not named, but certain other people are named, including a foreign party. But be that as it may, the Adanis and others will respond to this charge sheet in the manner that they desire. I have not seen their responses. They will also respond to the stock exchanges in the manner that they desire. I have not seen or vetted any of these exchanges. These are my personal views which I have mentioned after having a look at this chart sheet. In the end, I would like to say something which has been troubling me, that when you look at a chart sheet, you have to be specific to say that so and so has done such and such act, so and so has bribed certain individuals. Because this is a charge sheet alleging that these people, including Adanis, have bribed Indian officials in Indian entities relating to supply and purchase of power. But I do not find a single name or a single detail in the charge sheet as to who has been bribed, in what manner has he been bribed, and the official belongs to such and such department. This charge sheet is completely silent.
All right, that's Mukul Rohatgi, Senior Counsel and former ASG, speaking about the charges against the Adani Group in the DOJ and, of course, by the SEC. Just about a minute left for markets to open. A quick call from Chandan on the top stock after the pre-open has settled.
So yes, I'll focus on IT name with the view that Nifty IT is doing well. So I'll continue to be with Wipro with support of 577. I look for an upside target towards 620 marks.
Okay. What about you, Kush? One top call?
LTI Mindtree, and I'll stick with the IT pack. This was the BTST call yesterday. 4 targets of 6380, 6500, and a stop loss of 6110. LTI Mindtree still features on our buy list.
Okay. LTI Mindtree on your buy list. Mayuresh, we haven't really had a chance to chat. Very morning heavy news. Are you sticking with the IT call?
We continue holding Tamanna. IT names like Persistent and Cisco Forge in a portfolio. But a clear disclaimer, we have these holdings from relatively lower levels.
Right, Mayuresh, Kush, Chandan, stay with us. As expected, it's a flat start on the index. It's flat as it can get. 24,200 is what we have on the Nifty. Bank Nifty is also oscillating between gains and losses. As we see it, broader markets that outperformed yesterday. Would be interesting to see what they are getting up to. The small cap index went home with gains of 1%. This morning, continuing some gains on the mid cap index, which is seeing outperformance, and the small cap index also trading higher. Like we said, it's a flat morning on the index itself. A quick check on the Nifty 50. I would imagine anything to do with crude becomes very important in today's day of trade. The breadth of the market is a 50-50 picture, so you don't have too many stocks. So there is no clear bias. In fact, the number of losers is outpacing the number of gainers, at least in the first couple of minutes of trade. Your biggest gainer is M&M on the EV launch. Brokerages are coming out and giving their views on what they think this EV launch could mean for M&M. You've got views coming in from the likes of an Antique that expected to over 20% upside on the stock. Coal India is looking good. OMCs will do well today and should do well for the next few days. It becomes a good trade, largely on back of the fact that there has been a ceasefire announced, which means that crude prices will come off quite sharply. What it means is OMCs, paint companies, tire companies, all that are key beneficiaries of crude will gain. NTPC, ahead of its subsidiary listing, NTPC Green, trades marginally higher. HDFC looks okay, metals trades flat, but as you can tell, the breadth of the market is deteriorating. The number of gainers is dropping significantly as we trade out today. On the sell side, you've got Bharti that's lower, Adani Port still under some pressure, cement names are looking okay. Mixed bag really, metals also not seeing too much interest. So Tamanna, flat as it can get, broader markets are looking okay. But if you look at this, the breadth of the markets deteriorating. The number of gainers has dropped significantly as compared to what we started off only a minute ago. So no clear direction just yet, but I think consolidation is probably what it's going to be like.
Yeah, for some time, I think probably until expiry on Thursday, you're going to see that trend continue. We're just quickly looking at some of the sectoral indices, and we told you this morning that auto will be in focus because of a whole host of news, and we'll get to some of those auto stocks in a bit. Mahindra & Mahindra, of course, pumping that up on the back of their new launch. And Nifty IT, okay, just struggling to be there in the green. The big hit actually on FMCG stocks, FMCG healthcare reality. I would say broadly, yes, the breadth of the market turning negative and a bit of pressure there. But let's look at specific stocks this morning that we're talking about, because it's going to be about stock picking. This is a stock picker's market now, and you have to work very, very closely on it. Let's start with Siemens that we've been looking at and put all of those stocks one by one for you as we have discussed. Siemens, good numbers, that has worked for them. Vedanta is a newsmaker. They're moving out to Saudi Arabia for copper mining, but no big impact there that we are seeing right now. Let's move ahead with that list as well. Gulf Oil, because of a positive brokerage note from MK, has seen a bit of a bump up, but not massively either. Let's see more of those stocks, please. Zaggle has a deal with MasterCard coming 5% up on the stock this morning. So Zaggle in focus to some extent, but Lumax, Auto, Ola Electric, M&M, all up, and autos are definitely in focus. I'm wondering if we can pull up Hyundai as well. JPMorgan has initiated coverage with an overweight on Hyundai, and you know, for a stock that has been not really been given that much focus, this is the first time that you've seen this kind of a positive note. So 1.5% on Hyundai as well coming in this morning. So a few movers and shakers over there. I think Vodafone and Tata Tele are the other ones that we should see, because remember, as we told you on NDTV Profit, the cabinet is considering waiving of the bank guarantees that they owe, and maybe we could show those behind over here. In fact, these are the companies that came and said. Vodafone put out a note towards close of market yesterday saying that they haven't received any official consideration of this, and it was a sources-based story. But they continue to be in the positive, as is Tata Tele, which is zooming this morning about 5% up. So these are some of the movers. But yes, Samina, I think it's going to be a bit of a tough job to find big movers in the market today.
Right, in most of them, but defense and shipyards continue to do well, so that Modi trade is still visible amongst a few names. Cochin Shipyard is up 4%. Siemens reported numbers that beat the street, which Taman already highlighted for you. Brokerages have liked what they've seen with the company in terms of earnings. Sirma is up 3.5%. 361 WAM is looking good this morning with a 4% up move. Jyoti CNC is having a positive morning. Macrotech, I think you've mentioned already in terms of gainers, up 2.5%. Aadhar Housing, Balrampur Chini as some of the other big movers in early minutes of trade. Pharma is having a bit of a mixed trade, but if I can just pull up a few tire companies and paint companies, let's look at some of the smaller paint companies and counters like HPCL to see if there's a reaction to lower crude. Apollo Tyre is not reacting yet, trading flat. HPCL is up marginally, up 0.6%. BPCL now turned negative. So this is interesting. You'd imagine that they move in conjunction with crude prices. That's what we've seen usually. We'll try and get a technical view on these OMCs in a minute. Aster DM also trades higher. On the sell side, GE, Vernova, which we'd highlighted for you, where the promoters are exercising green shoe option and selling an additional 2.5%. The counter sees a 5% downtick. Prestige is taking it to the chin with a 4% cut in today's day of trade. Godrej Properties, DOMS Industries are some of the other big losers as we see it. And BSC is also down 4%. Now that looks not too great in terms of trade. Chandan, anything that you've identified in the first few minutes of trade, and also while we're at it, I assumed OMCs would have it good today on back of lower crude prices, and so would paints. But none of them are reacting too well on the positive side. What are you making of them? Does this become an opportunity to go long, you think?
Yeah, so like first trade which I highlighted is Wipro, and then I'll focus on the Bank Nifty with the view that it can head to 52,500. With your in reply to your question on OMCs, I think we need to wait and watch because most of the counter HPCL, BPCL and IOC are finding some supply at higher zone, and all these counters are trading below their key moving averages. Looking at Asian Paint, again here multiple hurdles with sustained cold writing is visible. So I'll wait for some decline to get some stability. But yes, positive view on the Nifty Auto, Nifty IT, and believe most of the IT stocks will do in this market scenario.
M&M, Siemens and Wipro.
So Wipro, I think Chandan's already highlighted, same view continues, at least from a trading perspective. I know it's on a very strong footing, so you could continue to stay long on this one. I don't know if you could initiate a fresh one because that 600 resistance will start acting. M&M, I've maintained for a while that if you've got a 3 to 6 months kind of a time horizon, you should buy into this. 3,200, 3,400 are the levels on the upside that you should look at. Trading, the momentum is perhaps missing for now, and hence you may not find it to be so lucrative from a trading perspective. But yes, positional trade from a 3 to 6 month perspective could actually be quite healthy. Siemens has also been a stock that we've discussed in the past. Good base formation around the 66, 6700 mark, but the risk reward ratio is not favorable if you're looking for a quick trade. Here to a 3 to 6 month perspective, where on the upside the target could be 8,000, 8,400 as well. And just a quick word on a couple of stocks that are doing well today. Zaggle is something that we had discussed last week for a second target of 480. It's locked into upper circuit around 490. If you've got it, don't be in a hurry to sell this one out. And Jyoti CNC, we discussed this for a target of 1275. It was hit in the morning, but now you're seeing profit booking. So perhaps closer to yesterday's closing, you could re-enter and hold this for targets of 1315 and higher.
Would you stick with your call this morning of go long if you haven't already?
On the Nifty, oh yeah, very much. It's just that, as I said, because of the expiry, you could see some volatility. In this case, perhaps it's acting, the exact opposite, which is you're seeing lack of volatility. Already been, 2 days of big moves. But yes, Nifty preferred long, Bank Nifty even more so.
Mayuresh, I don't know whether you track these companies, but I'm sure you do. What are you making of the recent news development on the Adani Group companies?
No, sir, I think what has transpired, Samina, largely in the morning should be sentimentally positive, and how this transpires is going to be extremely critical going forward. But I think a large part of the damage has been done. We've already seen the Kenyan government probably cancel contracts. You're seeing the Sri Lankan port acquisition come under some sort of a scanner, and question marks being raised again in terms of the local utilities as well. How do you recoup all this? Because I think the intent in terms of the capital raise plan for Adani Green in the US was specifically to probably fund these projects, which are capital intensive as well. And therefore, I think the measures that they put out in terms of liquidity coverage, in terms of their own balance sheet strength across their group companies, is a testimony on what probably now happens in the next few weeks. So again, I think sentimentally positive, but again, a wait and watch in terms of all these developments that are happening.
All right, thank you so much, Mayuresh, Chandan, and Kush for joining us this morning. And it's been quite, I think, action-packed morning. In focus is also all of these statements coming in from the Adani Group and a clarification on what the charges really are. And the big clarification there, that there are no charges of corruption or bribery under FCPA against Gautam, Sagar and Adani and Vineet Jain. So Deven Choksi, Managing Director of DR Choksi Investment Managers, joining us now for more on this. Deven, very good morning to you. Thank you so much for speaking with us. Just trying to understand and put this into perspective on how this will be viewed for the group stock-wise, as well as the allegations that have been made.
Yeah, good morning. Well, I think the clarification is coming up at appropriate time. Maybe I think the allegations which have been made will probably reconsider, I think, all those aspects. I think the market will reconsider all those aspects against those allegations, largely because of the fact that if the direct involvement of the individuals are not there, and if it has been alleged, then probably I think that puts out, that takes away, I think, one of the major issues. And then probably I think one will have to see how the Department of Justice takes up the next level of allegations and how exactly they are dealing with it. But as of now, certainly this could be seen as a breather for the group as a whole. And though the fundamentals of the business and the companies, they do not get affected beyond the point. And I think that's where probably I come from, that if you have the clarity on the fundamentals of the business of the company, I think as an investor, you don't worry too much about those aspects.
Deven, just, on the view on the stocks, and you're seeing some recovery in the Adani stocks right now. Standard disclaimers over here, of course, and that will appear on your screen. But Adani Energy, Adani End, Power, Green, all of them now in focus. What would be your view on some of these stock prices that have been battered, and also for investors in these stocks because of the way news is presented? Every 6 to 8 months, you're seeing this huge battering for investors.
Yeah, that's unfortunate, I agree. And because I think in every successive times, I think you are having one or the other negative news affecting the stock price and the confidence of the investors. That's really unfortunate. In my viewpoint, I think the business remains, I think, as usual for this company. The group level, 85,000 crore EBITDA visibility is there. 20% CAGR growth on that EBITDA is there. So that part, I think, is definitely very, very positive as far as the business outlook on the group is concerned. Individual companies, the stock prices have corrected significantly, and that provides the good amount of downside safety, the margin of safety as we call it as. It also definitely, I think, works well for those who are entering now as against, I think, those who entered at a higher price. In my viewpoint, I think this is a game where infrastructure business definitely takes time for giving you the return. And suppose if you are buying at a lower price for whatever reason in which I think this stock is available at lower price, that gives you an opportunity to make money in a due course of time.
Right. Deven, so would it be fair for us to assume that you would look at if you like the sector, this is a non-event, and of course the current opportunity becomes a good one to initiate investments into the Adani Group stocks?
True. I think since we have been invested in the group, I think we know how the infrastructure assets are working. I would think that I think this is an opportunity to buy into some of those. I think the correction in the price for Adani Enterprise definitely, I think, is a big opportunity currently. Similarly, I think Energy Solutions, Adani Energy Solutions, I think, which is a business which shows, I think, long-term growth visibility, that also is available at a corrected valuation. So it's an opportunity. So yes, I think selective companies within the group definitely remains opportunity. Even Adani Port remains an opportunity at the corrected price to buy into the portfolio.
Right. Thank you very much, Deven. Always good getting your perspective. You're an old hand in this business, so it's always valuable advice. Well, let's move on to another veteran in the markets. Manishi Ray Chaudhary, Chief Executive Officer of Emma Capital Partners, joins in. Manishi, hi, good morning. It's Amina joining in. I was going through a recent report that you put out on Reuters where you talked about how India has accounted for a significant $15 billion outflow in terms of foreigner money. Of course, the last 2 days have not been so bad. For reasons that may be more local in nature. How are you reading into the recent recovery of the last 2 days? Do you feel like there has been a significant change in investor sentiment when they look at India? Or do you feel like the risk reward now is turning favorable for our markets after this correction and the significant outflow that you mentioned?
Thank you very much, and thanks to your viewers for this opportunity. I wouldn't call it quite a significant change in the investor outlook, but certainly there has been a degree of, sort of enhanced interest in the Indian market after this healthy correction that we have seen over the past couple of months. India used to trade at almost 90% premium if you go back to late September compared to Asia ex-Japan valuations. That has now come down to somewhere around 55%. That's still high. I mean, the long-term average, last 10 to 15 years average is about 25 to 30%. So it's still trading maybe at one standard deviation higher than the long-term average. But clearly, the kind of correction that we have seen, and in particular, as far as the large cap opportunities are concerned, which are close to their long-term valuation multiples, that has engendered a degree of increased interest in India. Some of the fund managers, the investors that we regularly speak to, they are clearly taking a relook after having sold down India significantly over the past couple of months.
Manishi, let's talk about actionables, right? And I want to keep it local for a few minutes before we, of course, turn our conversation more global and relative to what's happening on Wall Street and what happens in the rest of the world. Do you see pockets of interest, value in the current setup? And if you do, which are these pockets that you're looking at closely when you talk about India? Consumption, I know, has been a bit of a worry point, but there's hope that the second half will look a whole lot better. Infrastructure spending is expected to pick up. And more importantly, at least what we've seen in the last day or two, is the Modi trade seems to be back in some fashion.
I would name 3 pockets of interest.
Okay.
First of all, financials, particularly the private banks. And this is something I've been harping on. If you look at both the short term and the long term, it's really the top rung private sector banks that are likely to gain market share significantly. The public sector banks still occupy about 65 to 70% of the Indian lending space, and that's clearly going to change going forward. Second, and this is relatively more near term, I would also talk about IT services. I think as a consequence of the geopolitical changes that we're seeing, as a consequence of the Republican sweep, India, particularly in terms of some of the select group of Indian exporters, could turn out to be, so-called winners in this environment. The US dollar has appreciated. That's also a short-term, near-term tailwind for the IT service companies. Third, I would talk about consumer discretionaries, both autos and two-wheelers. Autos over the long term, the four-wheelers over the long term, and two-wheelers in the near term, as we enter and cross the wedding season. And there's a degree of support to rural consumption that has also come through as a consequence of a good harvesting season, a good monsoon, which should play out over the next couple of quarters. So those would be my pockets of possible outperformance, both over the longer term and the near term. I would think that, you talked about industrials and infrastructure. That is going to be a theme that would be multi-decadal for India. If India wants to transition to, to manufacturing and exports, getting better infrastructure, there's really no alternative to it. And I think the government is going exactly in that direction. There are some stocks which are overvalued. They have corrected a bit, but, possibly investors would be better off buying them at lower valuation compared to where they are today. But it's really a multi-decadal theme that we would continue to focus on.
All right, thank you so much, Manishi, for joining us. Manishi Rai Chaudhary there. The multi-decadal story is there for India, but frankly, something I've been hearing for the last 20 years. what is the story right now is also what we're focusing on. Recovery, sharp recovery actually in Adani stocks, and there have been some new statements coming out from the group, on which right now there is a comment coming in from senior Supreme Court advocate Mahesh Jethmalani. Listen in.
Evidence to prove that there was any conspiracy to bribe Indian officials to get these solar energy contracts. Kuch nahi hai. Nothing in the indictment. So, the Congress party is blindly relying on, an indictment against an Indian conglomerate which has done extremely useful business, undertaking useful businesses for India abroad, and it is trying to undermine them. It has succeeded in competition to get contracts for ports, etc., against many enemy countries of India. This is not in India's interest, and to blindly follow a US court indictment which gives no evidence and does not suggest that any of the Adanis or the company which issued the bonds, Adani Greens, have done any wrong in India. There is no, again I repeat, no case of any bribery in India in that indictment. Congress is reading too much into this indictment, and they are doing it for purely political purposes, and they have been aided, as is revealed by the timing of this leak, this indictment, by the democratic deep state. Now, this is a judicial order passed on indictment, but I regret to say that I don't know what evidence the judge who issued this indictment has acted upon. नहीं, देखिए, ये तो इंडियाज ग्रोथ स्टोरी को रोकने के लिए एक साजिश है, उसमें कोई शक नहीं है। ये इसका जो टाइमिंग है, और आप देखते हैं कि जैसे भी ये न्यूज आता है अदानी के खिलाफ, हिंडनबर्ग द्वारा, अब ये इंडाइटमेंट द्वारा, हमेशा उसके बाद थोड़े टाइम के लिए अदानी ग्रुप का लॉस होता ही है। अब तो $2.4 बिलियन का लॉस जाहिर है। Many adjournment motions were being given by the Congress party. Today also many adjournment motions regarding this particular issue have been given. You are a parliamentarian yourself. I'm not a parliamentarian right now. Yeah, but you have been a parliamentarian. But how do you see this? Do you think that there is a conspiracy of the foreign forces who are behind this? Because BJP have been alleging the Soros link behind the Hindenburg and everything. How do you see this, sir? Isn't it manifest that you are repeatedly going after one corporate group, trying to embarrass the Prime Minister by saying that he is closely aligned? He is an industrialist who has executed many projects very successfully, both in India and abroad, in infrastructure, of which we should be proud of. Now, don't rush to condemn him blindly following a US indictment. You are behaving like the local agents of a foreign power that has an interest in stopping India's economic growth and undermining economic economic policies, our growth story, and our stock markets. And you indirectly affect the retail investors.
The opposition MPs have been constantly accusing government of cheating Gautam Adani, and they are insisting for a JPC in this regard. How do you see this demand?
Unless the Congress party puts out in the public domain credible evidence that there has been some wrongdoing in India, there is no need for any inquiry either by any authority in India or for a JPC. You please put out the evidence. You can't blindly follow without application of mind. You only want to create some kind of noise and disrupt Parliament. This disruption of Parliament on such, it's not even flimsy evidence. It's non-evidence. There is no evidence. This is completely unwarranted. देखिए, जो इंडाइटमेंट यूएस कोर्ट ने किया है अदानी ग्रुप के खिलाफ, यानी उसमें काफी नाम्स हैं, लेकिन उस इंडाइटमेंट में ये नहीं बताया गया है कि भारत में कौन से कानून का उल्लंघन हुआ है। उस इंडाइटमेंट में ये नहीं कहा गया है कि किसी को भी कोई भी पब्लिक ऑफिशियल भारत में को घूस मिला है अदानी ग्रुप या उनके ऑफिसर्स द्वारा। वो स्पष्ट है, आप इंडाइटमेंट पढ़िए, उसमें नहीं है। इंडाइटमेंट सिर्फ ये बताता है कि एक साजिश था और उसके बारे में भी कोई सबूत नहीं है कि ये साजिश था ब्राइब करने के लिए, लेकिन उसके लिए भी जैसे मैंने कहा कोई भी सबूत नहीं है, कुछ भी नहीं है। कांग्रेस पार्टी अंधविश्वास के आधार पे इसको यहां पे एक इश्यू बनाने की कोशिश में है। कांग्रेस पार्टी को कम से कम, मैं नहीं कहता हूं कि यदि यहां पे कुछ रॉन्ग डूइंग हुआ है, कुछ गलत कानून का उल्लंघन हुआ है अदानी ग्रुप या उनके ऑफिसर्स द्वारा, कि अथॉरिटीज को या जेपीसी को स्थापित नहीं किया जाना चाहिए। मैं सिर्फ इतना ही कहता हूं कि पहले आप सबसे पहले सबूत पेश कीजिए, उसके बाद देखना चाहिए कि ये सबूत काफी है कि नहीं।
And my colleague Tanushka Datta spoke to former AG and Senior Counsel Mukul Rohatgi also about the finding of allegations.
See, madam, generally the charges seem to be that Adani company called Adani Green, which is in the business of supplying solar power, was bribing officials, unnamed officials, of certain unnamed power companies, purchasers in India, and the idea was to get lucrative contracts for supply of power. इसके लिए ब्राइब दी गई, किसको दी, कहाँ दी, कितनी दी, ये कुछ नहीं है इसमें अभी। और क्योंकि इसमें अमेरिकन इन्वेस्टर्स हैं, अमेरिका की स्टॉक एक्सचेंज में इसका शेयर लिस्टेड है, इसलिए वहाँ की इन्वेस्टिगेशन ये दिखाती है ये इनके खिलाफ चार्ज है।
Right. What do the charges specifically, say at this point? What are the charges against Adani's?
It is not specific at all. I told you, अगर मुझे आपको घूस देनी है और आप किसी कंपनी में हो तो मुझे आपका नाम तो देना पड़ेगा। तो ना तो आपका नाम है, ना उसमें पैसा इन्वॉल्व है, ना लिखा है कितना दिया और कौन सा कॉन्ट्रैक्ट मिला, कुछ नहीं लिखा है, जनरल है। अब या तो जनरल है या उनके पास और इन्फॉर्मेशन है, वो बाद में दी जाएगी, वो मैं कह नहीं सकता। लेकिन इन कागजों में कोई घूस लेने का नाम, पता, अमाउंट कुछ नहीं है।
In which counts are the Adanis named and not named?
Counts 2, 3 and 4. The Adanis are named. Those counts relate to allegations of conspiracy in securities, namely shares which are listed in the US.
Right, and count 1 and 5, sir?
1 and I told you 1 and 5. One is conspiracy to violate the Corruption Act, and count 5 is obstruction of justice.
Right,
उन दोनों में नहीं है।
Right.
Right, Chakri Lokpriya, Managing Partner of Red Strawberry LLP, is joining us for more on the story. Chakri, how do you view the developments?
Yeah. Good morning. I think they are completely frivolous at this point in time, simply because the charges talk about an event that could have happened, and now after that so-called event, which did not happen. A number of companies, Moody's rating agencies have evaluated the company. IDC has, did due diligence for funding the Adani ports. So all these companies must have done their due diligence, and none of these allegations came forth at that point in time. So at this point, I think these we're making too much out of nothing at the current point in time.
So what would be your outlook on the stocks? Because, at the end of the day, and something that Mahesh Jethmalani was also saying, investors are the ones who are suffering. There could be whatever reasons behind this, whether it's politics, it's the legal system, it'll take its own time, etc. We don't know till the facts are not out. But the fact is that then investors suffer. You have some recovery today, and there is a recovery in Adani Group stocks. But what is the outlook on these companies as an investment call?
From an investment outlook on the many of the Adani Group stocks is very strong. Adani Ports, they're the nation's leader in infrastructure of ports, and not just nationally but now becoming internationally. Adani Enterprises is a holding company. Adani Green has significant plans with or without foreign partners in renewable energy. So the list goes on, and therefore a company involved in such large infrastructure projects with cross-border funding, and all those funders would have done their own due diligence. So which means now to rely on some report seems to be a bit too much out of nothing.
Okay, thank you so much. Chakri Lokpriya there on the big story that we're tracking this morning. All right, let's shift to another very interesting conversation, and we have with us Manav Chopra, Director and Technical Analyst, Nuvama Institutional Equities. Manav, great to have you on the show, and thank you so much for joining us. Just let's start talking about what's happening with the Nifty. Definitely bound in a range. Are we now in oversold territory waiting for the next breakout?
So what we've seen recently is the first leg of the correction, from its recent highs, and more than 11% correction done in the markets. My sense is the market has bottomed for the short term, not necessary for the medium term perspective. And we have reasonable evidence suggesting that, the markets, the lows that we formed last week more or less should hold. And from here on, you will see a trading rally to emerge. We've already seen the first leg, from 23,300 levels closer to 24,100. I think the markets are just taking some breather at these zones, and eventually we do expect extension on the upside. Now, on a very short-term basis, with the expiry also this week, once market starts to sustain above 24,300, 400 levels, I think we expect move towards 24,700, 25,000. I think that is where the retracement of the recent decline would stop, and then we would reassess the situation. But largely, we still stand with the view that we are still in a medium-term corrective scenario where the first leg of the correction is done. But in this phase, we are just viewing this move as a trading rally, and then we would reassess at maybe at higher levels.
So you talk about the first resistance zone, 24,000 to 24,100, which is where we are right now, Manav. Now, the question a lot of our viewers would have is, what is the call that you take? Do you wait for Thursday expiry to go through and then take fresh positions on Friday? Or is this the right time for a longer play?
We do anticipate that, in the current scenario, the upside resistance would be violated. I think when we are looking at the market structures, particularly how Bank Nifty or IT is positioned, I think IT has largely outperformed. But, how Bank Nifty is currently consolidating, I think a move beyond 52,500 would actually get some bit of a strong momentum and good push for the Nifty in general. So, Bank Nifty has already seen a good rally from its recent lows, but consolidation near its resistance. I think the next leg would be supported by banks. My sense is with private banks, obviously, which has been quite supportive, PSU banks would start to fire. So likely speaking, we have already recommending selective longs in the banks. Also, the PSU banks looks quite favorable. And with that scenario, once Bank Nifty starts to break above 50 to 500, there is a possibility of a 5% kind of trading rally, which could get markets closer to 25,000. So the next sector looks quite reasonable. And within the Nifty basket, we have already seen how IT banks are supportive, but other sectors will contribute in case of any short covering.
Okay, so which are the sectors that could contribute in case of short covering? You spoke about IT, you spoke about banks. These have seen a stable run-up in relative terms. What are you seeing on the potential side? Is it autos? And autos rallying today, from an M&M to an Ola to Hyundai, everyone having their day in the sun?
So the maximum price hit that we've seen in the recent fall was the autos and FMCG in general. I think the price pain in FMCG more or less is done. The sector at best might just consolidate or try to form a base, but within the space you might see an odd short covering rally. For me, autos is in a mixed bag. It is still going to be largely consolidating, but certain stocks within autos will do well, like your M&M, Eicher Motors, Hero Motors, and that matter. but we are not very constructive on autos or FMCG. But these are the spaces within the large caps which are due for some bit of a trading rally or a bounce. And with that, I think market needs to sustain above 24,300 in a very short term to add fuel for some short covering or a fresh momentum leg. I think the only advantage that we've seen in the recent bottom formation was that the mid and the small cap seems to be getting into a comfort zone. The breadth has improved. And a lot of stocks are now sustaining above the short-term averages. So my sense is that this breakout should play out on the upside, and we will see an extended rally. So within that space, obviously the high beta like real estate looks quite well positioned. We are quite upbeat with the PSUs as a theme. I think that is one space that has seen a lot of decline, which are bound for a short covering or a quick trading rally. So PSUs, IT would be my preferred bets if I have to play the next trading rally along with banks.
Okay. Just one last bit. So you're sticking to banks, you're sticking to, I think, the big names right now. But what are you seeing the Nifty close this calendar year at? Manav, I'm just trying to understand, are you going to be seeing this kind of a consolidated range-bound level for the Nifty till December 31st and then maybe a breakout post-Jan?
So the immediate expectation is that Nifty maybe in the month of December should be close to 24,700 or northwards of 25,000. That's my immediate understanding. Largely, Jan, Feb, too early to anticipate, but we would want to assess the situation how December really goes by in terms of market construct. But my medium-term theme remains that you will find a lot of headwinds and resistance at 25,000, 25,200, and unlikely that market will see move beyond that on the immediate basis until unless we have any big catalyst coming from the other scenario which currently market is not pricing in. But we are only looking for the markets as a near-term trading rally, but the investment deployments would be done only at the lower levels.
Just one last point from you, Manav. In the SMID universe, if you had to pick 2 or 3 winners that seem poised for a breakout after being oversold quite a bit, where would they be? And would some of them be, for example, in your defense, railway space, which have been ignored for a while? Or are you seeing those with, order book focus? Just trying to understand what you're liking right now.
Okay, so my sense is largely, I think the PSUs as the basket, which has been in a corrective decline since early July or mid-July, they have already witnessed a 6 months of decline, which definitely includes names like defense, railways, shipping, select metals. I think the PSU as a space in general has bottomed out or at the fag end of bottom. Certain sectors, my senses have bottomed out within the public sector is your defense and your PSU banks. So we are recommending clients to start taking medium-term, long-term positions in the PSU banks along with defense names. And maybe any more jitters in the markets ahead, we would be assessing this sector very, very closely. I think the next 2 bottom out should be happening in your shipping along with railways. But that bottom out might take a while. The stock or the sector to consolidate. Unlikely that we see a very good bull surge coming in, but more or less, we are at the lower end and the fag end of the stage where things looks comfortable. Beside the public sector space within the split, my sense is even the chemical space, which the sector has been in a good underperforming or a downtrend since last 2.5, 3 years. And quite an underweight in the general market theme. So, this is also one sector which has very limited traction. And my base case is that we've seen some subtle accumulation playing out. So, with the PSUs and chemicals within the SMID basket, I think this is an interesting zone where risk reward looks very favorable. And we would be eyeing these sectors for taking some nimble long positions.
One favorite from each.
Okay, so to start with, from the chemicals, it will be Navin Fluorine. The stock has been showing very, very good accumulative patterns, currently priced at 3,400. And, it is forming a good inverse head and shoulder pattern on the long-term charts. And I don't see the stock go below 3,200. So maybe we have a good bandwidth for accumulation, but largely we anticipate a 20-25% kind of a rally coming in. And the sector has been quite beaten down from the public sector. From the large cap, I like BEL, and from the mid cap space, it will be BDL.
Okay, so BEL, Naveen Fluorine, these are some of the picks from Manav Chopra. Definitely add those to your list. Manav, thank you so much. Always a pleasure to chat with you, and thank you for joining us today on NDTV Profit. We're going to take a very short break, but before we head into that break, quick check on what's happening with the markets. I mean, real struggle there between the bulls and the bears. One sectoral index which is in the green is the Nifty IT. Look at what's really working. Ola Electric zooming today, Zaggle zooming today. So these are some of the gainers. You're seeing a sharp recovery in Adani stocks as well. This morning after the statements that have come up from Adani Green and from the company saying very clearly that there is no criminal indictment under FCPA charges against Vineet Jain, Gautam Adani and Sagar Adani. So some reaction coming in there as well. We'll take a very short break. On the other side, we're focusing on the new kid on the block, NTPC Green. Are we going to have listing gains? If not, what should your strategy be? We come back with an expert view after this very short break.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Laurus Labs on any small declines up to 510. Keep a stop loss of 500 and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back. It's NTPC green, 7.5%. This has beaten some of the most optimistic grey market premium numbers that we had seen, and this is much, much better than what the street was expecting. NTPC Green is the third largest IPO in the current calendar year, and of course the excitement and euphoria was there for everyone to see. It was oversubscribed 2.4 times and is a significant player as India undertakes its energy transition business, and more importantly, remember, India is the fourth largest in terms of installed renewable capacity. What you also want to keep in mind is that 17% of that installed capacity does belong to NTPC Green. In other important news that we woke up to this morning, just hours before the stock list as we see it this morning, what we also heard about is their joint venture that was announced with the Maharashtra State Energy Department. This, of course, is an important development, pretty much in line with what was expected, where future expansion for NTPC Green would be secured through MOUs and joint ventures with PSU and private players. So significant in every way. The listing is good. It's up about 7.8%, better than what the street was expecting. It is an expensive stock. Valuations are stretched. It does have a high debt on its books, but net, Tamanna, this is much better than what we were expecting in the last few weeks, right? You've got a big smile on your face.
I've got no NTPC Green
interest,
allotment. No, I'm just saying that it's good that it has listed better, and I think part of the reason could be how LIC has come in and actually completely bolstered their subscription, because their subscription was languishing a bit till the second day, but third day, as happens, has come in as well. We'll run some of those pictures also on part of our screen, where you have all the management coming in and posing with the opening bell. That's always nice. But Nikhil Nigania is with us. He's director at Bernstein and tracks the stock closely, the space closely, and also has a note out on NTPC and NTPC Green. Nikhil, very good morning to you. I think the target price is 440. Are you, first of all, positively surprised with the kind of listing gains? I mean, 7.5%, but it was expected to be 3 to 4%.
No, you're right. So in terms of coverage, we cover the parent NTPC, and hence from that lens, we look at the renewable business. And to your question, are we surprised? We are a bit, given if you look at the grey market premiums where they were till a day back as well. But on the parent, we are positive. And the renewable business per se, we think the potential they have is great due to a few aspects. Such as a cost of debt advantage, number one. They can borrow much cheaper than private sector peers. Second is an advantage they have on the receivable side. The receivables, they have a tripartite agreement with the Reserve Bank of India and the states, which helps them get better receivables than most private sector players. And the third advantage they have is access to capital from the parent, which is something which gets diluted a bit with the separate listing. Hence, we were not in full favor of the listing separately. But the parent, we are positive, and the overall potential, we think in renewables, what they have is great.
So, Nikhil, just to follow up on that, you are positive about the parent, that is NTPC, not so much about the listing NTPC Green. So just the direct question for whoever has got the allocation or is thinking about buying in right now, is it a good idea to do that or not?
Unfortunately, we can't comment on the specific green listed entity given we don't cover it and hence can't give a valuation lens on it. But from a fundamental perspective, given we cover the parent, we think the renewable business, they have a lot of potential to grow and be one of the biggest renewable players in India, given the points I mentioned, cost of debt, receivables, and access to capital.
Let's then talk, hi, it's also Samina joining in. Let's keep the focus on NTPC and talk about what you've put out on your note. What, in your opinion, are the primary factors that are causing the recent volatility in power demand, and how do you expect these to evolve in the near term, and what will the impact of this be on NTPC?
You're right. So a big concern for the sector the last couple of months, which we think should be downplayed, but the stocks have become soft, is power demand, right? So last 3 years in India, power demand has been phenomenal. It's grown at 8-9% CAGR. Compared to a 5% CAGR, which we saw most of the last decade. That has been a key contributor to the rally in the power sector stocks. But if you look at the last 4 months, the way they have played out, July to September, then October, and even November till now, demand has been almost flat YY, as against a trend of 8-9%, which I spoke about earlier. The reason why this happened, we think in the July to September phase was monsoons. Rainfall this year was significantly higher than the average levels. And a low base. Last year, we had a deficit in rainfall. So those are the reasons why, and power demand is very weather dependent. Temperatures drop, rainfall is excessive, power demand drops, which is what we think contributed to this slowdown in power demand. And we expect the longer term trend of 1x of real GDP growth in power demand, which is 6-7%, should come back. It's only a question of time.
Right, so Nikhil, beyond, okay, with midterm demand also aligned to 1 times real GDP growth, what structural drivers or risk could alter this relationship, in your opinion, in the second half of this financial year?
Yeah, if in terms of risks to this demand story, in the near term, again, weather is something which is unpredictable. If again we see cooler temperatures, then again demand is unlikely to grow fast. And second is economic activity. So we have seen some soft data coming from other industries as well related to consumption. So part of it again obviously contributes to power demand. That's the other factor. I mean, broader economic activity and weather. Those are the 2 things I would highlight.
Nikhil, I know while you don't want to talk about NTPC Green specifically, but from an NTPC lens, right? Why does the IPO valuation of over 1 lakh crores now, of course, that 7% cap up on the stock, exceed the inherent value of 70,000 crores? I mean, what, in your opinion, even justifies this premium? Is it just the fact that it has a parent that is NTPC? I do understand that it has 17% of India's installed capacity. India, of course, is the 4th largest installed capacity in the world. So, in your opinion, those valuations do look stretched to me.
So from a fundamental perspective and a thematic perspective as well, I can see 2 reasons why the interest is there in the stock. One, as I said, having a parent like NTPC, which is a central government-owned sovereign kind of an entity, they borrow, for example, at 7.5-8% interest rate, versus private sector peers borrow money at 9.5% interest rate. And renewable business is 80% debt funded. So if you borrow 100-200 basis points cheaper than a competitor, you have a big advantage going and bidding for the same projects which a private sector is bidding for. So that is one big advantage which they have. The second reason for the interest is thematic as well, right? I mean, not just NTPC Green. If you look at all the listings which have happened in the renewable space in India, whether it be, again, names we don't cover, but Wari, Premier Energy, there's been good interest in those names because renewable as a theme, given the strong government push towards 500 gigawatt renewables by 2030, and not many names to play that, there is an interest in the name.
Nikhil, now, of course, we've talked about the valuation of NTPC Green, but how significant is the holdco discount on NTPC's valuation post-IPO? And how might this affect shareholder value? And also, do you see the stock price stabilizing post the IPO now, which was probably the biggest trigger for NTPC as well in the last couple of months?
Yeah, so holdco discount again is a debatable point. So in our scenario analysis, so our target price for the parent is 440 rupees. And even if at current stock price, we give a 20-30% holdco discount into the parent, it doesn't move the target price much for us. I mean, looking at the screen, I think numbers it's at, it could only inch it up a bit, even after the holdco discount, if it sustains at these levels.
Thank you. It was good talking to you. Always good to get perspective on NTPC while everyone seems to be focusing on the listing of its subsidiary NTPC Green. I think the more important talking point becomes NTPC and what this really means for the parent in more ways than one. But great having you. Have a good day and we'll speak to you soon. Well, that is a little bit of coverage on NTPC, the stock, and NTPC Green has opened with a better sort of response than anticipated. Remember, this is an expensive stock, but despite that, the markets are seeming excited and picking up the counter on listing day. 118 is what we have in terms of NTPC Green. Well, in the meantime, a quick check of how the markets are also doing. It's not a bad day of trade. It's pretty much what we expected. It's another morning of consolidation, but this comes in after we've gained over 3.5% over Friday and Monday. The breadth of the market is what sort of disappoints me a little bit, but it's more or less a 50-50 picture. On the winning side, like we called it, the stock of the morning's got to be Adani Enterprise, and that is what is contributing to the Nifty, up about 3.5%. Bharat Electronics, which is what Manav, I believe, was constructive on, Tamanna tells me, is also seeing a 2.5% gain. Tata Motors, Tech Mahindra, IT is in good step this morning. Power Grid looks good too. NTPC, if I can pull that one up and see what it's getting up to, it's up about 1% odd. On the sell side, Pharma and defensives, consumption was a gainer yesterday, but today taking a break. So your counters like Britannia, ITC, Asian Paints, ICICI Bank, RIL are some of your key losers. In the broader market, Vernova is down 5% on back of that green shoe option being executed. Prestige Estates is having it rough. Poly Medicure, Oil India are looking quite bad in trade. On the gaining side in the broader markets, it is shipbuilders. It's the Modi trade that continues to remain in focus. Garden Reach is up 6%. Bharat Dynamics is up 5.5%. Adani Energy is up 5%. Cochin Shipyard is up 5%. Adani Power. So the whole Adani pack is seeing gains anywhere in the range of 4 to 8% each. So all in all, a relatively decent morning, we would say. Well, we also have another quick check-in coming in from our research team, where JPMorgan has notably initiated coverage on the recently listed auto giant Hyundai, and Puneet is standing by to tell us more what JPMorgan thinks. Puneet, JP constructive on, I'm going to call it Hyundai because that's how I call it. It's over to you.
Well, thanks for that. So yeah, you can pick your pick on how you want to call the name Hyundai, but they have a target price of 2,200 on the stock. It's about a 16 to 17% upside from the current levels. And they are putting 3 key points in this particular report. The first one is that the premium portfolio market share gains as well as operating efficiency are the 3 key points going forward of the company, and that they're very positive on. They're maintaining that 68% of Hyundai's sales are coming from the SUV space and majorly from Creta as well. So that's another key positive on the margin side, and that's one of the key reasons as well that we mentioned in the IPO, that its margins are higher than somewhere like a Maruti Suzuki as well because of the same. The second part is that market share gains are also expected going forward with new launches such as the Creta EV in Q4 of FY25, so somewhere between January and March of 2025. And apart from that, they are looking at multiple new refreshes as well going forward. Finally, they're estimating that the market share will go from 14% in FY25 to about 15% in a couple of years. And what's interesting is that the EBIT to the total per vehicle is around 89,000 for the company, which is a 43% premium compared to its peers. So it's expecting that the margin play is going to be very strong, and valuations are very cheap right now at around 18 to 20 times. They have the target price of about 2,200 is based on Hyundai being valued at 25 times FY27. Which is in line with peers such as Maruti Suzuki, but the margin profile is higher. So overall, it's a big positive coming in on Hyundai, another initiative coverage, another buy with a target price of 2,200.
It's not just Hyundai which is in focus today. It's auto stocks which are also in focus, M&M and Ola Electric as well. But what are brokerages saying about M&M?
Well, definitely it's a big positive. Finally, the electric vehicle launched by the company, and brokerages, while there are mixed views on valuations, the common theme is that it's the very positive EV launch. Specifically, Nuvama, they maintained their target price 3,700 rupees per share, 21% upside from the previous close. They say that the new EV platform, dedicated EV platform, the Inglo platform is what they call it, is a big positive because it can lead to multiple launches going forward as well. They've said that major features such as a larger battery, higher range, as well as fast charging is some of the key positives about the vehicle that's launched yesterday. Bookings open from January 25, and what's interesting is that they mentioned that the capacity is around 90,000 units. There's roughly 2 months of sales for the company that's added onto a new platform. Nuvama is estimating that in the first year itself of FY26, they might be selling roughly about 48 to 49,000 electric vehicles. That's a big growth driver going forward apart from the existing portfolio. MK, while they have a target price of 2,700, a downside actually a 9 to 11%. That's clearly just led on valuations because their point is that the SUVification, so as to say, is slowing down compared to the last 2 years. They've also mentioned that while the introductory price of the electric vehicle is 6% and 22% for both the models, lower than the peers as well, it's very competitively priced. But they say that the EV category has some slow offtake, and as I mentioned, the SUV is slightly on the slower side. So they are expecting that the EV industry will have a lot of launches, so competition will be there. But Mahindra's new launch, definitely a positive. Valuations, according to MK, might be something that you want to watch out for.
Valuations is the other part of the story. Thank you so much, Puneet, for speaking with us. And let's get to our talking point conversation this morning. Pramod Guppi, Marcellus Investment Managers in studio with us. Pramod, great to have you, and always great to have a conversation in studio. So thank you for dropping by.
No, thanks for having me. It's always a pleasure.
All right, let's start talking about your view about what's happening right now in the markets. And then, of course, we'll get to what segments you like or what your mood is. Are you feeling optimistic right now? Cautiously optimistic, or in that zone where you're saying let's sit on the sidelines?
Well, I think the answer is in the nuance, like always, right? I think the long-term macro is fairly intact. I don't think there's any doubt. Of course, there is cyclical slowdown in certain sectors, but that's part of the deal, right? I mean, economies, businesses, markets always go in cycles. Nothing moves linearly. To that extent, I think that given we are long-term investors, we're quite positive on the macroeconomic fundamentals. Yes, we would like the markets to be a little cheaper than where they are, particularly the sort of stocks that we like in quality. We did see some hope with the sort of correction we've seen in the last couple of months. I hope that correction sustains and gives us opportunities to buy into great businesses from a long-term perspective at reasonable valuations.
No, so you don't think valuations have come off enough? Because you're saying you hope the correction sustains. Trend lines are pointing to perhaps a recovery from here on.
So I don't know. I mean, it's futile to predict markets in the short run. I've tried to do this for the last 20 years. Honestly, I can't do it. I haven't met anybody else who can do it. But to the extent that we have the luxury of taking long-term calls, I would rather wait for more reasonable valuations, more from a fundamental perspective. I'm not talking about whether tomorrow you'll get a better price or not. But looking at earnings and long-term earnings growth potential, I do think that you'll need a little more margin of safety before you can say that I can start buying now.
And from whatever it is worth, we have borrowed returns for the future. We've had a phenomenal run despite the fact that we've corrected. And even if you look at those FI numbers, they're not even taken off a little bit profit off the table, right, with the kind of wealth that they've created and generated by allocating to India in the last 1 year. But Pramod, let's get down to actionables. We had a very rough October. We had a very rough November as well so far. What were your clients doing? Have they doubled down on the allocations in India? Have you picked up the phone and said, you know what, if you've got money on the sidelines, bring it on? Or are you still waiting?
We're still waiting. In fact, a lot of the global institutional allocators have clearly done their homelwork on India, and clearly
They're telling you to wait.
Not really. They're asking us. You tell us when should we, press the button. We're saying wait.
Why is that?
Like I said, at the end of the day, I mean, you're saying markets are down 8-9%. Isn't that enough of a correction? But look at it this way, even earnings are down 8-9%. So multiples haven't changed materially enough. There are two outcomes. If you think that the earnings are going to be strong enough, hopefully you will outgrow those multiples and multiples will become attractive. But right now what we're seeing is the other way around, where earnings weakness has meant that despite the correction, markets haven't become any cheaper. But like I said, leave aside the shorter term, even from a longer term perspective, some of the quality businesses, we would like to see more sensible valuations before we can bang the table and tell our clients, this is the time to buy India. And I think they are on side with that. We've got long history of starting valuations having an impact. Like you said, you borrowed returns from the future. The fact that we've had a great run over the last 3-4 years means that from this point on, we should be prepared for relatively lower returns. Of course, there'll be pockets of the market which will do better, which has been the case over the last decade as well. Say 2020 to 2020, between say 2G and COVID, you had a fairly muted market experience, yet there were sectors and stocks which did remarkably well. But that's our job as asset managers to identify those.
No, you're right. And you talk about earnings. I mean, India is shown single-digit earnings this quarter. Second half, hopefully, looks better. But the US has got double-digit growth. So the mother market will continue to be the hotspot for investors. But you talked about how this is a stock pickers market, bottom-up approach is what most asset allocators would be doing. But in your opinion, which sectors have been affected most in the recent correction? Are there any pockets of value or interest that you're seeing?
I think private sector financials remain perhaps the only pocket of
the HDFC,
value.
ICICI
banks, banks and a few NBFCs which are quality, which have corrected over the last couple of months.
What about capital market players?
Capital markets players are cyclical.
Like
yeah, no, absolutely. Look, structurally, we're very positive because I think we built Marcellus to capitalize on the structural trend of financialization of savings by Indian households. Historically, Indian households have been very heavy on real estate and gold. It's only over the last decade or so there is conviction building in financial markets, and therefore you're seeing the flood of money coming into mutual funds, PMSs, AIFs, and several other financial assets. And that trend, I reckon, is multi-decadal. Having said that, this is not going to be a linear story. Capital markets are cyclical by definition. I don't know where we stand in the cycle, but given the trend over the last 3 years, you'd reckon earnings are on the higher side. They're certainly not trough earnings. On top of that, the market is giving multiples to these capital market plays at a premium. So you're buying into them at premium multiples at what could potentially be peak earnings as well, from a cyclical perspective. If you were to take a longer term view, of course, you will still make a lot of money from capital market plays. But like I said, we're all greedy. We would want these great companies available at cheaper valuations.
In the long term, we're all dead also. But just last point, Pramod, there you talked about capital market play, but if you were to identify 1 or 2 sectors that you think are ripe enough or close enough to valuations where you feel fresh money can come in, what would those be?
Yeah, hands down, it has to be private sector banks, right? So where we've seen an element of quality still intact in terms of asset quality. When you're investing in a lending business, that's perhaps the foremost thing. And they are cheaper than historical valuations.
Just a quick 10-second answer. What are you feeling about export-oriented sectors? So pharma and IT, because the Trump party and the China tariffs could work well for us.
Yeah, I mean, IT and pharma are perhaps one of the few sectors where you have some earnings visibility. Earnings visibility is important, particularly when valuations are high. By no measure, pharma and IT are cheap on an absolute basis. But relative to the rest of the market, given the earnings certainty and predictability, I reckon those would follow private sector financials in terms of our pecking order of sectors.
Okay, so financials, IT, pharma, and in financials, private sector banks on top of the heap. Always a pleasure to speak with you, Pramod.
My pleasure.
Thank you so much, Pramod Guppi of Marcellus here on his top ideas on Talking Point. With that, it's a wrap on India Market Open, but stay tuned. Ask Profit up next.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Laurus Labs on any small declines up to 510. Keep a stop loss of 500 and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. This show gets you answers to all of your stock-related questions. And we've done things a little different this week. We've been taking your questions on WhatsApp, but we've also opened the phone lines so that you can speak to us directly. And that number that you see on your screen, that landline number, is where you can call and speak to me directly. And of course, we've got a fundamental expert and a technical expert joining in just very shortly to tell you or give you the answers to all of your stock-related questions. There are several questions that have already come through on WhatsApp, and we'll get to that in just a moment. But let's take a look at where the markets are right now. It's been very range-bound for the benchmark Nifty 50, and you have almost an unchanged sort of a move right now. And look at that. It's a very, very tight range at this juncture, but holding very close to that 24,200 mark for the benchmark Nifty 50. Let's take a look at the broader markets as well and see where they are right now. And you have the mid-cap index that's trading just about flat at this juncture, but in the green, and the small cap index that's up about 0.6%. So, of course, we'll look at some of the underlying securities, and let's take a look at the contributors on the Nifty 50, because there are a few stories that emerge despite the kind of range-bound action that you have. You have NTPC, which is up and is proving to be the top contributor on the upside, and you also have HDFC Bank. But the Adani companies that are part of the Nifty 50 are actually leading gains. So you have Adani Enterprises that is up about 3% even at this juncture, and several of the other portfolio companies also gaining ground on the back of a clarification that was sent out by Adani Green earlier this morning that said that both Gautam and Sagar Adani were not charged in the DOJ, the Department of Justice indictment that took place earlier in terms of a violation or conspiracy to violate the FCPA, which is the anti-corruption law, and they've also not been charged in the obstruction of justice. What they have been named in is a civil charge, and that's a completely different scenario altogether. So there has been a little bit of misrepresentation in the run-up to today, and that has been reflective in the stock prices. And of course, all of that has been taken into account, that clarification, and the stock prices are up and about in trade today as well. Another factor that we've been focusing on at the start is a new listing, of course, NTPC Green, and that is what we chose as a focus today. So incidentally, if you've got questions on NTPC Green, do call us. If you missed out on this IPO, and you're wondering whether or not to deploy at this juncture, that is what we should be addressing at the start. Incidentally, I'm joined by Mihika, just to give you some perspective on what the assets are for NTPC right now. Mihika, let's not go into all of the details, but let's talk about where things stand right now and what the roadmap is for the assets going forward. How will capacity increase?
Yes, thank you, Alex, for that. The IPO listed at a 3.3% premium, but it's gained so far up 13%. A little bit about the company is the renewable energy arm of a listed company, NTPC Limited. It has an operational capacity of 3.3 gigawatts, almost 14 gigawatts of contracted and awarded projects, and 9.2 gigawatts under the pipeline. Now, in the next, and from FY25 to FY27, the management has stated that they will commission 3 gigawatts in FY25 itself, 5 gigawatts in FY26 and 8 gigawatts in FY27, and they target a 19 gigawatt capacity by March of 2027 and a 60 gigawatt capacity by 2032. Lastly, when you talk about strengths and risk, parent company supports strong past experience are strengths, but key risks include construction delays and cost overruns.
Okay, all right. Thanks so much for getting us those details. In fact, we spoke with the management. Let's listen to a small slice of what they had to say to NDTV Profit.
We're now in conversation with the management of a newly listed company, NTPC Green. Now, the IPO stood at a total issue size of 10,000 crores. And to speak about the road ahead, we're joined by the Chairman and Managing Director of NTPC and NTPC Green Energy, Mr. Gurdeep Singh, as well as the Director of Finance, Mr. Jaikumar Srinivasan. Welcome to the show and congratulations on the listing. Let me start off by asking on how the 75% of the proceeds will be used for debt repayments. How will these debt repayments be carried out forward?
Good morning. Yes, we have indicated about debt repayment initially. Broadly, this 10,000 crores would be utilized for capital expenditure only, because we have a huge capacity addition planned up. But on a more immediate basis, when we mop up this money, we'll be retiring some of the debts on the balance sheet. And subsequently, when the capital expenditure happens, we'll have to again go for the fresh loans.
Got it.
There is, of course, the entire interview, which will be available on all of our platforms later in the day. But I don't want to delay taking your questions any longer. So let me introduce you to the experts who are going to take all of your questions today. We've got Vaishali Parekh, who's Vice President Technical Research at Prabhudas Lilladher, as well as Sameer Dalal, who is from Natvarlal and Sons Stockbrokers. Thanks so much to the both of you for taking the time. Sameer, very quickly, I'll come to you on NTPC Green. What's the call that you have? If you missed out on the IPO, would you suggest entering at a price that is 13% higher than the listing, than the issue price?
Honestly, no, I don't think I'd be in a rush to invest. Look, this is a great long-term story, development for renewable power in India, NTPC being the largest player, expanding its capacities. Your analyst has already discussed the fact that they have a target of 16 gigawatts by 2032. Now, all of these things take time to set up. Then, like they said, there are cost overruns that will happen, which could affect the profitability. So I'm not saying it's a bad investment. I'm saying it's a good investment, but is it the good time to buy it at a 10% up price about today? I think you can wait. I think the issue is quite large. You also got to realize that because of the large capexes that they have lined up, at some point in the near future, they're going to have to come in for another round of fundraising to ensure that their balance sheet remains healthy. So I think there will be enough opportunities to buy it. I would not be rushing into buy it today itself.
All right, let's jump straight into the questions that we've got. I just want to remind you, if you're logging in, you can call me directly on that number that you see flashing on your screen. Prakash from Chennai has got the first question today. He has about ₹1 lakh that he wants to deploy right now. And this one's for you, Vaishali. On the charts, he's looked at 3 companies in a similar space. There's Transport Corporation of India, there's TCI Express, and there is Concor, which is Container Corporation of India. And he's looking at which of these has the best probability to give decent returns from this current level. He's okay to wait for a better time to deploy. Which would you pick?
So, well, currently, I think Concor is very well placed. It's seen a good corrective move. And technically, if you ask me, 760, 770 was a very good support level. and we are seeing a bounce coming. But however, having said that, still there is a lot of upside from here on. So I would suggest Concord to start accumulating with 760 as support.
All right, so Concord is a pick there. The question is from Surya, the next one, and he's asking about gas stocks, GAIL as well as GSPL, and wondering what the long-term prospects are and whether they should be bought at this point. He's writing in from Bengaluru. Samir, on the fundamentals, would you say that you would pick either one of these two?
So GAIL, so we don't have GSPL under coverage, so I can't comment on that. Sure. GAIL is something that we are positive on. Look, at the end of the day, the gas supply within the country will only keep increasing as city gas distribution keeps increasing. CNG also, although it's becoming non-favorable at this point of time given electric vehicle focus, we believe that business is still going to be able to grow because it's still more competitive than the ICE engine. So from that perspective, I think GAIL looks good. Volume growth over the next few years. Operations will keep getting better as more gas flows through their pipelines, which will play the increase in profitability. So we have a positive view on GAIL, and one could invest in GAIL. But is it the top pick in the market at this point of time? No. But if he's wanting a gas stock, then yes, GAIL is a buy.
I believe we've got our first caller of the morning today. Devi is tuning in from Hyderabad. Devi, good morning to you. And how can we help you today?
Thanks for accepting my call. I want to know what is your view on Tata ELXSI stock for a long term, and also if there are any long-term stocks to invest. Please tell us.
Okay. So before I take your question to the fundamental expert, Devi, I'm just curious. Tata Elxsi, what caught your attention? Why did you pull up this particular stock?
The reason why I have pulled up is that the semiconductors part, which has pulled up my interest. Mm-hmm. So Tata is actually is in joining with Taiwan's semiconductor companies. Mm-hmm. So I'm expecting there will be some growth, even though the semiconductor is one part in this Tata ELXSI, as well as there are some artificial intelligence improvements which are coming in this company. So I picked up this stock. I want to know the view for long term.
Okay, and have you bought already, Devi?
Yeah, I have bought a few. I have 7 shares at 7,200, but now the stock is at 6,700, I believe.
6,800, yeah, it's recovered somewhat.
Yeah,
but
yeah.
I got your question. Thanks so much for logging in. Let me take this question to you, Samir. Obviously, Devi's done some reading, and there is a fundamental basis on the back of which she has made her investment. Unfortunately, the stock has given up a little bit of ground since she bought it. What would you suggest her approach should be, and what do you think about her thesis when she invested in Tata Elxsi?
So I'm glad she has done some amount of reading before investing. It's good to hear that. Congratulations to her. So we do have a positive view on Tata Elxsi as well. From a long-term perspective, I'll tell you, the businesses that they're doing, which is in the auto side, which is in the AI side, which is also what they're getting into, will all bear fruits over a period of time. Where I think, the stock had probably run up far more than fundamentals. I think it had made a high of almost 9,000 plus. And from there, we've seen a stark correction. So now what we are in is a consolidation. The earnings need to start catching up, which is obviously going to happen. We've seen a bit of a flat line in the earnings in the last 2 quarters. So once maybe the earnings start seeing an uptick, you could see the stock price moving up. But we believe that the consolidation could continue for a little bit longer, maybe in 3 to 6 months. I would suggest that, given she's not bought it at the extreme high of 9,000 plus and just around 7,200, on any dip, she should add on an average a bit. Like I said, we are positive. We believe the stock price should trade at about 8,000, 8,200 in a year's time. So continue to hold on.
Continue to hold, Devi, is the view from Samir on Tata Elxsi. Zomato is the next counter that we're talking about. Manu is asking whether or not it should be bought for the long term, fresh at this juncture, 287. As a stock that has been on a tear, absolute tear. Vaishali, there's also fundraising that it's undertaking, so that's going to be something that is in focus as well. The stock is up and about in trade today as well. Would you suggest a fresh entry at this point?
So I would not say at these levels, but we did get a chance when the market was dipping. But I would say wait for a dip or start accumulating, because long-term projections, what we are looking at from here on, it's around 320 to 340, and 260 on near-term basis acts as a very good support. So my view would be to start accumulating, because exact bottom fishing won't be possible. We are already seeing a bounce. So if you get at lower levels, add more, but one can start buying from here on.
Okay, I'm coming back to you on Jupiter Wagons. Praveen has got this next question. He's writing in from Hyderabad, and he's bought at a price of 572. He's wondering whether to hold or sell at this juncture, and if you can provide him with a stop loss.
So yes, Jupiter Wagon, actually we saw overall all rail stocks were beaten up to quite an extent, but and so is the case with Jupiter Wagon. What we saw, the high of around 650 to now at around 450 levels. So my view would be, if time period is not a problem, I think start adding more, because with a longer term perspective, once the stock moves above 520, there will be further more conviction for further high move going towards 550 to 600 levels. So I guess just hold on and buy with the stop loss of 400 levels.
All right, Mithilesh, I believe, is tuned in, and he's called from Hyderabad. Mithilesh, good morning. I believe you've got a question for us on NTPC Green.
Yes, sir. Good morning, everyone. So I got NTPC Green Energy around 850 stocks at IPO pricing, and what's the like you said, this has good amount of returns for now, but for long term, should I be holding it, or should I book some profit and wait for it to come down and add more in the dips? Like, what's the strategy for next 2 to 3 years?
That's a good point. We've already taken a fundamental view, Mithilesh, on NTPC Green from Samir, but let me just take this specific question on whether you should take some money off the table. Samir, it's an interesting point, because this is one IPO that has certainly given a pop, and it has already given up a little bit of ground from the high point. So would you suggest taking some money off the table? It's not a very large amount. So is there a significant benefit to taking money off the table and deploying later?
So if the person has a 3-year view, I don't see what's the reason to take money off the table at maybe like a 7% upside, right? Or 10% upside from where they've currently bought it. I think it's a long-term play. I would suggest this is a stock that could get added, but at lower levels. Honestly, if you ask me, I found the IPO slightly on the expensive side. So I would have liked to see the pricing around closer to 90 rupees. So if you get a dip around the 90 rupees, I would say add on. But should you sell? Probably not, because I don't know if we'll get that 90 rupees. And if you are a 3-year investor, which the question is, then I don't see, I mean, I see the stock moving up, quite a bit. So trying to catch the tops and the bottoms is not the right strategy if you're a fundamental long-term investor. So I say stay put.
I'm just pulling numbers out of my memory. Hopefully I'm right, but the pricing of the IPO at 108 was 256 times the FY25 price to earnings, if I remember correctly, which is not cheap, to say the very least. So point well taken, Samir. Question from Vijay, who's writing in from Chennai, and asking about Dr. Reddy's Laboratories from a 6-month perspective. Vaishali, is this a good buy at the current level if you're considering a fresh buy at 1,200 levels?
I'll just have a look.
Yeah. Let's, in fact, while Vaishali is looking at it, let's pull up the longer term charts to see how this is done in the year so far. And it is up about 6%. So like the rest of the pharma pack, in fact, among the larger frontline companies, not having done too much. Vaishali, you have a view?
Yes, I do. So I would say a long-term trend is still intact. Keep a stop loss of 1140. And I mean, overall, I think pharma sector should continue to do well. So I guess from here on, it is a stop loss of 1140 and look for a target of at least 1300 from here on to start with. Once it crosses 1300, we can have a relook, and then we may have a projected target of 1350 to 1400. So for at these levels, I think nothing much to lose. Hold on.
Okay. All right. I'll take one more question, and then Atul is called from Bengaluru. I'll come to you, Atul, in just a bit. But we've got a viewer who has written in asking about BPCL and whether it is a good long-term buy. He's already gotten an average price, I believe, of 300, which is not too far away from the current market price. Do you have a positive view on this, Samir?
So honestly, I'm not a big fan of the oil marketing companies, but also given the fact that refining margins have probably bottomed out and could start moving up. Look, BPCL also has the refining business, which can continue to do well going forward. So the probability is the stock could probably move up closer to the 330 levels in the next 1 year, although that's not our target price. I mean, we still believe we're not very positive on the overall businesses. Because of one, government interventions that come in from time to time, two, because this business is eventually going to start seeing a decline once the electric vehicle side of the business picks up. So growth may not be as great. It will take time for all of these things to play out. But if you're a long-term investor, I think if you get 330, take your money and get out, find better investments to make, because I don't see long-term growth in the counter. If you're a trader, I mean, I'm sure you can probably trade in and out because the stock is going to move within a range between, I think, 260 to 330.
All right, comprehensive view on BPCL. Hope that answers your question. Atul from Bengaluru has called us. Atul, good morning. You want to know about CDSL and you bought at 1,440. First of all, is this a long-term buy that you made?
Thanks for taking me in. So CDSL, I bought it just before the bonus is issued, and that it is basically long term. On top of that, if I can add one more,
yes.
I bought Netware Technology, which I bought it at 880. So I'm basically looking for long term. So in case you want to share some views.
We generally, Atul, sorry, but we generally stick to one stock per viewer because of the time constraints here. So let me take a question on CDSL. You wanted to know about Netware, but there's another question that has come through, so I'll take that probably over the course of the next half an hour or so. CDSL for the long term, bought at levels of 1,440. Samir, on the fundamentals, would you hold on to this? He's handsomely in the green right now.
Well, I think he said he bought it at 1,440 before the bonus issue. So maybe if you do the adjustment of the price, it would probably be even lower. So I think the profits will be even larger.
Yeah.
But having said that, look, this is a business that that doesn't require further capital, right? It's a duopoly business, NSDL and CDSL. Now, there's a lot of talk of the NSDL listing coming in the next 6 months to a year, or even sooner maybe than 6 months, but it's expected in the next year, and that could lead to some amount of re-rating. CDSL is the largest player in the space, and in India, if you ask me, the number of demat accounts are growing and will continue to grow because there will be further investments. Plus, if you talk about the fact that you're going to have insurance moving in, coming into like a demat kind of a format, then to have all of that, you will find new account being opened, which will lead to revenue generation for CDSL, of course. So operational leverage is quite strong. Growth opportunities are quite strong. Where we find a bit of discomfort is valuation. So what could probably happen is the stock could go through a sideways movement to a slight correction. But if you are a long-term investor for 3 years, I say stay, hold on. The valuations will, the earnings will catch up with valuations, and then you could probably have another run also to higher levels. But like I said, only valuation concern, otherwise it would be a buy.
13% just over the last month. Atul, hopefully that answers your question. Ria has got a question on good intraday stocks. Anything that looks attractive to you, if not intraday, then from the shorter term perspective? And there's also a clarification that she has sought on C2C, the SME IPO. Of course, the regulator stepped in, as you know. If you've been on the website ndtvprofit.com, then you will know that the IPO was cancelled, and the regulator has stipulated that the money that has been collected during the IPO process must be given back. So if you have subscribed, you will be getting your money back. Vaishali, on the shorter end of the spectrum, would you see anything that is interesting?
So, well, I would not be so aggressive at this juncture because, first of all, market is vulnerable to, we are approaching the expiry of the future contracts. But having said that, there are few stocks which are technically very well placed, especially today. We have seen a good pickup coming in Exide Industries. Overall, all these battery stocks have taken a good beating. So one of them is Exide. That would be a recommendation. My trading strategy would be with a stop loss of 420, look for a target of 450. Among the cement category, we are seeing Ramco Cement has been an outperformer and it is sustaining above the breakout levels. So have a look at that with a stop loss of 960 and look for a target of 1000. And if he's looking for a slightly positional trade, then I think Maruti and India Mart are they have not performed and they are pretty much close to the bottom. So these make a very favorable risk-reward wise trade as a positional trade. So these would be for a slightly longer period, but the other two, what I mentioned, is for a shorter term.
All right. Thanks so much, Vaishali, for that. Do we have time for one more question before? Okay, so we have to slip into a very quick break. Vaishali, as well as Samir, do stay with us and we'll come back to take more questions with you. Viewers, we'll be back after this very quick break. Do stay tuned.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Laurus Labs on any small declines up to 510, keep a stop loss of 500 and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Welcome back. You're watching Ask Profit on NDTV Profit, and this show gets you answers to all of your stock-related questions. We've thrown open the phone lines over the last few days, and we've had the opportunity to speak to a few of you. I've been very, very happy with the kind of questions that we've gotten so far. Let's see if Ram from Chennai has got a similar question. Ram, thanks so much for holding the line, and thanks so much for calling me this morning. How can we help you? You have an investment in IndusInd Bank, right?
Yeah, thank you so much for this program, and this on-call is really helping. I've been watching this program with WhatsApp for almost a month now. It's very helpful for a layman like us who is trying to learn. So you are giving very valuable information for investors like us.
I'm glad to hear that. I'm glad to hear that.
Yeah, so on the IndusInd Bank, yes, I bought it mid last year, wherein the private sector banks were doing good, like along with the KVB and this and City Union. With a long-term perspective. And now, off late, I'm seeing that, a lot of public sector is picking up while private sector is lagging. So what is the strategy that I should do here? Should I hold this IndusInd Bank with a long-term of 1 year plus, or average it, or exit?
Okay. Ram, just a few follow-up questions so I can understand why you have picked up IndusInd Bank. This is based on the fundamentals that you have chosen to buy IndusInd Bank?
Yes, it was. Like last year mid, it was prior to the election results. It was really with the deposit ratio and the loan ratio were really good. So considering that, I've invested in this along with a few others like IDFC First and Karur Vysya Bank.
Got it. Understood. Samir, I'll come to you on the fundamentals then. He's bought at levels of 1,140. The stock is currently trading just about that 1,000 mark. But off late, you've seen a little bit of trouble on the loan book side in terms of delinquencies, and IndusInd Bank has not been able to miss out on that or remain unscathed in that. So would you say that he should continue holding or are there better plays? He already has IDFC First. If I remember correctly, you like IDFC First. I'm not sure if I'm right.
You're absolutely right, Alex. I like IDFC First, but I also like IndusInd Bank, right? So let's be honest, IndusInd Bank has not had that much of a rise of NPA that, the street has hammered the stock down by over 40%. And I think in the last, not 40, maybe 30% in the last, say 2 months. Now, where the problem lies for them is they have reduced their loans towards the microfinance segment, which is the high yielding book for IndusInd Bank. That is the Bharat Financial side book, right? So when that happens, your higher yielding interest earning assets go down, your NIMs compress, and which is what happened in the current quarter. What they have also done is they've taken an enabling provision for any risk to the microfinance book that could arise over the next 3 to 6 months, so that they don't have to provide aggressively when the actual loans may turn default. They not necessarily they will, but they could. So they've taken a bit of provision. Now, the street obviously didn't like that. They didn't like the fact that the NIMs have come under pressure, because that means the guidance that the management had given obviously will not get met. So I agree that yes, a correction could have come, but not maybe this large. I believe the microfinance business will continue to grow over time. It'll take another 3 months, maybe another 6 months before it bottoms out and stabilizes and bottoms out. But you got to remember that IndusInd Bank is not only a microfinance lender. They're also lending to other businesses. They have housing finance loans. They have the jewelry business where they give a lot of loans. They have the auto vehicle financing, which is the biggest part of that portfolio, which is continuing to grow. So look, they will be able to scale up some of the other businesses, although this part of the business may struggle. So for me, it is a buy. The valuations are very, very attractive. Disclaimer, I have been buying at these falls. So maybe there is a slight bias, but I am very, very positive. I think somebody should hold on to IndusInd Bank. Now, coming to the second part of the question, which you asked, Alex, is IDFC one of my topics? It is my topic in the mid-cap banking space because of the growth that they're able to do, not only in deposits, but also in the loan book. And they are very, very aggressive in provisioning. So, they have provided there's a certain part of the book that that is a little overdue. They have provided 90% of that as provisions in the last quarter. So even if they turn NPA, he's more or less done with all the provision that he needs to do. So now what you're going to see is profitability increase. And if those don't turn into NPAs, he's going to be able to write all of that back. So according to me, IDFC First Bank valuations, again, very attractive. So both of them are a buy. But since the question was predominantly on IndusInd Bank, I say hold on and buy an average whenever you can.
Yeah. Good thing is that he holds both, Samir. So point well taken. Ram, hopefully that answers your question. We've got a quick question that I want to take from WhatsApp, and this one's for you, Vaishali, on HAL. Hindustan Aeronautics and quite a few of the defense stocks are up and about in trade today. Sarita from Hyderabad has bought at levels of 4,556. She's got 34 shares, and she's wondering whether to sell at this price because she's seeing a bit of a loss, not too much. As these things go, but she's looking for a stop loss as well.
If you are a trader, of course, you need to check the levels minutely. Currently, what we are seeing, it has seen a good run up right from 4,000 levels to now. So technically, I would say there is a resistance at 44.70. But once we see the stock moving above that, I think it's ready for further higher targets to 4,600 and 4,800. So depending on your time horizon, one may take a call. And as far as the stop loss is concerned, well, it comes pretty low, 43.20. So that is the near-term stop loss. So hold with a stop loss of this. And I would say actually overall full defense sector, to call it BEL, BHEL, HAL, in fact, even the Garden Reach and Cochin and Mazgaon, they are all doing very well. I would say these are the stocks that one should keep in their portfolio for a longer term perspective.
All right. And as you pointed out, the entire space is buzzing today. I promised one of our callers, I can't remember exactly who, but I said that we would look at NetWeb Technologies because we've got a question from Chandan and he managed to get allocation at IPO stage and the stock has done pretty well. It's gained quite substantially from that point. Hopefully, Samir has a view on this. Samir, the question is, would you take money off the table if you've got an allocation?
Sorry, I don't have coverage on it, so I request you take it to a technical.
Do you have enough to talk about this, Vaishali? NetWeb Technologies currently? Yeah, okay.
Yes, in fact, today there is substantially a good volume. I would say hold with today's low as stop loss, and I think it's in all likelihood it's ready for, it did make an attempt for a breakout. So it's ready for a breakout, and if it sustains at about 3,000 levels, this could probably go to 3,200 also. So keep today's low as stop loss and continue holding. There is nothing wrong with the chart. In fact, it's above all the cluster of moving averages. So right now it's showing strength.
I believe we've got a caller from Chennai. Bhaskaran is joining in. Bhaskaran, good morning to you. I believe you've got a question in the banking space.
Yes, good morning. Among the Canara Bank and Indian Bank, which one is better for the region of 1 year?
For 1 year, okay. And you haven't bought either of these right now, right? Just clarify.
Yes, both I am holding, both I am having. I wanted to invest some more in among these two.
Understood. Okay. So let me take your question, Bhaskaran, to Vaishali on the charts. He's holding both of them as he's pointed out. I do not know exactly what price, but the question effectively is, if you were to deploy more at this stage, which of those two would you pick?
So, well, I would say overall, full PSU banking sector has shown good corrective move. And chartically, if you ask me, both are on similar pattern. So I would say, well, distribute your stocks in both, money in both these stocks. And once the PSU sector starts moving, you will see rotational move coming in almost all these stocks. So I would say my view would be to add more in both.
And more in both. All right, that's a view. VLE Governance and IT Solutions is the name of the counter that we're looking at. Unfortunately, it's a very small company. Market capitalization of 1,600 crore rupees. And Harjeet has got a question. Harjeet has bought at a price of, oh no, not even giving me the price, of 400 shares. Any chance you have a view on this, Samir?
Sorry, again, no coverage on
okay.
this one.
Do you have enough to talk to us about this, Vaishali, on the charts?
Sorry, come again. It is, you said VLE GOV, right?
Yeah, that's right. Yeah, it's gained quite substantially in the year to date, as much as 132%.
I would say keep a trailing stop loss. Right now it is getting into a consolidation. We saw some profit booking. So the near-term stop loss which one can look at is 145. If it goes below that, then it can get into a negative territory. But the range right now would be 160 as resistance and 145 as stop loss. So either ways, the view gets decided. If it goes above 158, 160, it's ready for further up move. But if 145 levels break, then it's time to exit for some time.
Okay. We've got another caller from Hyderabad. Shweta is joining in. Shweta, good morning to you. I believe you want to know about the railway space?
Yeah. Good morning. Very good morning.
What specific? Good morning.
Yeah.
So what specifically would you want to know?
Yeah, actually I bought all the Titadra, Texmaco, Jupiter wagons. All of them are around 25 to 30% loss. I'm holding them. As I can see, again they have started picking up. Should I wait till I cover my losses, or where can I exit and book little losses?
Okay. Just a clarification, Shweta. When you bought it, did you think that you would hold it only for a short time, or did you buy it based on the fundamentals of the stock?
Actually, both.
Okay.
Because as I can see huge development in the railway sector right now.
Yeah.
So, and the order book of all these three stocks is very good.
Yeah. So,
and I think the momentum is also very good when I bought them. But as you know, suddenly all the stocks took a hit. So
yes.
I just want to know whether they can recover all the losses, 25 to 30%.
Yeah.
Can we see upside from now? Or should I book losses?
And just a quick clarification, if the advice to you were to be to hold, how long can you hold it for?
Maybe probably 1 year I can hold. No
1
problem.
year you can hold. All right. So Samir, it's a tough question for you. Whether or not a recovery of 30% is possible, not necessarily a tough question for you. You probably have an easy answer to this, but more to do with the stocks that she's invested in. Maybe a tough ask, would you say, 30-35% in a year's time?
Yeah, I think it's a very tough ask to get that kind of recovery, if you ask me. Look, we do not deny the fact that the whole railway push by the government of India is seeing a lot of traction. You're seeing order flows very strong, or good order books for these companies. Execution for the next 2-3 years is comfortable. And going forward, also, we believe that a lot of these companies, maybe for the next 5 years, will have no problem with order inflow and execution of a lot of these things. But the problem is valuations had run up far ahead of what fundamentals justify. So it's more important now for the earnings catch up to happen, which will take a year's time plus. So you'll see operational efficiencies for all of these companies come in, because as the volume uptake happens, the gross margins, which are quite strong, will eventually start trickling down into the profitability. So I'm not denying the fact that it's good, but if you're asking me, am I going to get a 35% upside in any of these counters which are trading at about anywhere between 40 to 50 times earnings? Very difficult for a fundamental analyst to say, yes, it's going to happen. So for me, although the person is making a loss, I think there are better opportunities where valuation comforts are slightly better. You could probably consider booking a loss for the time being and entering these stocks when they correct a little bit more. Because I'm expecting the valuations to come off a little further as well. We already know that government spending has been a little slow in the first half, which is expected to pick up in the second half. If it doesn't pick up on the railway side to the extent that we are expecting, maybe then you could see the stocks coming off. So I would say at the moment, one can book some amount of loss and maybe find something else. But would I expect a 30% return? No, I don't.
Okay. Do remember, from a tax perspective, it's not always a bad idea for you to take a loss sometimes. You can actually set that off against capital gain if you do book that, and there's quite a bit of that. We can take that up at a later date. But let me get to the next question. It's on Vodafone Idea, and this is a question coming in from Satesh, who's writing in from Puducherry, I should say. He's bought at levels of 11.18 rupees per share, and he's holding as much as 25,000 shares. This is a tendency to buy a significant quantity of a relatively low ticket price share. But Vaishali, on the charts, he's already undergoing quite a bit of loss despite the kind of recovery that you saw in trade yesterday. Would you say that he should hold on?
I would not think so, because actually it's in a downward trajectory. And well, with yesterday's gap up opening, I would say just take a chance, because now that he's holding, continue holding. Exit around 859 rupees, because I don't see much of a trend coming in over here.
Okay, Satish, so that was Satish's question. Amara Raja Batteries is a question that is coming in from Mr. G.S. Dutt, who's writing in from Eluru in Andhra Pradesh. He's looking for a short to medium term outlook. He's bought at a price of 1,270 just a few days back, and he's looking for a technical view. Vaishali, on the charts, how does it look?
Also recommended Exide and Amara Raja also. So I think they are both on a similar pattern. And I think now that auto industry is totally going down, good correction coming in. But these are the levels I think market is showing signs of stability to start accumulating.
Okay, all right. So that's the view on Amara Raja as well as Exide as well. Kumar from Chennai is joining us on the phone line. Kumar, good morning to you. And the question is about Ujjivan Small Finance Bank. Is that right?
Yeah, correct.
Go ahead. What do you want to know about it?
Yeah, so I bought this stock considering the tactical thing. Banking sector is at a valuable, the valuation is really nice. So I want to know what is the technical level for the next 6 months to 1 year time period for Ujjivan, and it's also available near the book value. So that was the logic behind getting into the stock.
Understood. So your time frame is 1 year, correct?
Correct.
Okay, and are you planning to hold this, or are you planning to add more at this current price?
No, I'm planning to hold this.
Okay, so you've got 500 shares. Let me go across to Vaishali to get your technical view for Ujjivan Small Finance Bank for 1 year perspective. Bought at levels of 40, given up a little bit of ground from that point, now at 33. Vaishali, would you hold on?
I would personally say shift to the frontline good stocks like, in fact, Kotak Bank or HDFC or SBI, because those are really giving us a hard time, giving us good returns at this juncture. So I think can be a miss at these levels.
Okay, and HDFC Bank already has recovered, in fact. Ola Electric is the next counter that we're talking about. Ajit is asking about this. He's bought at elevated levels at 120 or thereabouts. He's got 1,000 shares. He's got a holding period that he anticipates will be about a year or so. Ground to recover, but is that possible on the charts? Vaishali, do you have enough data to talk about this?
Yes, quite a bit actually. I would say that the stock saw a good beating. 70 is the level where it has been showing a cluster of support. And today we are seeing an exceptionally high volume. So I guess very gradual. The near-term resistance would come at around 90 to 110. Above that, once again, we are ready to see 120. So I said now that if he's holding on for so long, continue holding.
Pradeep Kumar is joining in from Kerala, and he's asking about Cochin Shipyard. Pradeep, what was the reason why you bought into this counter? Is it fundamental, and you didn't like any of the other shipbuilders?
Good morning. First, I really appreciate you, NTTV. You guys giving really very, very helpful advice and everything. Thanks to you first.
Thank you so much, Pradeep.
And my question actually, I saw the last 4 days, and the Cochin shipyard is going to most of the upper circuit.
Yes.
So I believe that's still going up. I don't know in the future. Of course, I believe positive thoughts in that about the Cochin shipyard. And I have Masadok also. I keep in Masadok. Some PUC sector.
Okay.
And some another sector.
Okay, so but Cochin shipyard, I'm just curious. What do you want to know? Do you want to know whether to exit at this point? What is the time frame that you have in mind?
I don't really want to exit from this right position because I saw some, there is a lot of fake news coming in the online media, and they say it's going to be 100%, and Indian share markets, everything going to up soon. Yeah, I believe soon. But my question, is it the bearish trend is going up Indian market? That's the first question. No, I mean, it's not question mean. The Cochin shipyard, what is the future?
Okay, got it. I got your question. Pradeep, thanks so much for your kind wishes and for talking to me this morning. Pleasure having you on the program. Vaishali, what's the view on this one? Because like he's pointed out, it's been gaining quite substantially. It's up and about in trade today as well. What are the charts indicating as to how far it can go right now?
I think all these stocks, as we mentioned just during the beginning of our talks, Cochin Shipyard, Mazgaon, they are all showing signs of revival once again. So I would say, well, continue holding. In near terms perspective, 1650 to 1700 can be the target. And if a longer term perspective, if time is not the problem, continue holding, you'll get much higher returns because overall the trend has been very strong. We saw very good retracement and it's showing signs of reversal.
Okay, all right. NHPC, I'm going to take this very quickly. You've already given a view, Samir, on IDFC First Bank, and you're positive on that. It's your top mid-cap pick. So, Phanindra, you should know that Samir is very positive on this. But what's the view on NHPC? Would you suggest a fresh buy at this level?
Yeah, one could take a call and probably initiate, start accumulating it. We have seen a decent correction from the highs. It's a company that is into, again, renewable energy, but more on the hydropower side, which is also growing its capacity, which will, of course, take time. It's more capital intensive, more long-term gestation. They are also going to be doing some amount of solar power plants. And also, it is a much smaller size compared to what an NTPC power is. But I believe that this is a company also that will sit to grow. Operational efficiencies, profitability will increase. So one can make an investment with a target price of maybe 110 from a 1 year perspective.
Okay, I believe we've got Sanjay who's calling us from Gujarat. Sanjay, good morning to you and thanks so much for calling us. What can we help you with today?
Yes, I have Bank of Baroda from the COVID time.
Right.
And that my average purchase is 51.17 rupees. 51.17, 51.17.
Okay, understood. And so you are looking at holding this for the long term and you just want to know whether or not you should do so, or whether you should book profit. Is that right?
No. I want to book partial profit or not at that time, but I want to hold the long term.
Long term. And you want to know whether this is the best investment to make or whether there are other opportunities available.
Right. Best investment to stock hold or not.
Okay, understood. Samir, you've already given a view on quite a few of the banking names. Bank of Baroda bought during COVID time, so a substantial amount of gains being made here. It's phenomenal. I mean, I'm practically speechless. But would you say you should take some money off the table? Are there better opportunities, faster growth in the banking space?
So there is faster growth in the banking space in the private sector banks. We discussed IDFC. I told you HDFC remains my top pick in the large cap banking space from a long-term perspective. But should you sell Bank of Baroda? No, I don't think so. Look, it's trading at about 1x book value. The bank is growing. The deposit base is growing. I believe these PSU banks could probably look at a re-rating. We've seen a bit of a correction recently because of some amount of negative news flow, first of all, with government coming. I mean, the government saying that insurance products should not be missold by these banks, which has been happening. So maybe that some amount of sales slows down there that could hurt in the near-term profitability. But eventually, I believe these are good businesses, strong businesses, which will grow. I say hold on to it. If you have additional capital, look at private banks. I think the growth will be faster, returns will be better, but this is a safe investment. We should continue to go, so hold on.
I believe we've got Arjit and Amit also on the phone line. Unfortunately, guys, we're completely out of time on this edition of Ask Profit. And hopefully what we've discussed so far with Samir as well as Vaishali is going to help you out. On that note, Samir and Vaishali, let me thank you. Thank you so much for taking the time and speaking to us as always on Ask Profit. Always a pleasure hosting you on this program. That brings us, as I said, to the end of this edition of Ask Profit. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Laurus Labs on any small declines up to 510. Keep a stop loss of 500 and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
We're now in conversation with the management of a newly listed company, NTPC Green. Now, the IPO stood at a total issue size of 10,000 crores. And to speak about the road ahead, we're joined by the Chairman and Managing Director of NTPC and NTPC Green Energy, Mr. Gurdeep Singh, as well as the Director of Finance, Mr. Jaikumar Srinivasan. Welcome to the show and congratulations on the listing. Let me start off by asking on how the 75% of the proceeds will be used for debt repayments. How will these debt repayments be carried out forward?
Good morning. Yes, we have indicated about debt repayment initially. Broadly, this 10,000 crores would be utilized for capital expenditure only because we have a huge capacity addition planned up. But on a more immediate basis, when we mop up this money, we'll be retiring some of the debts on the balance sheet. And subsequently, when the capital expenditure happens, we'll have to again go for the fresh loans.
Got it. Let's talk about the capacity under construction and under pipeline. 14 gigawatts of contracted capacity, 9.2 under pipeline. What's the kind of mix in terms of solar, hybrid, and other various types of renewable energy projects? And is there a targeted mix that the company aims to get at?
The capacity, as was indicated, right now we have operating capacity of 3.232 gigawatt, and we have another 13.58 gigawatt under construction and awarded, and we have a further portfolio of in the pipeline of 9.18, which we are working on. So there is a visible pipeline of around 26.08 gigawatt. So this is what we are working on. Predominantly, this would be comprising of solar capacity, so you can roughly take a ratio of 80:20. 80% will be coming through solar, 20% will be through wind, and there will be some element of storage component in that.
Got it. And from my understanding, on average, how much revenue does the company earn per megawatt in terms of solar energy?
Can you repeat the question?
How much revenue does the company earn or generate per megawatt in terms of solar energy?
We generate, I can tell you in terms of EBITDA per megawatt, it will be around 65 lakhs per megawatt.
Got it. And you have all of this capacity lined up. How is the future capacity expansion coming into place? What are the targets and how will the yearly capacity additions take place?
See, it is like we have set out a target of 60 gigawatt as a broad plan up to financial year 32. But on a more immediate basis, I was explaining to you that we have a capacity under construction of close to 13.5 gigawatt, a further 9.18 gigawatt which is under negotiation, so a total gigawatt of 26 is there. And as far as the commissioning is concerned, this year we'll be commissioning 3 gigawatt. Next year we target around 5 gigawatt, and the year next it would be 8 gigawatt. So that would be, so by the end of financial year 2017, we hope to have a capacity of 19 gigawatt.
Okay, good. You know, you mentioned
going further, it will be we'll be ramping it up to 60 gigawatt.
Got it, sir. You know, you mentioned, the ambitious capacity expansion plans. What kind of capex does the company expect in FY25 and for the next, 3 to 5 years?
See, in terms of profitability, the PAT return is around 16%. So that is the kind of, and I mentioned to you about per gigawatt, we are having a EBITDA margin of close to 80 to 90% is our EBITDA margin. So a similar kind of a returns you can expect from the added capacities over the next 2-3 years.
Got it. And in terms of capex necessary to put up these capacities, what will the company incur in FY25 and going forward in the near term?
Incur in terms of investment?
Yeah, capital expenditure to set up these projects.
Capital expenditure would be, as far as I mentioned that we are maintaining a ratio of 80:20 for this identified capacities, and roughly 5 crores per gigawatt is the capital expenditure as far as solar is concerned. As far as wind is concerned, it would be on an average 8 crores per gigawatt.
Got it.
Sorry, 8 crores per megawatt.
Got it. And the company is also foraying into green hydrogen and battery energy storage. What's the outlook here? And could you give us an updates on what the company is working on in these two new energy spaces?
See, as of now, if you are just considering, we had been just only giving the details about 2030, where the solar and wind is predominantly. But now this there is this is storage capacity which is becoming viable, and we have started a bidding process on that. But going forward, the green hydrogen and green hydrogen-based derivatives will start playing its important role, but it's going to take about next 4 to 5 years at least. So as of now, we are not showing the major investment into that. We have already acquired 1,200 acres in Pudimadka, which is Visakhapatnam, which we have invested around 1,000 crores in that land, and we are developing that. So this is the developmental exercise. But if you go forward by 2030, there is a capex requirement of going up to the tune of the 5 lakh crores. The 60 gigawatt itself by 2030, it's going to require around 3.25 lakh crores in a total investment, and then there will be green hydrogen-based molecules, and there will be also the storage capacity, which is going to be both in case of battery and pump storage. And we are also working on some other solutions for the storage, which is thermal as well as some of the carbon dioxide waste, like the pump storage on that.
Got it, sir. The company also inked an MOU with the Chhattisgarh State Power Generation Company for Renewable Projects. Could you give us more insight on what the MOU is about?
Yeah, I think Chhattisgarh is as late as yesterday, and it is, to start with, it is a small quantity of about 2 gigawatt, but going forward this will also be 10 gigawatt plus, because we are also targeting about the floating solar. There are many reservoirs in that in addition to the land mounted. But as you will be knowing that we have already entered into the joint venture agreement with the state of Rajasthan, state of Maharashtra, and also state of Andhra Pradesh, where we are adding 25 gigawatt in Rajasthan, 25 gigawatt in Andhra, and around 20 gigawatt in Maharashtra. So put together, we are also lining up, this is huge land bank and the going forward, the adding to the capacity. So this is a tremendous growth potential in the sector, and we will be able to work very fast in this area.
Got it. So, I also wanted to get an understanding on how the bidding pipeline is looking like. What kind of new orders or order inflows does the company expects, and the kind of tenders that have been floating around? What's your outlook there?
See, as Director Finance just mentioned, that we have the immediate target to commission 3 gigawatt this year by March. Next financial year we'll be adding 5 gigawatt, and then FY27 we will be adding around 8 gigawatt. And the work is in progress so that we are able to reach to 60 gigawatt, not by 2032 what we had earlier said, but by 2030 itself. So there is a parallel work which is going on, whether it's a making the land availability, this evacuation facility, and then going for the bidding process as we planned to synchronize the land plus the evacuation facility.
Yeah. And lastly, I'd like to end with, what are your expectations in terms of your financial performance for FY25 as a whole?
See, I'm not able to just get you clearly what you have said, but I think if it is going to be what you are asking, we had been able to increase our like in FY22 we had the operating revenue of only 910 crore, which is in FY24 it is 1963 crore. And on the PAT basis also this is increasing from 95 crore to 345 crores. So there is a very this fast growth in these areas, because we have made all the available resources ready, and then only we had started the work. We are not started something that we are beginning and then waiting for the resources to come in.
So we are maintaining a good EBITDA margin as well as PAT margin, and looking at the growth trajectory, the financials are going to be much better.
Right, that's of course NTPC Green, newly listed, but let's switch focus from renewable energy to pharma, as well as healthcare, and we'll also touch upon a little bit of the diagnostic space. But we have Sumit Gupta with us, Associate Vice President of Research at Centrum, to talk to us about all of this. Welcome, first off, Sumit. Want to talk to you, and we'll break this conversation up, right? We'll talk about pharma first. With regard, and I'm also joined by Varsha Chandani, so, as part of this conversation. So thanks, Sumit, for joining us. First off, with regard to the Q2 numbers, right? Overall, a good set posted by pharma, operating leverage improving, but growth driven by US markets. Sustainable, how will H2 play out, and what changes, given that there's going to be a change in regime in the US?
Hi, Arj. Thanks for having me. So regarding the pharma companies, overall, if you see, majority of the growth is led by like US pharma. And if you see domestic, that is kind of being subdued. So if you see the latest IPM numbers, which were there in the month of October, so IPM grew by just 5%. And majority of the growth is led by the chronic therapies. And the companies focused towards chronic therapies are continuing to outperforming the IPM. If I talk from US point of view, it remains basically, you can say, opportunity specific play in terms of company to company. So let's say for Sun Pharma, specialty continues to do well, while for some other companies, let's say Cipla or some others, Dr. Reddy's, so it remains on like very opportunity specific or drug specific. So we need to see how each company is, the portfolio of each company is faring. And if you see going forward, I expect US pharma to do much better versus domestic pharma within the large cap space.
Right. Well, Sumit, what opportunities do you foresee when it comes to, CDMO space with the introduction of US Biosecure Act?
So with the introduction of US Biosecure Act, you can see that there is an increased RFPs or whatever inquiries for like basically it's a China plus one opportunity. So companies are diversifying their logistics. So they want to de-risk their overall channel. So the companies are seeing basically increased requests for proposals and other queries. So it's a significant opportunity, but overall, if you see, it's a long-term opportunity over the next 8 to 10 years down the line.
Also, Sumit, so I was reading a report wherein government is actually aiming to double Jan Aushadhi stores. So now, how do you see the increasing penetration of unbranded generics impacting branded generics?
Yeah, I think the impact is currently also the impact is there. So if you see the latest IPM numbers, the growth was just 5% on a YY basis. So it is getting reduced versus, let's say, the growth was around 8 to 9% a few months back. So if you see Jan Aushadhi, this push from government is leading to decline in volumes for all the pharma companies, or at least for the Indian pharma companies and the Indian market. So we need to look on that aspect. So I see going forward also the impact will have this particular Jan Aushadhi will have a negative impact.
Will it impact the most, Sumit, in terms of players?
In terms of players, I see companies more focused towards like acute and like chronic continues to do well. However, the growth of chronic also has reduced from a double-digit margin to high single-digit. So we see like companies like JV Chem also to have some kind of moderate impact, but still it continues to be a large topic in the mid-cap pharma space.
And any other names which you believe will have an impact?
Yeah, all the companies which are focused towards Indian pharma companies, such as Sun, Cipla, Reddy's, all these have negative impact. I think Reddy's will be having a negative impact in the Indian pharma company.
And GLP-1, do you believe that stronger growth expected as a result of that? What's the potential like?
Yeah, so GLP-1 has a good good opportunity. So if you see, the patent is getting expired in 2026 and majority of the opportunities there in the emerging markets. However, in the developed market, just like US, so it will be coming in 2030. So if you see GLP-1 opportunity, all these semaglutides, liraglutides of the world, so these are continuing to be focus area for all the pharma companies. Be it Sun, Cipla, Reddy, Lupin, everyone is there excited about this opportunity. And in the near to medium term, let's see how it pans out.
Also, Sumit, the potential impact of Trump tariff on pharma companies. So now, will companies absorb the higher cost, or their margins will be affected, or their sales, that is the realizations, will be affected? What do you think?
I think Trump tariffs are majorly on the China market. So China so that will have a good impact, positive impact for the Indian pharma companies, considering, let's say, Indian pharma companies contribute around 40% to the total volume share in the US market. So Indian pharma companies will likely benefit from it, considering the push from China to other countries. And companies can, even if there is some increase in cost, they can pass on that to the customer.
Sumit, so many companies are actually speaking about the price erosion. They've seen single-digit price erosion. Now, what is your view on the same, and how this will, impact Indian pharma companies?
Yeah, so the price erosion has come up. So basically, it was like 1 or 2 years back, it was at around mid-teens kind of price erosion. Now that has stabilized to around mid-single digits. So that will continue to be the trend over the next over the next few quarters or then in the near future. So I expect like 5 to 6% kind of on a blended basis. Company specific, it might be some up or down, but more or less from sector point of view, it will be in mid-single digits.
You're suggesting that the fact that tariffs may actually go up for China is a positive for India. So fair, we take that. But what about tariff on India? What's the likelihood of that? Or you believe that very slim kind of likelihood of that coming through? And which companies will be most impacted broadly?
That might come, but I think the kind of generic opportunity that is there in the US for Indian companies, that will likely absorb that particular impact. So Indian companies continue to do well. So within what I feel is the companies focused towards US pharma are much better position versus companies for focused toward domestic side.
And names, if you can give us the ones which you believe will be most impacted.
Impacted
Positive
would be around,
and negative, if you can give us both of those.
So positive, I think Sun Pharma remains a top pick in the large cap space, and Dr. Reddy's continue to considering the FY27 the pipeline it has, considering the Revlimid opportunity getting expired in FY26. So post that need to see on the pipeline. However, Sun Pharma continues to be a top pick.
Okay, Sun Pharma top pick. Let's switch over to hospitals. What stood out for you with regard to Q2 in terms of hospitals and overall their numbers?
Overall, very good set of numbers on the hospital space. If you see occupancy also letting grow despite a good amount of expansion, be it on the brownfield or on the greenfield side or on the M&A side. So occupancy remains good. Second is ARPOB growth continues to do well. And if you see on the margin side also, you have seen expansion in margins on the annual as well as sequential basis. And most importantly, EBITDA per bed increasing at around 12-13% kind of growth. That is really good.
Also, Sumit, so with significant PE investments in hospital, what do you think will drive growth in the sector?
So hospitals as a sector as of now is currently very, it has so many tailwinds for the sector. For it's a long-term play on the Indian healthcare space. So the bed density is very less. So in that sense, it continues to be a play. And with respect to the private equity players, it has been a kind of significant interest from PE side. If you see in the recent past, also over the last 3 to 4 years, 5 years before, also there are a significant interest which PE players have shown, and I think the trend will continue to go forward the same.
What are those names, Sumit, which stand out for you in this space? Because there are plenty of names, high growth, some taking on debt, some staying away from it. So it's a mixed bag, some going greenfield, some focusing more on brownfield, but the expansion is clearly there across the board. So what are those names which stand out for you?
Yeah, so my topic in the sector is Artemis Medicare. So it's a small cap company. So point is what they have done is they have introduced a Tower 3 facility. Now that is operationalized. So now that they are also expanding into Raipur, which is emerging as a healthcare hub in the central part of India. So I think the kind of expansion that this particular company is doing, it is really expanding from currently 800 beds to nearly 2,000 beds over the next 3 to 5 years. So I think it has more legs to grow, and overall the profitability also is expected to grow. In terms of the overall sector, if you see, there is a lot of expansion that is there for across the companies, be it like Apollo, Max, Narayana, Vedanta, everyone is doing it. So it depends on hospital, like the kind of capex that they are doing. So brownfield, the companies doing brownfield are expected to do much better versus that of greenfield.
Sumit, also any view on Aster DM? The stock is up 5% today because of the increase in stake in one of their hospitals, Prerna hospitals. And even management has laid out 18 to 20% growth in their India business with a EBITDA margin of around 24% in next 3 years. Anything on Aster DM? Are you tracking that company?
Yeah, so we track this company. It's a very good company overall, very good business. The leader in the Kerala market, and now they're getting expanded to some other geographies also. So if you see, they have overall, their beat on the capex can be it greenfield or brownfield, they are doing good. And if you see, margins are getting expanded on by around 100-200 bips over the next 1 to 2 years, and EBITDA per bed also increasing. So we see increased operating leverage playing out for STDN.
Fair point. Now on to diagnostics. I know we have very limited time here, Sumit, so I'm going to try and squeeze in a couple of questions and have your answer maybe in a minute or so. Post-COVID, of course, numbers have come off on that higher base. FY22, FY21 were higher bases for these companies. What are your preferred picks and what's the thesis here?
So the thesis for diagnostics is post-COVID, you have seen a multitude of players which have come, be it on the digital side, basically just like Tata 1mg and all that competition out from hospital-based labs, or from pharma companies moving to diagnostics, just like Lupin Diagnostics there. So if you see over the last 1 year, the margins have increased for the incumbents, just like Dr. Lal, Metropolis, or Tharocare, or for Vijaya, for that matter. So point is, for diagnostic industry, the entry barrier is less. However, to sustain that margin or to sustain the overall profitability, it is a tedious task, and we have seen that in the numbers over the last 2 to 3 years if we compare that post-COVID. So I think the incumbents will likely to do well. And within my coverage, my preferred place is Dr. Lal, and followed by Metropolis.
Okay, thank you so much, Sumit. That's all the time we have, unfortunately. So thank you for coming in, speaking with us on this mid show. From Varsha, myself, everyone who puts the show together, thanks so much for watching, because we are out of time on this edition of the show. Stay tuned to NDTV Profit. More action on the other side.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Laurus Labs on any small declines up to 510, keep a stop loss of 500, and a positional target of 535 to 540 can be seen.
Through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
welcome to NDTV Profit. You're watching Hot Money. I'm Hiral Dadia, and with me is Puneet Javeri. Puneet, clearly, if you see from a market's perspective right now, 24,177 is what Nifty is trading at as we speak. In fact, Bank Nifty also pretty much flat at around 12 noon. So a pretty flattish day of trade is what we've been seeing. If you see the advance decline ratio, you have 19 advances on Nifty versus 31 declines coming in there. And overall, from a stock-specific perspective, Adani Enterprises, the top gainer today, followed by Adani Ports. And this is on the back of the clarifications that have come in. BEL, NTPC and Trent are also seeing some smart moves. What's trading under pressure? You have a ONGC, which is down and about in trade, followed by a Titan, Ultratech Cement, Britannia, as well as a Cipla, which are trading under pressure. Let's quickly look at the sectors and see what's happening across because, you know, IT has been in focus in today's session as well. But overall, you have the PSE index, energy, media. These are the top gainers. Pharma trading under pressure. Real estate, FMCG down and about. IT pretty much on the borderline. So that's with regards to, you know, the large cap space. Overall benchmarks. Puneet, what are the broader markets looking like?
Yeah, let's bring up the, you know, the mid cap 150 as well as the small cap later on as well, because we can see that the mid cap 150 is in green today, just trading with about 27 points of gains. Also the small cap also buzzing about 0.6%, doing very well, about 108 points. Let's look at the you know, winners of, you know, the Nifty 500 as a whole. Let's see what are the big winners as well as the losers in trade today as well. We are of course seeing a lot of you know, buying on the upside in the Adani group of stocks. So we can see that Adani Energy, Total Gas, Power are all up in trade today. Just seeing some pressure in, you know, the auto component stock, ZF Commercial, Prestige Estate also. There was a positive brokerage note, but that's not helped the stock at all currently. Godrej Properties as well, slightly under pressure. As the Nifty Realty as a whole is slightly under pressure. It has a very good run today as well, but you know, slightly under pressure here in trade today. But most positivity has been seen in the Adani group of stocks.
Absolutely. So positivity coming in terms of Adani stocks. But let's quickly look at the key themes for today. Firstly, a stellar recovery in Adani stocks. And that is what we will be diving in and getting you more details as to what's led to this recovery. On number 2, you have auto, which is in a fast lane, and this is on the back of the EV bandwagon. A lot of companies that have come up with launches. We will try getting you details on the same as well. And on number 3, it's interesting to see how auto win and a bonus pay has failed to enthuse the IT sector. So these are the key themes that we will be focusing on in today's session. But let's go on to the first one. Adani group of companies up and about in trade. If you see in terms of the stock price performance as well, let's quickly pull up all the counters. Adani Energy hit upper circuit. The stock is now trading with gains of around 8 to 9% as we speak. Adani Enterprises, Adani Ports, all of them seeing a strong up move in today's day of trade. There are no charges of corruption or bribery against Gautam Adani, Sagar Adani or Vineet Jain. That's the word coming in from Adani Green. But first, let's go across to Alex Matthew on what it means for the Adani group of companies, to simplify it for the viewers. Alex, over to you.
All right, so there's been quite a lot of speculation. There's been quite a lot of allegations that are being thrown around. And here I'm not just talking about what was said in the Justice Department indictment that came through. I'm talking about everything that came after that. The media reports that are claiming that Gautam Adani himself, along with Sagar Adani and Vineet Jain, have been involved in bribery. Now, there was a clarification that was issued by Adani Green earlier today, in which there is a very clear statement of fact. In no situation under the indictment that was sent out by the DOJ has there been a naming of Gautam Adani, Sagar Adani or Vineet Jain in a violation related to the Foreign Corrupt Practices Act or when it comes to obstruction of justice. Both of these aspects are criminal charges and would lead to quite significant repercussions. What they have been named in, and these are allegations I must point out, are civil charges, and those relate to alleged securities and wire fraud. Remember that there is a very significant, stark difference between a civil charge and a criminal charge. The criminal charge, in fact, is something that has very severe legal repercussions. Now, the understanding, of course, of that indictment has been flawed, as a result of which a lot of media channels or media outlets have gone ahead and cast aspersions on the group, and they've gone so far as to call it bribegate in certain cases, and that has been unfounded. There has been quite a big impact on the stocks, but investors today will probably be asking, was there much ado about nothing at all? Was there a mountain that was made of a molehill? Ultimately, legal experts have said that this is something that can be taken up over a period of time. The charges against Gautam Adani as well as Sagar Adani and Vineet Jain are lighter compared with what has been levied against the Azure Energy employees and the CDPQ charges that were leveled by the US Justice Department. There has been a reaction in the stock markets today, and that is for everybody to see.
Well, thanks for that, Alex. NDTV Profit has also been speaking with a whole host of experts on this particular subject. Top Supreme Court lawyers and market experts have been empathetic in their views as well on the US indictment against the Adanis, which is based on a very flimsy ground, as they've stated. Now, they have also stated that how in this particular time is a great time to buy the Adani group of stocks. Take a look at what expert lawyers as well as market watchers had to say earlier today on the channel.
See, madam, generally the charges seem to be that Adani company called Adani Green, which is in the business of supplying solar power, was bribing officials, unnamed officials of certain unnamed power companies, purchasers in India, and the idea was to get lucrative contracts for supply of power. इसके लिए ब्राइब दी गई, किसको दी, कहाँ दी, कितनी दी, ये कुछ नहीं है इसमें अभी। और क्योंकि इसमें अमेरिकन इन्वेस्टर्स हैं, अमेरिका की स्टॉक एक्सचेंज में इसका शेयर लिस्टेड है, इसलिए वहाँ की इन्वेस्टिगेशन ये दिखाती है, ये इनके खिलाफ चार्ज है।
Right. What do the charges specifically, say at this point? What are the charges against Adani's?
It is not specific at all. I told you, अगर मुझे आपको घूस देनी है और आप किसी कंपनी में हो तो मुझे आपका नाम तो देना पड़ेगा। तो ना तो आपका नाम है, ना उसमें पैसा इन्वॉल्व है, ना लिखा है कितना दिया और कौन सा कॉन्ट्रैक्ट मिला, कुछ नहीं लिखा है, जनरल है। अब या तो जनरल है या उनके पास और इन्फॉर्मेशन है, वो बाद में दी जाएगी, वो मैं कह नहीं सकता। लेकिन इन कागजों में कोई घूस लेने का नाम, पता, अमाउंट कुछ नहीं है।
In which counts are the Adanis named and not named?
Counts 2, 3 and 4, the Adanis are named. Those counts relate to allegations of conspiracy in securities, namely shares which are listed in the US.
Right, and count 1 and 5, sir?
I told you 1 and 5. One is conspiracy to violate the Corruption Act, and count 5 is obstruction of justice.
Right.
उन दोनों में नहीं है.
Right.
The US indictment does not at all suggest that there was any bribery in India by the Adani Group or its directors. There's no allegation about that. The allegation is that investors in the United States who subscribed to the bonds issued by Adani Green were misrepresented when in fact bribes were paid. Now, what they have suggested is not actually bribes were paid. So, if no bribes were paid, where is the question of anybody being induced on false representations to subscribe to these bonds? Because there is no offense alleged to have taken place in India. They say that there was a conspiracy to violate the Foreign Corruption Prevention Act there, FC. But there is no evidence even for that. What is the evidence which points to that inference?
So also the Congress is, at this point forming a JPC and wants to discuss about this in the Parliament with the winter session begun already as well. What is your understanding of that with the opposition going on about this indictment?
The indictment itself cannot constitute evidence for any further action in India, including a JPC. The indictment does not provide evidence of any offence committed by anybody in India. Right. If you come with that evidence, then on a consideration of the probative value of that evidence, action may be taken. But at the moment, there is no evidence.
It also means that the Adani group members like Gautam Adani and his nephew are not involved. in any foreign corrupt practices. And therefore, this is good news for the Adani Group. And obviously, even the other charges have to be still proved. They are simply allegations. And Adani Group has certainly said that they are not involved and they feel that these are wrongly applied to them. So I think the matter should now be more clear, because obviously you have to prove something in American courts. Everything has to be proved beyond a reasonable doubt. And unless there are actual facts available, you can't prove these charges.
Securities fraud conspiracy, wire fraud conspiracy, and securities fraud. All three are allegations. So it is the impact of that is much, much lesser than the impact of FCPA. So from a legal perspective, the charges, these three charges have lesser impact than the charges of FCPA.
More important is the issue that, the news has been carrying imperfect information which is impacting shareholders in India. And there are severe losses faced by shareholders in India. So I think one should just go out and buy these stocks. And I think there will be a tearing bull market considering these stocks today.
That's an interesting take coming in from Vineet Bulinjkar as well. But let's welcome in Ashish Maheshwari, Director at Arihant Capital Markets, to give his view. Ashish, good afternoon and welcome to the show. Your view on the Adani Group of companies, taking into consideration everything that you've heard so far. And, we just had Vineet also, who came out and said that this is the best opportunity to buy.
Yes, in fact, I echo the voices of top lawyers who were giving opinion about this case. And if you see, in reality, indictment is what? This is just an accusation. This is not a punishment or this is not a decision. So this just, you are making them accused. And now with today's clarification, I think a lot of clarity will also emerge, number one. And number two, if you see even Adani Group companies, all their businesses typically are backed by the solid assets. These are not the IT companies where we have seen earlier cases where there's no asset and just billing happening. There's all businesses are backed by solid fundamentals. And third thing is, as they are having global ambition, so certainly you find a lot of enemies outside in the corporate world who doesn't want to see India progressing or Indian companies having global footprint. So this outcome of that, I agree with Vineet and others that there's a good time to accumulate Adani Group stocks, because now once it is clear that this is just only indictment, and it will take plenty of time to prove such cases. And again, if it happens again, it will be again Azure and CDPQ, not with Adani Enterprises or Adani Green as such. So I'm of the same view that it's a good time to enter into stocks because they have fallen really too much after this episode.
Right. Thank you, Ashish, for your views overall. But moving on, you have the auto pack that is in focus. That was the second theme that we were watching out for in terms of the new launches. It's a week of new launches in the sector as the companies are jumping on the EV bandwagon. Let's first look at M&M, who's actually gone ahead and launched XEV9e and BE6e. Now, the XEV9e starts at a price of near 22 lakh rupees, while the BE6e is priced at 18.9 lakh rupees. And with this, if you see in terms of brokerages as well, they have a pretty mixed view on M&M following the EV launches. What Nuvama is saying is they've maintained a buy for a target price of 3,700. What their view is that the new dedicated EV platform does score over peers with regards to where the features are concerned. Secondly, if you talk about the bookings as well, which are likely to open in Jan 25, deliveries will only start by the end of Feb 25. Their initial annual battery EV capacity is at 90,000 units, and M&M remains their top pick. In fact, MK has retained a reduce for a target price of 2,700, and what they are indicating is that the features are strong, pricing is competitive. The EV category continues to see slow offtake with low single-digit penetration levels. So probably that remains a key concern that everyone is watching out for. And they're expecting intensifying launches in the EV industry in the coming 6 to 12 months. Puneet, we're talking about 6 to 12 months, but in fact, this week itself has been absolutely intense with regards to M&M. You have Ola and you have Honda.
Yes, definitely. So as you rightly said, in the brokerages as well, it's been a very looked forward launch, especially in the EV space for M&M. Now, what's been one of the most positive things, according to me, has been both launches coming at the same time. They're expecting to start deliveries by January of 2025. So it's not, very far off from what the estimates are. And both brokerages also are estimating, as Novama mentioned, they're estimating that these launches will start effectively, the full year will be in FY26. So this incremental addition of roughly about 48,000 to 50,000 units in the next year is going to add to the current growth path that the company is already on. So it has roughly about 2 launches this year. They launched the 3XO in May, the Thar on 15th of August. Both of those have done the growth in this particular year. Next year, we were looking forward to more launches as well. So with a forward guidance on electric vehicles specifically for M&M, it's going to be a very strong pivot picture as well. Now, the more expensive launch, which is around 21 lakhs right now, there's no competition also in that segment. It's expected to come from someone like a Tata Harrier EV, which is expected by the end of this fiscal year. The other one's the Sierra EV as well. Both haven't come in the market yet, but Tata has mentioned that this will come in at that time. While on the other hand, the lower price launched at around 18 lakhs is another key positive as well, because that is going to compete with the Tata Curve, which has just come in. So it is giving buyers a choice here for much better alternatives as well. But it's also going to intensify the competition. I think that's where the negative bias from MK is coming in as well.
But a key aspect that you need to consider with regards to M&M is the kind of increase it's seen in terms of SUV sales go, right? And their new launches over there, that is going to be the major growth driver from an M&M perspective if you have to look at EVs. Yeah. But that's in the passenger vehicle space. How are you looking at the two-wheeler space, taking into consideration Ola? Very quickly, we have Haripriya also after that, waiting for Honda.
I think for Ola specifically, of course, news is that they have 4 new launches in this particular that they've launched yesterday, and also we had a positive pivot from the City Note as well. So one, they've launched the Ola the Gig as well as the Gig Plus as well. This will is expected. This is also priced very attractively at just roughly 39,999 and 49,000, almost 50,000 as well. So both these scooters are expected to address the gig worker specifically. What's also interesting is that if you see the S1 and which is on your screen, the S1Z as well as the S1Z Plus is also another variant. Now this is similar to the S1 model that they currently have, but this will have the portable battery option as well. They've also launched a portable battery as well in this particular time frame. Now the S1Z specifically, which has been launched, that's going to be aimed at urban commuters for shorter distances as well. That's going to be one of the main things to watch out for. While the S1Z Plus can also be used for light commercial use. So I think they've expanded the product profile very nicely and very intently in this particular time frame. Now from 39,900 almost, they're going almost till about 1 lakh to 1,20,000. So it's giving the value option to a lot of new buyers as well. And I think that's why we're seeing a very positive reaction on the stock. Just to mention, Citi also initiated in coverage on the stock with the buy target price is 90. While the note is very positive, they have mentioned that vertical integration with lithium-ion battery cells is one of the key positives for the stock. And apart from that, they mentioned that they are valuing Ola Electric at 4 times EV to sales. That's higher than the traditional two-wheeler makers because they see attractive long-term prospects for the company going forward as well.
This is going to be interesting. In fact, you have Honda as well, which has gone out and announced the launch of the electric version of its best-selling scooter, the Activa. And they've actually named it Activa E. Let's bring in my colleague Haripriya with more details. Haripriya, we're looking at the visuals, looking pretty amazing. What are you picking up?
That's right. Honda has officially entered the EV race in India. It has launched 2 models. One is called Activa E and the other is called QC1. The Activa E model is the swappable battery model and the QC1 is the fixed battery model. The swappable battery model will be available in Delhi, Mumbai and Bangalore, and the fixed battery model will be available across the country. They're also targeting to create a swapping charging stations. Within every 5 kilometers they want to have a swapping station. Booking for these vehicles will start from January 2025 and deliveries will follow in February. Honda has also is also coming up with a couple other services with this, 3 free services for the first year and 3-year warranty, and it will also be launching the first concept store in Bangalore by the last quarter of this fiscal. There's also a care package, and there's also a software upgrade of Honda Road Sync app. That's all we have for now, and we'll have more when we speak to the management soon.
Well, thanks for that, Haripriya. Let me get in our guest Ashish also on this. Ashish, we did cover a lot of stocks. Just let us know what's your view on M&M as well as on Ola Electric. Ola Electric seeing a very strong reaction as well today in trade. What's your outlook on both of these stocks?
Yeah, as far as Mahindra & Mahindra is concerned, if you have seen their designs or the sketches which has come out, this next generation vehicles, what they are making in their EV segment with you can compare whatever the features are there in Mercedes or BMWs you are getting in this price. So certainly demand is going to be there. One thing is clear that Mahindra & Mahindra, if you see even the balance sheet, the current fixed assets are 34,000 crore, and they are going to invest 25,000 crore in their EV in-glow line what they are setting up. So huge trust they are having in their EV offerings going forward. And in my view, both these vehicles at the price range they are priced, they will really give tough competition to Tata Motors because of the features and M&M platform. As far as Ola Electric is concerned, I think again there's a good entry strategy in the gig worker segment because if you see that vehicles like they are for mostly for the deliveries for nearby, etc. So demand is going to be there because a lot of your Swiggy, Zomatos and Blinkit guys, they will shift to such vehicles because low entry barrier is there. So I think this is again a positive development as far as Ola Electric is concerned because entry barrier are just going away in this segment now.
Regards to where the auto space goes, but let's quickly look at IT as a sector as well. Firstly, you have Infosys that is in focus. They've rolled out a 90% variable pay for the second quarter of FY25. And in addition to that, the variable pay is based on the company's quarterly and individual employment performance. Stock is up 0.2%. Secondly, you have a Wipro that is in focus as well because they've backed a deal worth $100 million from Marelli. So that counter is an interesting one to watch out for as well, 0.2% higher. And lastly, you had LTI Mindtree, which did have their investor meet, on the back of which you have a Citi which has maintained a sell, and they have a target price of 5,710. So these are the three counters we are watching out for from the IT space. Ashish, a quick comment on what would the sector mean for you and what is your view on these three stocks?
Yeah, I think this particular sector is now again starting showing some strength because now as Trump is on board in US market, so IT industry will do well as such. And in my view, whatever the barriers will be created, it will be more towards the product side that they will put something in China or Mexico or Canada, but IT companies will continue to thrive. So as far as my personal view is there, we are bullish on IT pack, and in my view, stocks like Coforge, LTI, Mindtree, and Infosys, they will continue to do well.
Well, thanks for your view, Ashish, on all these IT stocks. We'll let you go on that front. Thank you so much for joining us today and look forward to our next chat. With that, it's a wrap on this edition of Hot Money. Stay tuned. We have a very special discussion on the Adani Greens clarification coming up on the other side of the break.
Of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators.
There are no charges of corruption or bribery against Gautam Adani, Sagar Adani or Vineet Adani. That's the word coming from Adani Green. Welcome to this special edition on Adani Green's clarification. I am Hiral Dadia and joining me is Tamanna Inamdar. Tamanna, what does this actually mean, that the clarification has come in? Smart moves on the stocks as well.
So, Hiral, let me just put it down very simply. This means that all of the reportage and all of the social media commentary, which was making this up to be a very large case personally aimed at the heads of these companies, seems to have been a mountain out of a molehill. Now, why do I say that? The statement today says that Adani directors are not charged under FCPA in this DOJ, that's Department of Justice, indictment. That means that there is no charge personally of corruption or bribery that has been levied in these allegations, mind you, by the Department of Justice against either Gautam Adani, Sagar Adani or Vineet Jain. The charges have been brought upon are against the employees of Azure International and a Canadian investment fund. So, which is why the entire magnitude of what was perceived as a problem now gets reduced massively. In fact, let me first go across to my colleague Alex Matthews, who's explaining what exactly the statement says today.
So there's been quite a lot of speculation, there's been quite a lot of allegations that are being thrown around, and here I'm not just talking about what was said in the Justice Department indictment that came through. I'm talking about everything that came after that. The media reports that are claiming that Gautam Adani himself, along with Sagar Adani and Vineet Jain, have been involved in bribery. Now, there was a clarification that was issued by Adani Green earlier today in which there is a very clear statement of fact. In no situation under the indictment that was sent out by the DOJ has there been a naming of Gautam Adani, Sagar Adani or Vineet Jain in a violation related to the Foreign Corrupt Practices Act or when it comes to obstruction of justice. Both of these aspects are criminal charges and would lead to quite significant repercussions. What they have been named in, and these are allegations I must point out, are civil charges, and those relate to alleged securities and wire fraud. Remember that there is a very significant, stark difference between a civil charge and a criminal charge. The criminal charge, in fact, is something that has very severe legal repercussions. Now, the understanding, of course, of that indictment has been flawed, as a result of which a lot of media channels or media outlets have gone ahead and cast aspersions on the group, and they've gone so far as to call it bribegate in certain cases, and that has been unfounded. There has been quite a big impact on the stocks, but investors today will probably be asking, was there much ado about nothing at all? Was there a mountain that was made of a molehill? Ultimately, legal experts have said that this is something that can be taken up over a period of time. The charges against Gautam Adani as well as Sagar Adani and Vineet Jain are lighter compared with what has been levied against the Azure Energy employees and the CDPQ charges that were leveled by the US Justice Department. There has been a reaction in the stock markets today, and that is for everybody to see.
Right. In fact, let's listen in to former AG and Senior Counsel Mukul Rohatgi and Senior Advocate of the Supreme Court Mahesh Jethmalani about the findings of the allegations against Adani Group in a USA court. Let's listen in.
See, madam, generally the charges seem to be that Adani company called Adani Green, which is in the business of supplying solar power, was bribing officials, unnamed officials of certain unnamed power companies, purchasers in India, and the idea was to get lucrative contracts for supply of power. इसके लिए bribe दी गई, किसको दी, कहाँ दी, कितनी दी, ये कुछ नहीं है इसमें अभी। और क्योंकि इसमें अमेरिकन इन्वेस्टर्स हैं, अमेरिका की स्टॉक एक्सचेंज में इसका शेयर लिस्टेड है, इसलिए वहाँ की इन्वेस्टिगेशन ये दिखाती है, ये इनके खिलाफ चार्ज है.
Right. What do the charges specifically, say at this point? What are the charges against Adani's?
It is not specific at all. I told you, अगर मुझे आपको घूस देनी है और आप किसी कंपनी में हो तो मुझे आपका नाम तो देना पड़ेगा. तो ना तो आपका नाम है, ना उसमें पैसा इन्वॉल्व है, ना लिखा है कितना दिया और कौन सा कॉन्ट्रैक्ट मिला, कुछ नहीं लिखा है. जनरल है. अब या तो जनरल है या उनके पास और इन्फॉर्मेशन है, वो बाद में दी जाएगी, वो मैं कह नहीं सकता. लेकिन इन कागजों में कोई घूस लेने का नाम, पता, अमाउंट कुछ नहीं है.
In which counts are the Adanis named and not named?
Counts 2, 3 and 4, the Adanis are named. Those counts relate to allegations of conspiracy in securities, namely shares which are listed in the US.
Right, and count 1 and 5, sir?
1 and I told you 1 and 5. One is conspiracy to violate the Corruption Act, and count 5 is obstruction of justice.
Right, all
उन दोनों में नहीं है.
Right.
The US indictment does not at all suggest that there was any bribery in India by the Adani Group or its directors. There's no allegation about that. The allegation is that investors in the United States who subscribed to the bonds issued by Adani Green were misrepresented when in fact bribes were paid. Now, what they have suggested is not actually bribes were paid. So, if no bribes were paid, where is the question of anybody being induced on false representations to subscribe to these bonds? Because there is no offense alleged to have taken place in India. They say that there was a conspiracy to violate the Foreign Corruption Prevention Act there, FC. But there is no evidence even for that. What is the evidence which points to that inference?
So also the Congress is, at this point forming a JPC and wants to discuss about this in the Parliament with the winter session begun already as well. What is your understanding of that with the opposition going on about this indictment?
The indictment itself cannot constitute evidence for any further action in India, including a JPC. The indictment does not provide evidence of any offence committed by anybody in India.
Right.
If you come with that evidence, then on a consideration of the probative value of that evidence, action may be taken. But at the moment, there is no evidence.
Okay, at the moment, there is no evidence, says Mahesh Jethmalani. Let's get a deeper perspective. Abizar Divanji, founder of Neostrat Advisors, joining us on the show. Shrikant Srinivas, former senior journalist and policy consultant. With us today, Ashwini Dubey, advocate Supreme Court, and Vineet Bolinjkar, head of research, Ventura Securities, who actually had the stock call this morning, also joining us. And I must say, if anyone listened to Vineet Bolinjkar this morning on NDTV Profit, he had the absolutely right call on the investment on Adani stocks. Having said that, let me start off the conversation with Abizar. Abizar, just put this into perspective. And let's put the stock reaction to one side, just seeing it legally and for what the story is now. Why has this statement made a difference?
One, clearly there is first of all, there is for the first time a very clear statement coming out from the company saying that our officials are not involved. And I think that was a very, very big and bold statement. Presumably, backing off or kind of challenging the authorities, including our regulatory authorities who would have written to him, to say that there is nobody involved from the company. So I think that positive statement in itself would give a lot of confidence to people at large that there is backing to it. The other important thing is that what's emerging out from all the legal expert opinions coming about is that there is so much of a loophole in statements that everywhere there seems to be some escape route that the US courts have seemed to have put in. To say that, I can get out of here, I can get out of there, by not naming specific officials in point count 1 and count 5, which are the two important counts. Every other count is basically a disclosure count, which can be easily supported if count 1 and count 5 are proven wrong. So at the end of the day, it now seems to appear that the initial euphoria created by a filing seems to have died down. One, because of the company coming out clearly. And secondly, people actually reading through the lines and saying, there are so many other things here. Now, the other important thing that the company's statements come out with is the implications. And I'd like to spend 2 minutes on this implication bit. The knee-jerk reaction, not only from the markets, but from counterparties, from other people doing business with them, etc. The implications are so large. So it's so easy for somebody to say, oh, I level a charge. But the implications of levying of that charge are supply of capital, our partnerships, our raising of finances in international markets. All of this has a contagion effect, which will take longer to go than simply a statement coming through. But the positivity is that, yes, with the statements coming through, we now believe that there is a path to recovery.
Implications, I think, is important. Path to recovery is an important point, but then we also have to understand the context of why this is happening. And let me come to Shrikant Srinivas on this, because frankly, we live in polarized times, Shrikant, and everyone will have a strong opinion one way or the other on this issue, and as with everything in the public domain right now. But forget about the opinion. Let's talk about the facts here. And what really is coming through? Then the question becomes about why was this one narrative propped?
I don't know whether we can speak about why. I mean, I'm not going to speak to the motivations of this. The process typically works through, and Mr. Devanji and others are probably better acquainted with this, but the point is that a federal grand jury empaneled by a particular, based on a complaint by the SEC, which is a statutory authority, investigated and appeared to have found enough, a grand jury found that there was enough evidence to bring that indictment. That is why we are here. As speaking as a journalist, I don't think there is any grand conspiracy at play here, at least not against a specific. I don't see it overtly coming from anybody. I don't see the US government or Department of Justice being, focused on presenting or chasing down any particular defendant for any political purpose here. I don't see that.
Shrikant?
Yes.
Yes, go on.
No, I said there has been a lot of information about what has been happening. As you're all aware, as we are all aware, there has been a certain amount of media, a significant amount of media coverage, I must say, definitely in this country, in our country, about various reports provided by the Hindenburg and others. Based on that, there has been some action. Based on that, based on a complaint by the SEC, the Justice Department has pursued, and based on the grand jury indictment, the grand jury testimony, etc., and the grand jury found there's been enough. Now, let's be clear that the grand jury indictment is not evidence, as has been pointed out before. It is a set of allegations, and even the SEC in its statement clearly says that these are allegations and are allegations until proven. That right. It has said. Right. It basically says that the parties are treated as innocent until proven guilty.
Absolutely, Shrikant. These are just allegations, and that is what is important in what has come out. Ashwini, let me come to you on this. Clearly, a couple of things that we have noted over here is that bribery and corruption is not involved. Obstruction of justice is not involved. So your serious indictments are not involved at all. For the benefit of the viewers, what is it that you're looking at in terms of the lesser critical charges now? How would this impact? What's the process to contest this in the US? And what are the kind of monetary penalties that would be involved according to you?
First, let us understand the jurisprudence of bribery. Jurisprudence of bribery is that there has to be specific allegations. A, giver. B, taker, the person who has to accept it. 3, for what favor? Here in this indictment, if you see, those 3 important ingredients are missing. Now 2, suppose if US prosecutors have filed a case, in that case, if there is any a specific averment with respect to the role played by Mr. Adani or his nephew or his Vinay Jain, that is completely missing. Now, three, if you see, in the indictment filed by the US prosecutors, the name for the work and for how much amount and when it was delivered, it is missing. So it is just an allegations. Prima facie does not substantiated by any concrete evidence or any data. So if we see the allegations, then it is the courts are now coming to the courts procedure, how courts function. If allegations are labeled, then against that reply is to be filed. This is the universal law, and the principle of natural justice also says. So you cannot just pick allegations part, what the Indian media and world media has picked up, which in earlier also days with a clearly agenda-driven exercise, either in Hindenburg or in the past you have seen, this selectively they were exercising their discretion of freedom of speech and expression as given in the constitution in order to stop the economic growth of the country. You see, you must not forget that India is becoming the very, very fast growing economy of the country. So of course, those who does not want to see the India in the race, they will target from one to the other. In past also we have seen. Now those people who are targeting it, they must see that there is no allegation qua the bribery charges, the allegations does not substantiated by any evidence. So it's afterthought, and let's reply also has to be seen. Reply has clearly come, and no law is, the judgment is passed only on the basis of the allegations. And these are allegations only as of now. Nothing has come forward. So it is to be replied in legally. And I think those Indian houses or the agenda-driven people who are exercising it for their benefits, so at the behest of some foreign companies, they should also be taken to the task. Legal action should also be taken against them. Over to you.
What kind of legal action? I mean, you made an important point, Ashwini Dubey, and I'm going to come to Vineet on this at the end of the day because he called out the rally we'll see today. But whenever this happens and whatever the motivations are, you say, for example, that there could be malicious intent and there should be legal action. What kind of legal action would you take here?
Your question to you, me. Yes, Tamanna. See, these are the words, those who are knowingly, deliberately maligning the image of an Indian businessman by exercising their journalistic freedom, by glorifying the offense, which is not substantiated by any evidence. You can file a defamation case against them. You can take it to the task. You can file the allegations against them. Look, you have to see that there is no allegation against me. See, the ingredients of the bribery is missing. See, the jurisprudence, criminal jurisprudence, which says that the bribery is specific allegations, a specific project or a specific favor is to be taken, and giver and taker both, then these are missing. So it's an allegation. On the basis of allegation, you cannot ruin the image of any business house or anyone, individual also. This is a law.
Absolutely, this is the law. In fact, as Tamanna was saying, Vineet did call out this action in terms of an Adani group of companies. Go, Vineet. We've already seen that rally that has come in today's session on the group companies. Where from here and what would you advise?
So, if you see purely on a short-term basis, it has been my observations over the past few years that whenever you have a sudden event which gets negated, like, this news flow that came in, prices tend to recover back the entire erosion that has happened or correct on the either side. So if we were to follow this same premise, I think the valuation collapse that we have seen from around 2800 levels could gradually creep up to those levels.
Vineet, you called it this morning when you said that we're seeing a rally, and we've seen a pullback in the stocks as well. What will be sort of the outlook from here? What are the factors that you would watch purely from an investment purpose on Adani stocks?
So number one, this is going to be an overhang on the stock, okay? Because although there has been some very sound counter points made by the guests on your show, it still remains that there is a case that is filed against the group. So there will be a little bit of overhang on the stock. Having said that, if you were to look at the fundamentals, most of these stocks are trading at 50% of their intrinsic value for the next 1.5 years, FY27. Now, given this kind of a value gap, especially in large cap stocks, Nifty 50, Nifty 200, you'll not get such opportunities, elsewhere. So given these facts, I think that, investments made in these stocks at current levels will probably, or, hopefully mean that investors will be very well rewarded in the short to medium term.
View from a short to medium term. Abhi sir, let me come to you with regards to these kind of proceedings with the SEC as well. What are the usual timelines and how soon do you think will they come to a conclusion on things like these?
I think the sooner they agree to a fine settlement, the sooner will be the settlement. That's what's happened in most cases as far as corporate related allegations are concerned in the US. So I guess, 6 months to a year is what they would take to settle it, because there will be some levels of hearing and then there will be a settlement fine. And those fines will, I think the corporate India or corporate anybody normally pays those fines in simply because they want to avoid, as Vineet just said, the overhang on their system. So normally what happens is, without admitting to guilt, these things are settled with a fine. And I think that's what will happen here in all likelihood, because business needs to move on. Unfortunately, in jurisdiction like this, I think we are faced with this issue. While globally it is like, innocent until proven guilty. Here it is guilty until proven even innocent. So the sooner you get yourself proven innocent, it's better for your business going forward. And that's what normally business people do.
So that's the legal route. But just one more point I wanted to understand from you, Abhisar, is that, and if you look at the GQG note, the client note which spoke about this, they talk about the changes which will take place when the Trump administration comes in. This has also been a case brought in by the district attorney through the Department of Justice. Explain that puzzle to us for those of our viewers who are not very well versed with how the American legal system at this level plays in or ties in with American politics.
Well, I'm not an expert on US judicial system, but from whatever I've read, I can tell you. One is that if there is an indictment, I do not think the president of any country has an overreaching power to remove the indictment suo motu. However, I think what can happen is the district attorney can be asked to reach a judgment quicker, reach a settlement quicker. And I think that is what will happen, given that generally Trump is supposed to be a pro-business oriented individual, maybe less of vendetta politics. And that may happen and that may play out, that they would go for a settlement quicker and move on. That's what I think is likely to be the implication.
So, okay, perhaps the end game here is settlement. Today, I think some clarity has come into the nature of these allegations, which is the kind of impact you're seeing on the stock, etc. But thank you so much to all of you for joining us on this special show at this point on the big story of the day. That's all the time we have for now. But do stay tuned to the NDTV network for a lot more coming up on the other side.
Of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration.
Passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360. The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
And the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Markets near days highs. Adani Ports and Adani Enterprises push Nifty to days high. Sensex about 80,300. A roaring comeback by Adani Group stocks. Adani Energy hits upper circuit. Adani Enterprises and Adani Ports are the top gainers in the Nifty. This follows the company clarifying that there are no corruption charges against Gautam and Sagar Adani by the US Department of Justice. NTPC Green Energy shares hit upper circuit after a muted debut. It's a battle of electric scooters as Honda and Ola Electric roll out new models. Honda's bestseller, the Activa, is now available in electric too. Cyclone Fengal looms large over Tamil Nadu and Puducherry, and southern coast is on high alert for heavy to very heavy rainfall over the next 12 hours. Following global appeals for peace, Israel has implemented a ceasefire with Hezbollah in Lebanon, but its military campaign against Hamas in Gaza is set to continue. Hello and welcome to NDTV Profit. You're watching Market IQ and I'm your host Mihika Barve. Let's first take a quick look at how markets are faring right now. It's a very good day to be in the markets with the Nifty 50. The benchmark is up 0.5% in trade today. When you look at the top contributors on the benchmark, you have HDFC Bank, gaining with 20 points, and then we have Adani Ports, NTPC and Adani Enterprises, as well as Trent, that are leading in terms of contribution to the Nifty 50. When you look at the top gainers from a stock performance perspective, where we do have stocks like the Adani Enterprises and Adani Ports. Adani Enterprises is actually up 8% right now, while Adani Ports is seeing gains of over 5%. We also have some strength in counters like BEL, Trent, as well as NTPC that have all seen gains of over 2% right now. When you look at the broader markets, well, they are clearly outperforming. It's actually the Nifty Small Cap 250 that's outperforming. The Nifty Mid Cap still underperforms the benchmark right now. The Small Cap 250 is up 0.75% in trade right now. And when you talk about who is leading or taking charge in terms of stock performance, we have Quest Corp seeing gains of over 5%, EIL, as well as counters like Garden Reach Shipbuilders, Aster DM, and PCBL seeing gains of over 5%. When you look at the sectoral indices, you have the Nifty Energy, which is the top gainer in today's day of trade. It's up over 1.3% right now. We have Adani Energy Solutions, Adani Green, taking the charge, seeing gains of 8 to 10%, as well as some strength in NTPC and Coal India. NTPC is buzzing with as its renewable energy arm just debuted in exchanges today. We also have some strength on the Nifty Auto as well as the media pack. A sector that's not doing so well today is the Nifty Pharma, seeing cuts of 0.5% in trade today. The stocks that are leading the positive bias is Granules India, seeing cuts of 3%. Ipca Laboratories also down 2.5%, and we have 17 declines on the Nifty Pharma as against 4 advances. When you talk about another counter that's not doing so well is the Nifty Realty. It's down about 0.4% in trade right now. When you talk about counters that are not doing so well on this index, it's Prestige Estates down about 4%, Godrej Properties, as well as Suntech Realty, and these are some of the counters that saw significant gains post the Maharashtra elections. But up first, we should address the defense stocks. Now, we have a host of defense counters that are buzzing on the back of positive sentiment. We have Bharat Dynamics seeing an intraday high of 7.9%. We also have counters like Garden Reach Shipbuilders, intraday high of the same magnitude. Cochin Shipyards, intraday high of 5%, and Mazagon Dock Shipbuilders, as well as BEL, seeing gains of 2 to 4% in trade right now. Now, there's been a positive traction in this space for the last 2-3 days. We had JPMorgan actually post a note on November 25th and it stated that the sector still is in very early stages of a long runway growth. They expect the 3-year order inflows to be at 150% of the order backlog that was as of FY24, and the sector level revenue is expected to grow at a compounded annual growth rate of 12 to 15% over the next few years. And JPMorgan also stated that the recent pullback of the stock corrections that we did see in the defense counters for the last few weeks serve as an attractive entry point in the larger players. When you talk about their defense bets, well, they're overweight. They initiated an overweight rating coverage on 3 counters: BEL, HAL, Mazagon Dock. Now, Mazagon Dock has crossed the target price that was stated by the brokerage, but BEL's target price stands at 340 rupees, which provides an upside potential of 10%. For the HAL target, an upside potential of 15.4%. But its preferred defense pick is BEL, and there are 3 main factors to this. One is the diversified revenue as well as the order inflow stream. JPMorgan has also highlighted the long track record of the listed company and the consistent guidance and delivery recovery that the company has given versus other peers. But moving on, another counter that has been in focus today is Aster DM Healthcare. Now it's been buzzing on the back of news flow, and we have Varsha joining us to give us more details on the same.
For that, so yes, Aster DM Healthcare is buzzing now. Company is going to acquire additional equity shares in Prerna Hospital, so they're going to increase their stake to 100% up from 87% currently. Transaction will be executed in 2 tranches. Now, so a lot of hospital companies are actually going into brownfield expansion versus greenfield expansions, which takes time, and Aster DM is one of them. If you see about the Prerna Hospital, so they offer 254 beds and are into over 25 specialities, and the turnover, that is sales of Prerna Hospital for FY24 stands at around 120 crores. Now let's see what is Aster expecting when it comes to future. So Aster Women and Children Hospital, which comprises of 300 beds in Hyderabad, is yet to be completed by FY26, and the total capacity is expected to reach 6,800 beds by FY27. And India revenue CAGR, so they are expecting 18 to 20% growth when it comes to India business over FY25 to 29, and EBITDA margin over the same period is expected at 23 to 25%. And growth, they're expecting this growth to be driven by higher occupancy and the capacity expansion that the company is going through. And lastly, if you see, the average revenue per occupied bed is projected to grow at 7 to 8% over 3 to 4 years. So this is all we have on Aster DM Healthcare.
Thank you, Varsha, so much for giving us all those details. The next counter we're going to talk about is Prestige Estates. It's the top loser on the Nifty Realty and is dragging the index quite a bit. It's down about almost 4.5% right now. We have Anushi. Anushi, the stock rode for the last 2-3 days after the Maharashtra state elections, but what's causing the pressure today?
Right, Mika, if you look at Prestige Estates now, while there was a sentimental move which led to this kind of an up move that we are looking at, in the whole real estate index, Prestige Estates is down by about 4%, and this is on the back of the Morgan Stanley note which has come out today, wherein they've downgraded the stock to underweight as compared to overweight. So it's a double downgrade that we are looking at from the brokerage, with a target price of 1,510, which implies about 11.4% of a downside. If we go back and look at how the H1 had shaped up for Prestige Estates, launches compared to its other players were comparatively lower on the muted side. In Q1, they did attribute this to elections also and some delays happening on that front. But what Morgan Stanley is saying is they reduced their FY25 pre-sales growth estimate to 9% as compared to 27% of an estimate earlier. This is on the lack of launches seen so far in H1. On the rental income CAGR side, they estimate about a 24% of a growth. But it's mainly the weaker pre-sales momentum as compared to its peers. If you look at its peers like Godrej Properties and even other players in the market, they had posted comparatively stronger numbers. So this remains on a critical point for the company to focus on for H2 onwards, how the realizations will shape along with that. So pre-sales is the most important metric that one should be looking out for Prestige Estates from this level onwards.
Yeah. Thank you so much, Anushi, for giving us all those details. The next 2 stocks that we're going to focus on is Waaree Energies and Premier Energies. Both stocks recently listed on exchanges and saw stellar listing, then saw some correction as people, booked profits and other factors came into play. But they are buzzing into trade today, up 2 to 3% right now. And this is on the back of the expectation for international solar module prices to rise. Now, China will be cutting their export tax rebate, which is a kind of subsidy that it gives its companies to be competitive in international markets. They're going to cut the tax rebate on solar modules and cells, and it will be reduced from 13% to 9%, and this will be effective from December 1st. Now, China is reducing these export rebates to curb the company losses that manufacturers are seeing, and this cut will lead to an increase in input cost to the extent of 4% as per Nuvama research. Now, these higher input prices are expected to lead to an uptick in solar module prices, and we also have experts stating that maturing technology and the impending US tariffs could also support higher module prices going forward. Now, a little bit about the history about solar module prices so far. The international prices have seen a significant decline for the past 2 years, and this is mainly because of a Chinese supply glut. Now, current module prices stand 67% lower from the 2022 peak levels, currently trading at only 9 cents per watt, which stood at around 12 cents per watt at the start of the year and at around 27 cents per watt at the 2022 high levels. And now experts believe that the module prices have now bottomed out and could only see an uptick from here. Now, when you talk about how Indian companies like Warrior Energies and Premier Energies benefits, well, one thing is higher module prices are positive for both of these companies because they increase the revenue potential that the companies make when they enter into contracts, because both these companies are solar module manufacturers, and the reduced Chinese rebates also make the Indian panel prices or these companies more competitive from an export as well as a domestic standpoint. It could also lead to a higher demand for Indian companies in domestic markets, because despite us having the production capabilities, India still imports a large amount of solar panels because of the Chinese competitive prices. So this could help in higher demand from a domestic standpoint, and the potential US tariffs on Chinese imports could also be positive for Warrior Energies, especially in US markets, because the company earns around 50% of its revenues from the US. But we now move on to one of the big stories of the day, and there are no charges of corruption or bribery against Gautam Adani, Sagar Adani or Vineet Jain. Now that's the word coming from Adani Green. Let's go across to Alex Matthews on what it means for the Adani Group.
So there's been quite a lot of speculation, there's been quite a lot of allegations that are being thrown around, and here I'm not just talking about what was said in the Justice Department indictment that came through. I'm talking about everything that came after that. The media reports that are claiming that Gautam Adani himself, along with Sagar Adani and Vineet Jain, have been involved in bribery. Now, there was a clarification that was issued by Adani Green earlier today, in which there is a very clear statement of fact. In no situation under the indictment that was sent out by the DOJ has there been a naming of Gautam Adani, Sagar Adani or Vineet Jain in a violation related to the Foreign Corrupt Practices Act or when it comes to obstruction of justice. Both of these aspects are criminal charges and would lead to quite significant repercussions. What they have been named in, and these are allegations I must point out, are civil charges, and those relate to alleged securities and wire fraud. Remember that there is a very significant, stark difference between a civil charge and a criminal charge. The criminal charge, in fact, is something that has very severe legal repercussions. Now, the understanding, of course, of that indictment has been flawed, as a result of which a lot of media channels or media outlets have gone ahead and cast aspersions on the group, and they've gone so far as to call it bribegate in certain cases, and that has been unfounded. There has been quite a big impact on the stocks, but investors today will probably be asking, was there much ado about nothing at all? Was there a mountain that was made of a molehill? Ultimately, legal experts have said that this is something that can be taken up over a period of time. The charges against Gautam Adani as well as Sagar Adani and Vineet Jain are lighter compared with what has been levied against the Azure Energy employees and the CDPQ charges that were leveled by the US Justice Department. There has been a reaction in the stock markets today, and that is for everybody to see.
Thank you so much, Alex, for giving us all those key details. And NDTV Profit has also been speaking with a host of experts on this very subject. Top Supreme Court lawyers and market experts have been emphatic in their views that the US indictment against the Adanis is based on very flimsy grounds. Now, they have also stated that now is the time to buy the Adani Group stocks. Take a look at what expert lawyers and market watchers had to say earlier today on the channel.
See, madam, generally the charges seem to be that Adani company called Adani Green, which is in the business of supplying solar power, was bribing officials, unnamed officials of certain unnamed power companies, purchasers in India, and the idea was to get lucrative कॉन्ट्रैक्ट्स फॉर सप्लाई ऑफ पावर. इसके लिए ब्राइब दी गई, किसको दी, कहाँ दी, कितनी दी, ये कुछ नहीं है इसमें अभी. और क्योंकि इसमें अमेरिकन इन्वेस्टर्स हैं, अमेरिका की स्टॉक एक्सचेंज में इसका शेयर लिस्टेड है, इसलिए वहाँ की इन्वेस्टिगेशन ये दिखाती है, ये इनके खिलाफ चार्ज है.
Right. What do the charges specifically, say at this point? What are the charges against Adani's?
It is not specific at all. I told you, अगर मुझे आपको घूस देनी है और आप किसी कंपनी में हो तो मुझे आपका नाम तो देना पड़ेगा. तो ना तो आपका नाम है, ना उसमें पैसा इन्वॉल्व है, ना लिखा है कितना दिया और कौन सा कॉन्ट्रैक्ट मिला, कुछ नहीं लिखा है. जनरल है. अब या तो जनरल है या उनके पास और इन्फॉर्मेशन है, वो बाद में दी जाएगी, वो मैं कह नहीं सकता. लेकिन इन कागजों में कोई घूस लेने का नाम, पता, अमाउंट कुछ नहीं है.
In which counts are the Adanis named and not named?
Counts 2, 3 and 4. The Adanis are named. Those counts relate to allegations of conspiracy in securities, namely shares which are listed in the US.
Right, and count 1 and 5, sir?
I told you 1 and 5. One is conspiracy to violate the Corruption Act, and count 5 is obstruction of justice.
Right, all
उन दोनों में नहीं है.
Right.
The US indictment does not at all suggest that there was any bribery in India by the Adani Group or its directors. There's no allegation about that. The allegation is that investors in the United States who subscribed to the bonds issued by Adani Green were misrepresented when in fact bribes were paid. Now, what they have suggested is not actually bribes were paid. So, if no bribes were paid, where is the question of anybody being induced on false representations to subscribe to these bonds? Because there is no offense alleged to have taken place in India. They say that there was a conspiracy to violate the Foreign Corruption Prevention Act, there, FC. But there is no evidence even for that. What is the evidence which points to that inference?
So also the Congress is, at this point forming a JPC and wants to discuss about this in the Parliament with the winter session begun already as well. What is your understanding of that with the opposition going on about this indictment?
The indictment itself cannot constitute evidence for any further action in India, including a JPC. The indictment does not provide evidence of any offence committed by anybody in India.
Right.
If you come with that evidence, then on a consideration of the probative value of that evidence, action may be taken. But at the moment, there is no evidence.
It also means that the Adani Group members like Gautam Adani and his nephew are not involved in any foreign corrupt practices. And therefore, this is good news for the Adani Group. And obviously, even the other charges have to be still proved. They are simply allegations. And Adani Group has certainly said that they are not involved and they feel that these are wrongly applied to them. So I think the matter should now be more clear, because obviously you have to prove something in American courts. Everything has to be proved beyond a reasonable doubt. And unless there are actual facts available, you can't prove these charges.
Securities fraud conspiracy, wire fraud conspiracy, and securities fraud. All three are allegations. So it is the impact of that is much, much lesser than the impact of FCPA. So from a legal perspective, the charges, these three charges have lesser impact than the charges of FCPA.
We now move on to the auto space, where Honda today announced the launch of the electric version of its best-selling scooter, the Activa. Named as Activa E, let's bring in Haripriya with more details on the same.
That's right. Honda has officially entered the EV race in India. It has launched two models. One is called Activa E and the other is called QC1. The Activa E model is the swappable battery model and the QC1 is the fixed battery model. The swappable battery model will be available in Delhi, Mumbai and Bangalore, and the fixed battery model will be available across the country. They're also targeting to create a swapping charging stations. Within every 5 kilometers they want to have a swapping station. Booking for these vehicles will start from January 2025 and deliveries will follow in February. Honda has also It's also coming up with a couple other services with this, 3 free services for the first year and 3-year warranty, and it will also be launching the first concept store in Bangalore by the last quarter of this fiscal. There's also a care package, and there's also a software upgrade of Honda Road Sync app.
Moving on, a deep depression over the southwest Bay of Bengal is expected to intensify into a cyclone by Wednesday, bringing heavy to extremely heavy rainfall to Tamil Nadu, Puducherry and Andhra Pradesh. According to the India Meteorological Department, IMD, due to the alert, a holiday has been declared for schools as well as colleges in Tamil Nadu's Trichy, Ramanathapuram, Nagapattinam, Kudalur, Viluppuram and Thiruvallur districts due to the rain. And with that, that's all we have on the show for today. But do stay tuned to NDTV Profit. Lots more lined up on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthews. Sometimes it helps to go back to the basics, and today, on today's program, we're going to deal with a few very basic concepts that will hold you very well over the test of time and will take you through the time going forward. I've lost my words, but essentially what I'm talking about is things that will help you over the course of the next 2 decades. I'm not talking about the next few months. So let's talk about what's lined up on the show. In the first place, you have the advantage of value averaging through systematic investment plans. This is a very simple concept, but it's actually something that we will illustrate through very key numbers, very clear numbers, and you'll be able to take something very positive from this. The second point that we're taking is why you should stick for the long term. What happens after 10 years of investing into a mutual fund scheme using the SIP route? There is something magical that takes place, and we'll take you through the numbers there as well. There's a lot of talk about new fund offers. Let's go to the next point that we'll be talking about. And a lot of them have been in the thematic and the sectoral space. So today we're going to ask, what are the questions that you should ask before you invest in such a fund? New fund offers are the flavor of the season. There are several that have come out. A lot of people think that there is an advantage to investing in new fund offers. That is not the case, and we'll tell you why. And also, here's a trick. In case you are thinking of investing in a new fund offer in the equity category, we'll tell you why you should look at how the balanced advantage fund of that mutual fund house is constructed. So to talk about all of this and more, luckily my guest is not going to be as tongue-tied as I have been. Vijay Mantri is joining me right now, and he's known to be a very clear speaker. Vijay, thanks so much as always for taking the time. And let's start with the first point that I had spoken about, and that is value averaging. Why is it so advantageous to carry out an SIP over the long term?
So it is the very simple concept called rupee cost averaging. And in the business of investing, simplicity prevails over complexity. But many people think that simplicity lacks profoundness, and by following a simple investment strategy, we may be missing out of something very, very big. But through today's show, we are going to prove that a simple strategy can be really profound, can create lots of wealth for the investor. So let's look at what does a smart investor or very evolved investor attempt to do. He or she attempt to buy market at lower and lower level because they believe that they are much better at timing the market, and perhaps they can buy the market or any other asset at the valuation or at the value lower than a normal people can do. But can a normal investor, a normal person can do the same thing? Our answer is yes, emphatic yes, that it can be done. And we can explain through in today's show through a simple concept called rupee cost averaging.
take that advantage. Vijay, you've sent me one fund, and this is, of course, not recent data. It's actually just a little bit dated, but it's still relevant for the purposes of this illustration. We've looked at the HDFC FlexiCap fund, and we've looked at 5-year period, 10-year period, 15-year period, and we've gone all the way up to a 29-year period. And we've talked about how there is a divergence in the average NAV for the month and the average NAV of the SIP that you would do, or the systematic investment plan. Can you explain the numbers that are contained in this table?
So for instance, if you look at, let's look at this fund got launched on 1st January 1995 at 10 rupees NAV. And today the fund's NAV is 1812 rupees. That is on 1st July 2024. And if you see the screen in front of you, 5 years back, that is 1st July 2019, the NAV of the fund was 700 rupees. If I take 1st July 2090 as the beginning and take NAV of every month, so from 1st July 2019 till July 2024, we got 60 months. So starting NAV is 700 rupees, and on 1st July 2024, NAV is 1812 rupees. So if I take 60 months average, the average of 60 months is 971 rupees. Similarly, if we took average for 10 years, the average NAV is 752 rupees. And if you look at average for 15 years, the average for 15 years is 590, average for 20 years is 473, average for 25 years is 384, and average for almost 30 years is 327 rupees. Now, if you look at your screen, which is right now in front of you, 5-year average NAV is 971 rupees. But if you, during those same 60 months, suppose you did SIP, then the average price for you, the average NAV falls from 971 to 864. So average arithmetic average for 60 months is 971. But in same 60 months, if somebody did SIP of 60 months, their average cost come down to 864. So the gap between average NAV and the SIP average cost is 11% for 5 years. Suppose you look at data for 10 years, the gap between arithmetic average and SIP cost come to 14%. And if you look at 15-year period, the gap between arithmetic average of 180 months, which is 590 rupees, and SIP cost come to 433 rupees. So you bought market at 27% discount. Suppose you did 15-year SIP in this fund. And if you look at data for 20 years, then 20 years average SIP cost is actually 473 rupees, but SIP cost come to 243 rupees. The difference between arithmetic average and SIP average cost is 49% for a 20-year period. And if you look at data for 25-year period, average arithmetic cost for 25 years means 30 months. The average cost is 384. But if you did SIP of 10,000 rupees or any fixed amount for those 300 months, then your average cost come down to 64 rupees. So the gap is 83%. And if you look at HDFC FlexiCap Fund, is starting NAV 10 rupees. 1st July 2014, 24, the NAV is 1812 rupees. The average of these 354 months is 327 rupees. But if somebody did SIP in HDFC FlexiCap of fixed amount for these 354 months, then the cost come down from 327 to 33 rupees. So if anybody who has done SIP in HDFC FlexiCap since its inception of the fixed amount, then the average cost for the SIP for that investor is 33 rupees. And today the fund's NAV on 1st July 2024 is 1800 rupees. So this is the power of rupee cost averaging.
So just to drive home that point, Vijay, ultimately it is the systematic nature of this to say that if you are doing an investment of 10,000 rupees, a fixed amount every month, because you have the fluctuation in the NAV based on where the market is going, in some months you will acquire more units, in some months you will acquire less units. But because the NAV falls dramatically with the market, in some months you will accumulate a very large number and you will average your cost. Is that the correct interpretation?
Yeah, that's very true. And when we say in some month we acquire more unit and some month we'll acquire less unit, we'll acquire more units when the prices are low and we acquire less unit when the prices are high. So let me explain through two very simple illustration that will make more sense to investor. Suppose an investor would like to buy one share of a particular company every month. So if the company's share price is 200 rupees, they invest 200 rupees. If price is 500 rupees, they invest 500 rupees. Is 1000 rupees, 2000 rupees, 4000 rupees, whatever is the price, they invest that much amount. But instead of doing that, if the same investor said, instead of buying a fixed quantity, I will buy fixed amount. So they say, for instance, one company share, they would like to buy 2000 rupees per month. So when the price is up 200 rupees, you invest 2000 rupees. So you end up buying 10 shares as 200 rupees. But instead of that, suppose you bought only one share, then you only end up investing 200 rupees. Other illustration, which is much easier to understand for many investors, is take the illustration of gold. For instance, in last 20 years, on every Dhanteras, if somebody bought 10 gram of gold, so for 200 years, for 20 years, they end up buying 200 gram gold. And suppose the average cost come to, I did this number few years back, the average cost come to 19,000 rupees. So you invested 19,000 rupees per year, you invested 3,80,000 rupees and you got 200 gram gold and your average cost came to 19,000 rupees. But instead of buying a fixed quantity, if the investor has bought 19,000 rupees of gold every year, then instead of 200 gram, he or she end up owning 380 grams. Why this happened? Because when they bought fixed quantity, when the prices was 4,000 rupees, they only invested 4,000 rupees. But when you buy a fixed amount, say 19,000 in this case, when the prices was 4,000, you invested 19,000 rupees. So instead of 10 grams, you end up acquiring almost 50 grams. So your average cost come down. So in any asset category, which is little volatile, buying fixed amount will always bring your cost down rather than buying fixed quantity.
So that's a very powerful concept. The second concept that we should talk about is the power of compounding, which comes through, especially when you're using the SIP route. And the longer you hold it, the better it is. And this is also an illustration that you shared with me. It is something that starts with an investment or an SIP that you take through for the next 20 years. Now, take me through some of these figures here. You're talking about a 5,000 rupee SIP. So in the first year, you've invested about 60,000 rupees. The gain is 4,773 rupees. So in your illustration, in the first year, Vijay, you're talking about a gain of 7% with an internal rate of return, XIRR, of 15%. And for those people that are not familiar with XIRR, you're talking about the fact that in the first month, you're only putting 5,000 rupees. You may not get a 15% on the entire portfolio, right? So even if something is given you on a blended basis over the course of that investment, over that 12 months, it's given you 15% IRR. You've ended up with a gain of about 7% on the principal investment that you've made. But Vijay, over the course of several years after that, particularly after the 10th year, there's a very magical shift that happens, right?
So you're absolutely right. When we say X IRR, the meaning of, suppose you did 12-month SIP, then first tranche earn you 15% for 12 months, the second tranche for 11 months, third for 10th month, and the last for 1 month only. So we call it X IRR. And that's why, so suppose you did SIP for 1 year of 5,000 rupees per month, you invested 60,000 rupees. For a 3 year, you invested 1,80,000 rupees. For 5 years, you invested 3 lakh rupees. And for 7 years, you invested 4,20,000 rupees. Now at the 15% X IRR, after 1 year, your portfolio has gone up from 60,000 to 64,000. 60,000 is your cost. 64,773 is your portfolio value. In this portfolio value, 60,000 rupees your principal amount and 4,773 is the gain amount. So gain as a percentage of your total portfolio after 1 year is just 7%. If you look at 3 year, at the end of 3 year, you invested 1,80,000. The portfolio value is more than 2,24,000 rupees. The gap is 44,000 rupees. That is gain. And now that gain is 20% of total portfolio value of 2,24,000. At the end of 5th year, you invested 3 lakh rupees. The value of the portfolio is 4,23,000. So gain is 1 lakh. Portfolio value is 4,36,000. The gain is 1,36,000. Now this 1,36,000 is 31% of 4,36,000. And if you look at 7-year period, you invested 4,20,000. The value of the portfolio is 7,17,000 approximately. The gain is 2,96,000 rupees. And the gain now represents 41% of your total portfolio. That is the number you are seeing on your screen. But suppose you go for a 10th, 15th, 20th year, then what we see, the gain component. So here, just look at this slide. If you look at this slide, at the end of 10 year, the gain is 54%, principal is 46%. At the end of 15th year, the gain is 71%, principal is 29 year. And if you look at end of 20th year, the gain is now 82% of the total portfolio value and principal is only 18%. But this gain amount remain only 7% for 1 year, 20% for 3 year, for 31% for 5 year, and 41% for a 7-year period. But beyond 7 years, the gain become bigger and bigger component of your total portfolio. So after 10 years, gain is more than 50%, 54% at the 10th year, 15th year has become 71%, 20th year is become 82%, and 25th year, it actually become 89%. So this slide, again, you see the yellow part is your principal and the red part or the pink part is your gain. In 1 year, 93:7 ratio. 3 year, 80% principal, 20% gain. 3rd year, 69% principal amount, 31% is the gain amount. 7th year, 59% is the principal amount, 41% is the gain amount. Moment you cross 15 year plus, the gain become higher and higher. Suppose you look at 10-year period, if you look at 20-year period, in 20-year period, gain become 82% of the portfolio. So this is the magic of SIP where the longer you go, you allow power of compounding to kick in. And because of power of compounding, money invested, interest create interest, the gain create gain for you, further gain for you. That's why the component of gain increases in the portfolio.
Your money starts working for you, which is a very powerful concept, and it is the core principle of compounding as well. Let's talk about another aspect, and this is the third topic that I wanted to take with you, Vijay, which has to do with the interest, the retail interest in thematic and sectoral funds. And there's quite a bit of that. It's now the largest category in the actively managed space. But let's talk about what you should ask before you invest in some of these, because ultimately what sometimes happens, or actually I should say more often than not happens, if you put money in certain sectoral schemes, what happens is that a large chunk of your money gets locked in just a few stocks. We're talking about 2 or 3 stocks that account for 20+%, 30% of the portfolio. So there is no advantage to that. Sometimes, of course, you can have outsized returns, but more often than not, there is a concentration risk and you can lose. So therefore, what questions should you ask before you invest in a sectoral or thematic fund?
So whenever a fund house or anybody who's position you a sectoral or thematic fund, first of all, there has to be gap difference between sectoral and thematic fund. But let's, for the argument's sake, keep it the same. The moment someone tells you that a fund house comes and tell you that we are very positive on a particular sector, for instance, we are very positive on defense sector or power sector or any particular sector. A simple thing to be asked from the fund house, if you are so convinced about, let's say, defense sector, then how much overweight your existing scheme carry in those particular themes or particular sector? That will tell you a full story. For instance, if somebody tells you that we are very bullish on power sector, we are very bullish on digital sector, then ask them in your existing mutual fund scheme, be it large cap, flexi cap, mid cap, small cap, or whatever you call it, how much is the weightage of that particular sector? For instance, if defense weightage is at 2%, then does your portfolio manager own 5%, 6%, 10% in the portfolio? Is he ever overweight, and how much overweight? If you don't get that answer, then it is very clear that is asset gathering exercise rather than a deep conviction idea which has been communicated to the investor.
The other aspect that I wanted to talk about with you is the new fund offers. And a lot of people, and this is, I guess, to a certain extent, the fault of the advertisers also, because you talk about that 10 rupee NAV, the net asset value, which is essentially the cost per unit. And a lot of people get drawn into it thinking that they are able to pick up something at a discount. And I've tried, Vijay, to compare this with an auto manufacturer, a car manufacturer. When you go to the showroom, the salesperson will always show you the newest car. You can, of course, buy something at an attractive entry price, but that is not the case for a mutual fund unit, where a mutual fund is a manufacturer of financial products, but ultimately what they're buying is a State Bank of India, is an ICICI Bank, and just because you have an NFO, you're not going to get that at a discount.
You are absolutely right, Alex, and it is just not the question of the car analogy. Actually, in mutual fund is much worse, because once you bought a car, you can't change the car. But as far as new car is concerned, they come with new features. But something, in mutual fund, existing scheme can have same kind of stock. So if you are looking at buying an NFO, don't buy just because it is available at 10 rupees. 10 rupees NAV just reflect the value of underlying portfolio. Suppose your fund, which is a 10 rupees NAV or 100 rupees NAV or 1000 rupees NAV. And suppose you invest in all three funds, and all three fund increases their value, say their NAV growth after 1 year is 20%. So 10 rupees NAV fund will become 12 rupees after 1 year. 100 rupees fund will become 120. 1000 rupees NAV fund will become 1200 rupees. So it is not that the 10 rupees fund will add 200 rupees to the value, not at all. If all three funds are run identical, then the growth in all three funds will come identical. So valuation growth, portfolio growth will happen similarly. So suppose you invested 1 lakh rupees in a 10 rupees NAV fund, 1 lakh rupees in a 100 rupees NAV fund, 1 lakh rupees in a 1000 NAV fund, and all these funds, for argument's sake, say they generate 20% return over the next 1 year. Then what happens? Your 1 lakh in all three categories, the NAV 10 to 12, 100 to 120, 1000 to 1200 rupees. But as far as your portfolio is concerned, your 1 lakh has become 1,20,000 in all three cases. So since it is available at 10 rupees NAV, have absolutely no meaning. Don't buy NFO just because it is available at 10 rupees NAV.
And very well put. Thanks so much for clarifying that. There's one more aspect, and I found it very interesting when we were talking about what we could speak about today, Vijay. You mentioned that before you invest in the NFO, if you are to invest in an NFO of in an equity mutual fund, you should look at the balanced advantage fund of that same fund house. Why is that?
So I found very interesting when you listen to a fund manager or the team, and when you ask them what is allocation in balanced advantage fund, because that is a fund in which the fund manager have a discretion to move equity up and down based on what they believe is the right valuation and where they're going to make more money, or where there's a possibility of capital protection. If in the opinion of fund manager, the valuation is stretched, then they normally have a lower allocation of equity in balanced advantage fund, and they see great opportunity in the market, they naturally increase allocation in balanced advantage fund. But I found sometimes very ironical or very funny is that a fund house have a lower and lower allocation in balanced advantage fund and continue to come out with NFOs. So there is something amiss in the whole process. Why you're raising money in NFO? Because you believe that you could invest investors' money and generate return. If that is the case, then why you haven't completely exhausted the upper equity limit which you set yourself? So your balanced advantage fund can go up to 80% in equity. Right now it is in 30% in equity. And then you're coming with the NFO. So I found little challenging. So again, it shows that perhaps it is more of a asset gathering exercise than anything else.
Yeah, you couldn't have said it better, Vijay. Thanks so much for joining in, for giving us the perspective that you did. I think that this can be a primer to anybody that is looking to invest in the mutual fund space. All right, and that brings us to the end of this particular edition of the Mutual Fund Show. We weren't able to take any questions today, but we normally do. So don't forget to send us questions on the WhatsApp number that has been playing at the bottom of your screen. Do stay tuned. Lots more coming up on NDTV Profit.
NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
whole day passes like a blur. The news just whizzes past. The innovators.
Thanks for that, Agam. Let's quickly look at where the Nifty is. Around 0.5% higher, so 24,311 is where we are at. The Nifty Bank, of course, one of the factors which has aided the Nifty 50, 1/3% higher on the Nifty Bank. Mind you, absolutely flat. In fact, a bit negative. We can pull up the chart, intraday chart for the Nifty Bank. What you're seeing is some bit of recovery which has come through, and we're now around 1/3% or thereabouts higher. So clearly positive cues coming through. Let's pull up the contributors, get more context on which are the top contributors on the Nifty. HDFC Bank up 1% or so, clearly going to drive the Nifty on a day like this, right? But then you have the Adani names really coming to the fore. Adani Ports, Adani Enterprises, both of them contributing significantly in terms of points contribution on the Nifty. You're also seeing NTPC doing quite a bit in that sense. Of course, Adani Ports, Adani Enterprises, significant in the sense that you've got them, given their weightage, the kind of numbers they're adding on the Nifty is definitely significant. 10% higher on Adani Enterprises, 7% on ports. So some bit of positivity there. And then you've got NTPC green listing, definitely aiding that particular counter as well. Let's pull up sectoral heat map as well, try and zoom in, see which sectors are doing well. The Nifty Auto has been on the front foot since the morning, 2/3% higher on that one. The Nifty FMCG has reversed, 1/3% higher on the Nifty IT as well. The Nifty Metals doing fairly well. The only one possibly sulking is the Nifty Pharma. The Nifty Realty seeing some bit of consolidation cool off after really hitting it out of the park over the last 3 to 4 trading sessions. 0.5% lower on the Nifty Realty. But that's how essentially it's playing out on markets. Agam?
Yes. Harsh, you mentioned that we are looking at gains coming through, and on in general, even in terms of broader markets. Let's pull up the mid cap and the small cap indices and see how things are faring there, because we are looking at a 0.5% up move there, and mostly moving in tandem with the benchmarks. The small cap index has continued to show strength vis-a-vis the Nifty 50 and the Bank Nifty. And there are plenty of counters out there which are actually doing well. Can we take a look at the advanced decline ratio while we also pull up how things are faring when it comes to the broader markets? Okay, so here you have it. This is what you have in terms of your advanced decline ratio. We're looking at 3 gainers for maybe a little over one loser. So the market breadth continues to be strong at the moment. And again, pros in general that we're looking at right now, Harsh.
Right. Interesting, because we have a management placed today. We have Shikhar Agarwal, chairman of BLS E-Services, to come talk to us about their latest acquisition. It's, of course, a sports management company that you've acquired, Mr. Agarwal. Talk us through, one, the rationale and what this adds to your bouquet.
Hi. In fact, actually, I think yesterday the acquisition that we have announced is a loan distribution company. So the company that we've acquired is called RD Phyllis Loan Solutions. This company we acquired at an enterprise value of 190 crores, and we took a 57% ownership of this company, wherein we paid 78 crores. 25 crore was primary infusion into the company. Other money will be paid. The entire valuation, 123 crore, will be paid depending on certain targets this financial year and next financial year. So this company has a very interesting model. They are into loan distribution. They process around 1,500 crores of loans every month. They have a network of more than 8,000 partners across India, wherein they source loans on behalf of banks and FIs and distribute those. And this company had a revenue of around 600 crores last year and an EBITDA of 20 crores. This year, definitely it is poised to grow. BLS e-services already has a network of 1 lakh plus touch points across India. So we want to utilize our footfall of 7 lakh people to cross and upsell these loan products. So we definitely feel there will be a major upside for us, by this acquisition.
Point taken. You've acquired 57% of this company, Mr. Agarwal. So couple of questions here. First off, apologies on getting the sector wrong. But let me first off ask you on top line. So at 600 crore, where does the top line go from here? And at around 20 to 25 crore kind of EBITDA, if I heard that right, where does the margin number go as you grow over the next 2 to 3 years and scale this business?
See, this business, if you see last 3 years, 2-3 years before they were doing 250 crores of revenue. Last year they did, last year they did 530 crores, and last year they closed at 630 crores of revenue. This year we expect certain growth. EBITDA conventionally, if you see EBITDA margins, BLS e-services, we do 15% EBITDA margin. This company, since it's a volume business, loan aggregation business, the margins are lesser. They did 20 crore EBITDA, but with our network, of 1 lakh touch points, they're currently only in 8,600 touch points across India, where this has become one of the largest loan distribution companies in India. We are thinking that we can really help grow this company. BLS e-services last year did 30 crores of EBITDA, and then we did 45 crores. These last quarter itself, we did 14 crores. So we've seen major growth coming in. Now, when these numbers get combined, we'll get full quarter of, next full quarter, we'll get in the consolidation. And also next year, we see good growth coming in. So we feel that we can grow both BLS e-services and RD Phyllis Loan Solutions through our network.
It's actually very interesting here, but if you could also give us an idea about BLS e-services specifically going forward, the kind of traction that you're seeing in the second half of this financial year, what you're expecting, and how do the subsequent quarters look like as well?
If you see a growth in a consolidated level, BLS International, we have grown 70% in terms of EBITDA in the last quarter. BLS e-services has also grown, in terms of EBITDA by more than 20-30%. Now we are now increasing our presence across India. We have tied up with multiple newer banks. Bank of SBI was our major anchor bank. Then we started working with many other banks. Our reach has increased. So we feel the revenue and profitability from those services have started to come. Even private sector banks like HDFC, Axis banks have started to work with us. So we feel BLS e-services can sustain the growth momentum. And on top of that, this acquisition will definitely add fuel to the numbers.
Right, Shikhar. So where should the growth take your top line? I'm talking maybe the current entity itself. The acquired 57% will obviously add to your top line. So just trying to understand, get context.
I think definitely minimum growth that we are targeting is upwards of 20% in terms of top line and EBITDA growth that we do year on year, in BLS e-services. But BLS International, we've achieved much more. So I think this company is also a new company. We started 5 years back. This got listed this year itself in January. So right now we're in the consolidation phase. So I feel that we can easily achieve 15-20% growth in terms of revenue and margins. And on top of that, the numbers that come in from this company will be further, to the numbers that we achieve.
Point taken. You suggested that margins are getting better, and you just told us that 20% growth on margins. So I want to try and understand, are margins expected to get better as you scale on a 20% growth base, or have margins now flattened? Will they flatten at the mid-teen kind of level? Is that how one can expect it to be?
See, on a consolidated level, our margins have become 33% now, EBITDA margins, if you consolidate services and international. E-services, since it's a India-centric business, wherein you get paid in INR currency and it's a low ticket value, it's based on volumes. So definitely margins have been lower. We've been generating 15% margins. Now this company that we've acquired is a bigger volume base. Margins are slightly lower in this, but I think on the long term, we want to maintain the margins that we've achieved. As in BLS International, it took us a couple of years to grow the margin to upwards of 30% level. We feel even in BLS e-services, right now 15%, we want to consolidate, in the short term, and then in the long term, definitely grow the margins.
So how much will that grow by? Sorry, Mr. Agarwal, if I'm getting this wrong.
See, BLS International, we have grown to 30%
Yes.
margin, where we are paid in dollars, pounds, etc.
Right.
This business, conventionally last 5 years, we were at 12%, 13%. We have reached at 15% EBITDA margins now. So definitely, and the company that we have acquired is at a little lower margin than what 15% we have. So I feel in the short term, probably margins can take a hit, but the profitability and revenue will grow. But in the long term, we want to maintain the 15% EBITDA margins.
Got it. And where does the 20% growth come from? Does it come more from government? Where are you trying to focus in with regard to your revenue growth? What segment?
See, BLS e-services divided into multiple segments. Banking correspondent is where we work with banks, and governments is where we work with a lot of state governments for outsourcing work. So I feel that we are looking at growth in both the segments, wherein we are now increased our reach with different banks. More services have been added. We have given bigger reach. Banks now have consolidated. SBI has also given a kind of a verbal instruction that they want to work only with a handful of companies. They want to consolidate the market. I think that will play to our advantage. Even from an e-governance side, we've started working in the state of Gujarat, West Bengal, on top of UP, etc. So I feel growth will come from all the factors combined.
Okay, thank you so much, Mr. Agarwal. Real pleasure speaking to you as always, and wishing you all the very best for H2.
Thank you so much.
Right. So that's BLS e-services, of course. They've made an acquisition, and the kind of business where they're going to leverage on the current branch network to kind of sell financial services as well. So broadly loans. But a percent higher on that one, no real impact. Let me bring on board Sudeep Bandyopadhyay. Now, Chairman IndiTrade Capital, as well as Brijesh L, who's Retail Research at IDBI Cap. Brijesh, let me come to you first. Try and give us a view on what's happening, because we've seen a very good rally where the market is concerned. We've had a great day of trade. It was soft at the start, but we've really picked and got good traction as we're building towards close.
Yeah, hi, good afternoon. So basically, if you're looking at the view from the directional point of view, I believe we are going to see some further positive momentum. So as you said, like at the start of the day, 24,200 was a trigger where a lot of call writers were active. So as and when 24,200 got moved higher, that immediate 100 points of recovery was seen in the Nifty cash. So my understanding is that tomorrow being the monthly expiry, we might see some laggards at this point. But then directionally, I am sensing that 24,700, which is the almost the 50 SMA level, should be the next leg of upside for the Nifty. On the downside, 24,000 is the support level. Same if you're looking for the Bank Nifty today we are having the monthly expiry, and 52,300 is one where again the put writers are active. So those level is likely to be respected. And sooner or later, Bank Nifty should rally towards the 53,000. As and when we see a very strong close above 53,000, then that is going to act a very strong range breakout. So 53 was the multiple resistance zone over the last couple of trading sessions. Once 53 is taken out, which I do believe sooner or later it will be taken out, because most of the heavyweight stocks like HDFC Bank, Axis, ICICI are looking very strong on charts, and I believe this would lead to further positive momentum in the Bank Nifty as well. So bias is strictly positive. Even today, by any chance, in Nifty there is some 30-40 points of odd correction is there, one can take that long bet and for tomorrow's series itself, and we can play the positive bets.
Okay, Sudeep, good afternoon to you as well. We're looking at a resurgence of sorts in the information technology sector. How are you looking at trends here, and what's the way forward?
In fact, I've been maintaining for quite some time that technology is one sector which will see a lot of upside. I think probably we have seen the worst of it. US economy is strong, and it's expected to remain strong. And remember, most of the IT companies, at least the leading IT companies in India, derive a large part of their income from US. When US slows down, they have a problem. And when US is strong, they generally gain market and their income goes up, margins go up. So that's the scenario I'm looking at it for the future. There will be some disruptions because of Mr. Trump coming as president regarding the visas and other things. But I think Indian IT companies have managed that and navigated that earlier, and they will pretty much navigate this time as well. But the business upside momentum will help them in a big way. Now, amongst IT companies, I would say one should focus on companies which have a strong base in US and a strong probability of gaining market share. Some of the segments which will benefit more is definitely financial services. That's one segment which will benefit more than proportionately. So companies having significant presence in US financial services should benefit. So one can look at Infosys, one can look at, of course, the traditional large Indian IT biggies like TCS, Infosys, even Wipro. So I think all these companies from a medium to long-term point of view can be looked at from an investor's point of view.
Okay. Brijesh, come in on stock picks that you have at the moment.
So it's basically the from the F&O space, I think the PVR right now is giving a very strong breakout. So I think PVR can be bought at the current price. The stop loss for the PVR would be 1478, and I'm looking for 1550 as the immediate, maybe a 1 or 2 day kind of a trade setup. But then 1550 would be the price target for the PVR INOX. Second one is the AB Capital, which is extremely positive. So at the level of 200, the positions, the longs have been added. So I think one should go long in AB Capital. The stop loss would be 191. From the trading perspective, 200 would be the immediate target.
All right, let's move on and talk about a handful of other aspects here. I want to actually bring up Adani Enterprises. This is, of course, the Nifty 50 top gainer, but I actually want to point out that it's just a moment ago, it hit the mark of 2,400 rupees a share. And the reason why this is important is because tomorrow is the expiry. Tomorrow is the monthly expiry. And there were a significant amount of calls written around the 23,000 mark. Now, not only have those calls been forced to unwind, but we are now starting to see traction around the 24,000 mark, which only further exacerbates the up move currently. In fact, I would perhaps classify this as a short squeeze, because that's exactly what's going on. While you have longs building into Adani Enterprises right now, you are also seeing a lot of your older shorts being squeezed out of the system, being forced out completely. And that's also one of the key reasons behind that very sharp up move that we've seen on an intraday basis of nearly 11%. And it's not every day that you see a Nifty 50 company advance by around 11%. Of course, Adani Enterprises in general has been volatile, but look at the kind of change that you're seeing in the market cap today. In fact, it's gained about 26,000 crores only today itself. So, and we're looking at a substantial recovery in Adani Ports too. So let's pull that up as well. Not to the tune of the up move that we've seen in, Enterprises, but Adani Ports as well is up around 6% at the moment, also gaining about 15,500 crores in market capitalization. So these are just some of the names that you can keep an eye on. But Sudeep, if I can actually get your opinion in on the Adani Group as well, how are you looking at things here?
Well, at every dip, Adani Ports, Gujarat Ambuja and ACC is worth buying. And I have been maintaining this view when the Hindenburg controversy hit Adani Group, and I have maintained my same view even now. As far as the other group companies are concerned, as far as from an investment point of view, they're too volatile at this stage. So I will advise investors to wait and watch. There's no point getting into this. This is a trader's market as far as the other scripts are concerned. And I'm sure traders are, as you were explaining, they are making merry by either taking a position for or against, and all kind of things are happening. But as far as port is concerned, I'm very bullish. And I believe that long-term investors should have it in their portfolio. Same goes for Gujarat Ambuja and ACC.
Okay, well, let's move on and talk about the next stock which is in focus, and that is Aster DM. In fact, this one has also jumped by nearly 7% right now. As you can see, about 7.5% gains that we are seeing right now. And even as it moves higher, it's set to acquire additional equity shares in Prerna Hospital. And Varsha now joins us with more details. Varsha, over to you.
Thanks, Agam. So yes, company is going to acquire additional stake. So they're going to increase their stake to 100% from 87% currently, and the transaction will be executed in 2 tranches. Now, a lot of hospital companies are actually going into brownfield capex rather than greenfield capex, because that saves when it saves on the capex, and the growth is actually higher. This is one of the reasons that Aster is also doing. So basically, they are expanding through brownfield capex. Now, if I were to talk about Prerna Hospital, so they offer 254 beds and is present in over 25 specialities. The turnover for Prerna Hospitals in FY24 was around 120 crore. Now, if I were to talk about what is way ahead for Aster DM as a whole, so their Aster Women and Children Hospital in Hyderabad is expected to complete by FY26, and the total capacity to reach 6,800 beds by FY27, and they're expecting a growth of 18 to 20% when it comes to India business, with EBITDA margin of 24 to 25% in next 4 years, from FY25 to FY29. And this growth will actually be driven by higher occupancy and capacity expansion that the Aster is aiming at. And also lastly, the average revenue per occupied bed, which is the main thing when it comes to hospital, the growth projected over there is 7 to 8% over the next 3 to 4 years.
Okay, Brijesh, let me come to you on this one. Something like an Aster, 7.5% move today. Would you at all, would it be part of your list? And if so, on what side of the trade would you sit?
Yeah, actually we had, it's not today, but on the 24th of October, when there was a good volume record, we had this on the list, and we were speaking about 530 levels on the higher side. So eventually the stock has today, it has started to move. And with this 472 level, I believe another 50 odd points of move is there. It's again a kind of opportunity, and somebody wants to take the long bet. One has to wait for some kind of a decline. 450 would be the level where again the re-entry can be made, because somewhere this 530, 550 would be the technical target is what I look at it.
Sudeep, anything within this healthcare or in the larger pharma, even your the lab testing basket, would any of the stocks feature for you there at this point?
Well, definitely, it's a very interesting space, and there are a lot of things happening. Look at the number of deals which is happening in this space, which was unheard of a few years back. I think every week you have new deals happening. So this place is definitely hot. Somehow I feel that the lab testing space is a bit too competitive, and margins are and will continue to be under pressure. So I will avoid that. As far as hospitals are concerned, I'm definitely positive, and the leader of the pack, Apollo, continues to my best pick. I would still recommend a long-term investment in Apollo. All the verticals have started doing good. Even the online medicine delivery business has started doing good. So overall, I think Apollo is definitely a good buy. One can look at Max Healthcare as well. I think that is also looking good at current level. Vedanta, to my mind, with the expansion in eastern part of India, does look good. So any of these, from a long-term investor's point of view, can be looked at and bought.
Right. Well, okay. So that's the view on the healthcare space. Let's talk about HDFC Bank. Of course, because of the fact that it usually is the top contributor to the Nifty 50, it's up around 1%. So even that 1% today would mean quite a bit, considering its a huge market cap. But, HDFC Bank is also at a lifetime high. At least we were talking about this yesterday on an intraday basis. It did hit a life high yesterday. I reckon that it has, in fact, today too, about 1,800 rupees per share. And let's actually take a technical view here. Brijesh, what's your view on HDFC Bank? I know that this is a relatively slower moving counter, also a lot of hands involved. Still, technically, how are things looking here?
See, technically, definitely it is moving higher and it's about to give a fresh leg of rally. So more than technically, what I've been observing for the last two trading sessions, this 1800 level, there are a lot of call writers who were exited their short position. And if you look at the December series and on an immediate basis, 1850 and 1900, suddenly there is a fresh longs has been added on the call side. So I'm pretty confident that this, when I said in the early that the bank nifty is about to give a breakout above 53,000 level, so HDFC would definitely contribute to those rally. And I believe HDFC is poised for 1850 purely from the derivatives point of view, because at 1850 good amount of longs are added, and I think that should be the move which we should be expecting.
Okay, yeah, with that, we shift our focus to Talbros Auto, and the stock has surged over 11% after securing a multi-year order worth 470 crores. And Puneet now joins us to give us more details. Puneet.
Well, thanks for that. It's a very interesting company, auto component company. Now, as you rightly said, the key trigger today is a very big order win that they've got 475 crores. Roughly 245 crores is coming from its traditional business of, heat shield segment. And that's, of course, coming from multiple OEM and car companies. They've also received an export order of 145 crores, while they've also had a 75 crores order coming in specifically from the EV segment. Now, why is this 475 crore order win, very important is because this is roughly 60% of the total revenue of about FY24, which was about 780 odd crores. And this is in addition to the 1,000 crores of orders they got back in April of 2024. So it's definitely, next revenue potential for the next couple of years very strong. In Q2 specifically, the company recorded a 12% revenue growth of about 220 odd crores. Margins was also very strong at 130 basis point up, coming at almost 17% in this particular quarter, while net profit was up 17% at 23 odd crores. Now, there is, very lean brokerage coverage on the stock, but Anand Rathi has a target price of 450 rupees per share, which is still, an upside of 33% even from the current levels as well. And what's important is, as I mentioned, that for FY24, they did about 778 crores of revenue. By FY27, they're anticipating this to jump almost 3 times to roughly about 2,200 odd crores. So keep the stock on your radar, multiple order wins going forward as well, and a stronger export picture and an EV picture is something that the company has mentioned in its, investor presentation and, messages to analysts as well. So definitely a stock to keep on your radar in the auto component space.
All right, but let's also talk about Honda, which has announced the launch of electric version of its best-selling scooter, the Activa. On the sidelines of the event, my colleague Harpriya caught up with the CEO and Managing Director of Honda Motorcycle India, where he spoke about their aim to capture 29% of market share in the long term. Listen in.
Today is a challenging day for Honda. So because other Indian OEM already many launches electric vehicle. So Honda now just a little delay, but anyway we will try to start business in electric vehicle.
Sir, the competitive landscape in India for the EV vehicles has been heating up now. There are multiple players, even the legacy players have entered. What kind of market share are you trying to acquire? What does your plan, say, for the next 1 to 2 years look like? What's the kind of market presence you're looking at?
Next year target is unclear, but current-wise, Honda ICE share is around 29%. So means similar, our target is try to achieve similar target. This is our challenging target, but not talking about not next years. Finally, is similar, same share.
All right, Sudeep, I also want your view on the auto sector. And from what I can make out is that we're getting cues which are very, very mixed. You have some of these names which, while they have given you great volumes, numbers over the past few months, they're for some reason indicating not a very exciting outlook. On the other hand, you have the other end, which is actually also looking to put out more and more launches. So how are you placed here, and what do you like, and where do you think there could be more traction going forward? Will it be the two-wheeler space, the four-wheeler space? Will it be commercial vehicles, passenger vehicles? What is your assessment of the auto sector right now?
Well, I think if I look at the entire space, I like auto ancillaries, very honestly. And I'll explain that in a minute. But beyond that, if I look at pure auto, I think I don't like at this stage the passenger vehicle companies. There are challenges in demand, and that is getting reflected in both their numbers as well as the commentary. The second is there is a destabilization happening through launch of EVs. So, who will stand where post the EV market matures is very difficult to predict. Now, one segment which is doing very well is the SUVs, and we expect tractors also to pick up and start doing well. So M&M definitely looks good. The valuation is not cheap, but from a long-term point of view, M&M even now does look good on the back of new SUV launches as well as the pickup in tractor sales. As far as commercial vehicles are concerned, again, I would not like to venture there. As far as overall scenario is concerned, we like ancillaries, predominantly on the back of the fact that whether ICE engine wins or EV wins or it's a mix, it doesn't matter. Ancillaries play a major role. And some of the auto and companies of India are now global in nature. They supply to global OEMs and have a fantastic product basket. So which I think per vehicle, their component or their contribution is continuously increasing. So we should focus on this auto ancillary space for structural long-term gain as far as auto sector is concerned, from an investor's point of view.
Okay, all right. Brijesh, you want to come in on something like Maruti Suzuki? How are you looking at this one? Because that's clearly the leader in the PV space right now. What are the technicals telling you?
So eventually the charts are looking positive, and even if we look from the data point of view, this data is also suggesting a long build-up. So I believe this closer to 11,200 is what would be the immediate trade for the Maruti, and the structure is extremely positive. I think that upmove should follow in this, and I think again the auto numbers will be seen by the end of this month. So being the Diwali season which we left over, so numbers should be slightly positive, and there would be some trading bounce in all the auto space is what we are looking into. So another 200 points of move can be seen in the Maruti.
Okay, well, Brijesh, on that note, thanking you for joining us and taking us through your views on the markets. With that, we also slip into a short break, but on the other side, plenty more lined up in the final hour of trade. Stay tuned to NDTV Profit.
Of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers